Hello everyone, good evening, good morning, good afternoon to all of you. Welcome once again to this live session. स्टार्ट करते हैं आज का सेशन। फिलहाल देखो ये 12:30 हो चुका है। लंदन सेशन ऑलरेडी ओपन है। 5:30 न्यूयॉर्क सेशन की ओपनिंग होगी। 7 पीएम पे आज यूएस मार्केट ओपन होगा। कल बंद था, यूएस मार्केट क्लोज था लेबर डे की वजह से। बाकी 7:30 पे एक डेटा है मैन्युफैक्चरिंग पीएमआई और मैन्युफैक्चरिंग प्राइस का। आईएसएम मैन्युफैक्चरिंग प्राइस का ये गोल्ड और सिल्वर के प्राइस को मेनली इंपैक्ट करता है। आज क्रूड ऑयल की इन्वेंट्री नहीं है, कल आएगी दोनों ही, क्रूड ऑयल और नेचुरल गैस की इन्वेंट्री। बाकी प्रेसिडेंट ट्रम्प आज बोलने वाले हैं कुछ, लेट्स सी वहाँ से क्या इंपैक्ट निकल के आता है। फिलहाल देखोगे नेचुरल गैस कल काफ़ी अच्छा एक सेल ऑफ आया था, उसके बाद एक बाइंग का ट्रेड बनाया था मार्केट, वहीं पर कल क्लोज हो गया था। एग्जैक्टली आज देखोगे वहीं पर ओपन हुआ मॉर्निंग पे एंड हल्का सा नीचे आया, वहाँ से एक बाइंग हुई थी, थोड़ा बहुत मोमेंटम किया था। लेट्स सी अभी जाता है नहीं जाता है, ऊपर चला गया तो वेल एंड गुड, नहीं तो अब दोबारा बाई मत करना यहाँ से। नीचे जो हमारा सपोर्ट एरिया है वहीं बाइंग का प्लान करेंगे। क्रूड ऑयल थोड़ा सा ऊपर आता है रेजिस्टेंस एरिया के अराउंड। कल हम एक्सपेक्ट कर रहे थे ऊपर आएगा, ना ऊपर आया ना नीचे आया, साइडवेज चला गया था। आज फ्लैट ओपन हुआ, हल्का फुल्का जा रहा है ऊपर की ओर, तो ऊपर जाता है तो वो लगभग 5785 के आसपास एक सेलिंग का प्लान ट्राई करेंगे। ठीक है, कल के लेवल है, कोई खास चेंज नहीं हुआ है। कोई क्वेश्चन रहेगा तो कमेंट बॉक्स में पूछ लेना। दिस इज अ लेवल, लेट्स सी एक मार्केट कितना यहाँ पर और मूव करता है। इसको थोड़ा सा ना और क्लियर कर देते हैं, एक सेकेंड। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम। इंडियन मार्केट को देखोगे थोड़ा सा रेंज के अंदर ही है, कोई ट्रेंडिंग मार्केट नहीं चल रहा है कल परसों से। 15 मिनट में एक छोटी छोटी रेंज बना के रोज बैठ जा रहा है। ठीक है, एक सेकेंड, इसको थोड़ा सा क्लियर कर देते हैं ये। मैंने बताया था ऊपर एसएल थोड़ा सा बड़ा बन रहा है, तो कोशिश करना कि उस एसएल को थोड़ा सा छोटा ही रखें। ये एक छोटा सा ट्रेड यहाँ पर प्लान रहेगा क्रूड ऑयल में। बाकी वैसे गोल्ड को देखोगे, गोल्ड भी ऑल टाइम हाई चला गया, फैट के रेट कट के वजह से ऑलमोस्ट। बाकी क्रूड ऑयल का टारगेट सा रखा तो ये है 1:4 के अराउंड, 1:3, 1:4, बट ये थोड़ा बहुत ये ब्लू कलर की लाइन के आसपास भी जब गिरेगा तो यहाँ पर थोड़ा बहुत रुकना चाहिए। गेल में क्या जानना चाह रहे हो, स्टॉक की बात कर रहे हो? इंट्राडे या फिर कोई स्विंग या पोजिशनल ट्रेड? इंडिया को देखोगे, स्टॉक की अगर बात करें, गेल मॉर्निंग पे ओपन होती है मोमेंटम के साथ अपसाइड गया था, एंड फिलहाल के लिए तो बिल्कुल साइडवेज है। स्टार्टिंग की 3 कैंडल कंटिन्यूसली पॉजिटिव, उसके बाद बिल्कुल साइडवेज। लग तो नहीं रहा है थोड़ी बहुत प्रॉफिट बुकिंग में आ जाए तो बेटर है। लेट्स सी, रेजिस्टेंस देख लेते हैं, ऊपर कोई रेजिस्टेंस है या फिर सिर्फ कंसोलिडेशन ही कर रहा है। क्योंकि रेजिस्टेंस होगा तभी सेल करना बेटर है, नहीं तो कंसोलिडेशन के बाद ब्रेकआउट पे जा सकता है। तो थोड़ा सा ऊपर आता है ना इसमें, गेल की अगर मैं बात करूं, मैं स्टॉक की बात कर रहा हूँ, फ्यूचर की बात नहीं कर रहा हूँ। तो इसमें एक लेट्स सी, 180। थोड़ा सा ऊपर आता है तो इसमें एक सेलिंग का प्लान कर सकते हैं यहाँ पर। 180.77 से 180.43 रेजिस्टेंस पर ही है ये। थोड़ा सा एग्जैक्टली रेजिस्टेंस को हिट नहीं कर रहा है। थोड़ा सा ऊपर आता है तो रेजिस्टेंस है। एक बार वहां से सेलिंग आई है फिलहाल के लिए बस, तो दूसरी बार ही आ रहा है। तो मुझे लगता है इस बार भी थोड़ा बहुत सेलिंग में आना चाहिए। ओपन इक्वल टू लो ना बने कैंडल, तो एक थोड़ा सा सेलिंग का प्लान यहाँ पर रख सकते हैं। गेल 15 मिनट की बात कर रहा हूँ स्टॉक में। बाकी नीचे सपोर्ट की बात करेंगे तो कोई रीटेस्ट है इसमें पेंडिंग। जिस तरह से ब्रेकआउट हुआ है नीचे, एक रीटेस्ट पेंडिंग है, तो मुझे लग रहा है वहां पर रुकेगा थोड़ा बहुत। एक रेजिस्टेंस था उसका ब्रेकआउट भी हुआ है, तो इस रीटेस्ट को प्ले आउट कर सकते हो, नीचे आएगा बाइंग के लिए फिर से। 170 कितना है लेवल। वन सेवेंटी सिक्स 177 के आसपास एक बाइंग का प्लान रखना वापस, क्योंकि वही एक रेजिस्टेंस था, ब्रेकआउट हुआ मॉर्निंग पे। नाउ इट इज एक्ट लाइक एज अ रेजिस्टेंस। वो कैंडल भी ओपन इक्वल टू लो बनी थी कि नहीं, कैंडल तो नॉर्मल थी। तो यहाँ पर रेजिस्टेंस है गेल में। जब तक ये ब्रेकआउट नहीं होता 181.50 के ऊपर 15 मिनट में, तब तक ये रेजिस्टेंस पे रहेगा। अब देखो सेलिंग आती है तो यहीं से आज। 15 मिनट का चार्ट है, ध्यान रखना मार्केट काफ़ी देर से साइडवेज है। बाकी नीचे आना तो पड़ेगा इसको रिटेस्ट करने के लिए, तो ये रिटेस्ट जोन काफ़ी अच्छा है। ब्रेकआउट हो चुका है रेजिस्टेंस का, तो एक रिटेस्ट जरूर करेगा मार्केट यहाँ पर। वो रिटेस्ट पेंडिंग है अभी भी। वो रेजिस्टेंस था काफ़ी अच्छा। सेलिंग काफ़ी अच्छी आई थी एक्चुअली। आज ओपन होते ही ब्रेकआउट में चला गया, ऐसा लग रहा था फर्स्ट कैंडल आ सकती थी, बट वो पहली कैंडल ने ही ऐसा उड़ाया, बट फिर नीचे आया और सेकंड कैंडल फिर ऊपर ही चलेगी ब्रेकआउट करते हुए। तो दैट इज़ अ रीटेस्ट जोन स्टिल पेंडिंग इन गेल। 15 मिनट स्टॉक की बात कर रहा हूँ। कि डॉलर गोल्ड जैसा मैंने बताया ऑल टाइम हाई को टच किया आज। ऑल टाइम हाई से वापस सेलिंग आ रही है थोड़ी बहुत। कल काफ़ी साइडवेज था, ऊपर चला गया ब्रेकआउट करते हुए। सेल ऑफ में जाएगा यहाँ से। ठीक है, बाकी गोल्ड में भी किसी को सेल करना है तो सेल कर सकते हो, इसमें ऑल टाइम हाई पे रेजिस्टेंस बन चुका है ऑलरेडी। वापस ये पुल बैक देगा तो इसमें एक सेलिंग का ट्रेड वापस बन जाएगा। गोल्ड में सपोर्ट भी देख लेते हैं, 15 मिनट में फॉरेक्स की बात कर रहा हूँ, ध्यान रखना। पुल बैक आता है तो ऊपर गोल्ड में 3492 से 497 के बीच में एक सेलिंग ट्रेड। लास्ट एसएल 3500, उससे बड़ा एसएल नहीं। सपोर्ट भी देख लेते हैं। बाकी कहाँ तक आ सकता है, तो कल का जो स्विंग लो बना है, लो दैट इज सपोर्ट एरिया, वहाँ तक आने की पॉसिबिलिटी है। वो एक छोटा सा सपोर्ट है अभी। कल वैसे मुझे लग रहा था सपोर्ट लेगा, बट वो इंडियन मार्केट 930 के अराउंड एग्जैक्टली हिट ही नहीं किया, टच नहीं किया एग्जैक्टली। फॉरेक्स ने भी नहीं किया है, तो नीचे 3470 से 468 के बीच में बाइंग प्लान कर सकते हैं वापस। वैसे रेजिस्टेंस लेके आए तो बेटर है, ना भी आए तो भी चलेगा। ऊपर रेजिस्टेंस लेकिन थोड़ा ज़्यादा स्ट्रॉन्ग लग रहा है अब। ठीक है, तो नीचे आपके पास सपोर्ट है पहला। ओपन इक्वल टू हाई ना बने बस, ध्यान रखना। ऊपर का रेजिस्टेंस थोड़ा ज़्यादा स्ट्रॉन्ग बन गया अब गोल्ड में। अनटिल अनलेस 3500 के ऊपर नहीं जाता तो और ऊपर जाएगा नहीं। तो एक पुल बैक में 3492 से 3497 के बीच में सेल। नीचे आता है तो 3470 से 468 के बीच में एक बाइंग का प्लान रख सकते हैं। नीचे वाला सपोर्ट थोड़ा सा वीक है, बट है अभी भी। कल टच नहीं किया एग्जैक्ट लेवल को। बाकी अगर वो ब्रेक हो जाए नीचे वाला सपोर्ट 3468 के नीचे, ब्रेक डाउन प्रॉपरली हो गया, तब फिर थोड़ा सा प्रॉपर नीचे एक सपोर्ट जोन है वहाँ तक आ जाएगा। जहाँ कल बाइंग आई थी अर्ली मॉर्निंग फॉरेक्स में 7 बजे, 3436। कल एक्सपेक्ट कर रहे थे वहाँ तक आएगा, आया ही नहीं, ऊपर से निकल गया। वो सपोर्ट थोड़ा सा ज़्यादा स्ट्रॉन्ग है, 3440 से 430 के बीच में। तो गोल्ड में इन लेवल पे प्लान कर सकते हो एक छोटी सी बाइंग और सेलिंग। एक्चुअल गैस देखो, अगर ये आ जाता है ऊपर तो वेल एंड गुड, ऊपर वापस सेल कर देंगे। कल के जो नहीं है तो ज़्यादा इशू आएगा नहीं। बीच में कोई नया रेजिस्टेंस बना दिया तो बात अलग है, क्योंकि अब नीचे इतना कंसोलिडेशन करने के बाद ब्रेकडाउन हुआ तो फिर इजीली नीचे वाले लेवल हैं 250 वाले, मिल जाएंगे हमें। पर दो रेस साथ साथ ही बने हुए हैं एक्चुअली में, मर्ज करते हैं क्या? नहीं पड़ेगी वैसे। लेट्स सी द न्यूज़ देख लेते हैं, कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ लेना। लेट्स सी, जेन स्ट्रीट plans to move Singapore office in latest Asia expansion. नेचुरल गैस में फिर से बाय मत करना, ठीक है? नीचे आएगा तो अवॉइड ही करना। अब जाना होगा तो चला जाना चाहिए अब।
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Lizzie Burden.
Now to some breaking news this hour. The yield on long-dated UK bonds has risen to the highest since 1998. The rate on 30-year gilt yields has risen 3 basis points to 5.67%. It puts yet more pressure on Prime Minister Keir Starmer's government to take steps to regain the confidence of markets. The UK's 10-year gilt yield has also climbed 3 basis points, and the pound has weakened in early London trading on Tuesday. Economists are predicting that the UK will need to raise taxes to keep on the right side of the government's self-imposed fiscal rules.
Nestlé has dismissed its CEO, Laurent Forex, after only a year in the job due to an undisclosed workplace affair. The abrupt change removes the boss of the world's largest food company, who was seen as a safe pair of hands. Bloomberg's James Woolcock has more.
Nestlé's board said an investigation found Forex had an undisclosed romantic relationship with a direct subordinate. The CEO, who worked for the company for 40 years, was only 12 months in his role at the top and will not receive an exit package. He's been contacted for comment by media outlets but hasn't yet responded to the announcement. The food company has named Philip Navratil, who currently runs its Nespresso coffee brand, as his replacement. In London, James Woolcock, Bloomberg Radio.
Gold has hit a record high, driven by expectations for Federal Reserve interest rate cuts and concerns over the central bank's independence. The price of the precious metal topped $3,500 an ounce as investors loaded up on the safe haven asset. The latest run comes after Fed Chair Jerome Powell cautiously opened the door to a rate reduction due to a weakening jobs market. Here's the view of BNP Paribas chief economist Luigi Speranza.
We think this downside risk will not materialize, and the Fed will help here with sort of an insurance cut, if you want. That's the way I regard the September cut. The labor market is being weakening, probably more than we had expected on the base of original data, but I think it's still a soft patch here.
Luigi Speranza speaking there as bond investors worried that they could be in for a rough September. Over the past decade, debt maturing beyond 10 years has typically lost 2% in September. And with governments expected to boost borrowing, long-dated bonds are already trailing shorter maturities.
Elsewhere, Revolut has begun a secondary share sale at a $75 billion valuation. Bloomberg understands that staff at the London-based digital bank will be able to sell as much as 20% of their stakes for just over $1,300 a share. The deal will cement Revolut's status as one of the most valuable fintechs, with the latest valuation up from $45 billion last year.
A financial industry lobby group says that the EU's failure to break down barriers between countries' different banking markets has trapped hundreds of billions of euros of capital at big lenders. Bloomberg's Mikhail Kubala has more.
The Association for Financial Markets in Europe says obstacles to cross-border banking services have trapped 225 billion euros in low-risk assets. The lobby group warns EU banks face tougher requirements than peers in the US or the UK, putting them at a competitive disadvantage. European politicians are taking steps to forge what they call a banking union, but progress has been slow. The AFME says a lack of trust between national supervisors is preventing changes to the rules, and points in particular to the cumbersome process in approving cross-border mergers. In Brussels, Mikhail Kubala, Bloomberg Radio.
The UK Prime Minister Keir Starmer announced a series of personnel changes centred around his top economic team. Former Bank of England Deputy Governor Manoush Shafiq has been hired to be his chief economic advisor, and Treasury Minister Darren Jones has been moved to run Starmer's office. But former head of the Institute for Fiscal Studies Paul Johnson criticised the attempts to hit the reset button after a stuttering start.
More than a year into this government, they're only just working out that they might need some senior economic expertise within Number 10, both at a political level and at the advisor level. It's yet another example, I think, of how staggeringly unprepared this government was for government, despite the fact that they essentially knew they were going to win the election some considerable time out.
Economist Paul Johnson there speaking to Times Radio. Polls suggest that Labour has seen an incredible fall in popularity in its first year in office, driven by issues including the economy and migration. Meanwhile, yesterday, the Home Secretary made a significant announcement on migration policy as Parliament returned. The government will temporarily suspend the scheme that lets asylum seekers bring family members to the UK.
And lastly, in the business of sport, Premier League football clubs have splashed out a record £3 billion in transfer fees this summer. The transfer bill was greater than the combined total spent by all the clubs in the Bundesliga, La Liga, Liga 1 and Serie A. And Alexander Isak's £125 million move from Newcastle to Liverpool set a new British record for the most expensive player. The news comes as Europe's battle for football talent ignites its own debt market, featuring industry players including Apollo and Blackstone. Here's what Tristram Leach, co-head of European Credit at Apollo Global Management, told us last month.
Certainly, it's an area we're involved in. We think is interesting. We think represents compelling risk reward. And look, we look at that as part of our asset-backed business, where, lending against receivables from high-quality counterparties is something we're happy to do, and we think we can do in a competitive way. And look, the sports world seems to be attracting more and more money all the time.
So that was Apollo's Tristram Leach speaking there as transfer fees become some of the main items on football clubs' balance sheets. So those are our top stories then for you this morning. Lizzie, let me take you through the markets as we're seeing more declines here in Europe. So we're down by 0.2%. Well, actually, we saw a gain at the close yesterday, but decline this morning down 0.2. Nestle shares in particular down more than 3% this morning after the CEO was dismissed. US stocks close to all-time highs. So in terms of stock futures, they're a little bit in the red this morning. Gold hitting that record high, but we are below that right now, trading at $3,487. The 30-year UK gilt yield has also climbed to the highest level since 1988. That 30-year yield now trading at 5.66, up 3 basis points. And the ECB's Isabel Schnabel are making some comments that the central bank in Europe should keep interest rates steady. We've got euro area inflation readings coming later this morning.
That's news when you want it with Bloomberg News Now. I'm Lizzie Burden.
I'm Caroline Hepker, and this is Bloomberg.
Tying in Ray Dalio's warning on debt is that perhaps we're just entering a new paradigm where government debt is so large that you need to have the central bank and the Treasury working together. Look at how it's happened here in the UK. You have the UK government wanting to cut spending, and then the central bank undoing it all in one blip.
That is an interesting conversation. We will continue that one tomorrow, no doubt. Valerie, thank you very much. Bloomberg's Valerie Teitel. That is it for the opening trade. The Pulse is up next. They'll be taking you through these negative stock markets. We're down by 0.7% on the stock 600. A lot of action in bond markets. Yields are higher. Currency's lower against the dollar. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble, iconic. When we get people moving, when we get the world moving, iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
With the state banking commissions, it's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework that is very similar for all of those banks going forward.
Nobody covers the Fed like Bloomberg.
Bringing you
up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. The top names at the Fed are on Bloomberg.
We're seeing pressure on the inflation side of our mandate. That's where our miss has been bigger, and it's been lasting for longer. We haven't hit on inflation in 4.5 years. What I hear from people is that the pain of inflation is really biting. And so we have to balance those two sides of our mandates when we think about setting correct policy. And we have to look at if we're missing, by how much, and for how long do we expect those misses to last.
Nobody covers the Fed like Bloomberg.
China's Xi Jinping welcomes old friend Vladimir Putin to Beijing as North Korean leader Kim Jong-un arrives to join his two allies at a military parade. UK 30-year gilt yields rise to the highest level this century, piling more pressure on the Chancellor, Rachel Reeves, as she prepares her autumn budget. Plus, major shakeup at Nestlé, the world's largest food company, ousts its chief executive over a workplace affair just 1 year into the job. So there's quite a lot going on today. There's definitely a back-to-school vibe, certainly in the markets, with bond yields climbing, equities falling, traders really shunning today and maybe for the rest of the week, although things can change very quickly. Probably shunning some risk before Wall Street's return from the long weekend. Gold actually hitting an all-time high of 3,476. This is market overall for what, first of all, we are going to spend a bit of time talking about sterling and the pressure that the bond market, but also the FX market is putting on Keir Starmer. You can see the 30-year yield 5.689. If you look at pound, declining against the dollar at 134.06. Now let's go also to the markets overall in Europe. We're no longer in earnings season, so what will really be driving the way forward is geopolitics, monetary policy, and again, this pressure coming into September from around the world and from investors on fiscal deficits and what they can do about it. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Chinese President Xi Jinping has met with Russian President Vladimir Putin in Beijing ahead of a major parade to mark 80 years since the end of World War II. Now, Xi is expected to speak at the event that will also see the North Korean leader, Kim Jong-un, in attendance. Well, joining us now is Min Lo, our China correspondent in Beijing. Min, thank you for joining us. So let's start with that meeting between Xi and Putin. What exactly was discussed?
Yeah, it's a very important meeting because, first of all, President Xi, again, addressing Putin as his good friend, President Putin saying that the relations between the two sides are now at an unprecedentedly high level. But what's important is the number of deals they have signed. Xinhua, the Chinese state news agency, is saying that about 20 bilateral agreement documents have been signed, covering areas like artificial intelligence, education, health, many different sectors, scientific research as well. But the most important one is the energy deal between the two sides. Gazprom, which is Russia's state-owned oil and gas company, agreeing to build this Power of Siberia 2 pipeline to China. This is something that's been in talks for many years, but China has for a long time been reluctant to sign on to this deal because they didn't see it as, an urgent need to step up their gas purchases from Russia. They didn't want to over-rely on a single country, but this is in some ways a lifeline to Gazprom, which has seen its profit really been hit after the Ukraine war. This gas pipeline will help it recoup at least a third of the gas pipeline sales to Europe and redivert it to China. So certainly a very big deal. Both sides also agreeing to step up the flow of natural gas through the existing pipeline as well. Interesting to see what this means then for any potential talk between Trump and Xi of a trade deal between the two sides, because Trump has been threatening China of more tariffs if it continues to buy or increase purchases of Russian oil.
So, Min, North Korea's Kim Jong-un will also be at the military parade, but India's Modi won't. Do we read anything into that?
Yeah, I mean, for Kim Jong-un, it is a very important meeting for him, one of the rare opportunities for him to share the same stage as the big brothers, President Putin, President Xi. Look at that image, something that would be very iconic that I imagine will live on the internet forever. The three of them standing above that dais of the portrait of Mao Zedong below them on Tiananmen Square. And it's an important meeting for for Kim Jong-un. Just ahead of this, he visited a new missile factory in North Korea and unveiled a new development program for its intercontinental ballistic missile. And really that is in defiance of the pressure from US and South Korea to end its nuclear program. And here he is going to stand on the same stage as Xi and Putin, showing that he has friends in important places, even despite some of these pressures from other Western-led nations like the US. But for Modi, it's an interesting balancing act that he has here, right? Yesterday he met with Putin and it was a very good meeting. He said it was an excellent one. They had discussed a lot of issues from improvement, increase in trade, to security, cultural issues and all that. But at the same time, he's not going to appear tomorrow to be standing alongside these autocratic leaders. Not a good look for India, which is one of the world's largest democracy, or at least it prides itself on that. So Modi perhaps hedging his bets a little bit, wanting to put a bit of distance even as he tries to cozy himself up to some of these other countries in the region as he tries to counter the impact of tariffs from Trump.
Min, thanks so much. Min Lo there, our China correspondent. Now, U.S. payroll data on Friday poses a near-term risk for markets as traders wait to confirm bets on a Fed rate cut this month. At the same time, your area inflation data also on traders' radar as they watch for any potential surprise, with policymakers widely seen keeping rates steady next week. It comes, of course, as global long-dated bonds come under pressure, 30-year gilts rising to the highest level since 1998. Well, joining us now is David Zahn, head of European fixed income at Franklin Templeton. Thank you for joining us, David. I mean, there's a lot going on. I'm looking at the UK, actually the 30-year, and it's out of control, putting extra pressure on the PM, Keir Starmer, to get his act together.
Well, I think it's not out of control. I mean, we're seeing yields rise, and that's kind of a bit exciting for the market. I just think that we're seeing that, yields are becoming, just gradually going higher in the UK. They need to do something on the fiscal side to either raise taxes, cut spending, or both. And we're not really seeing anything about that. We have to wait till the autumn statement. And so I think the moves that Starmer made yesterday by bringing some different people into number 10 is kind of making people question who's actually in charge of the fiscal side.
So, David, I mean, first of all, what do you expect from the autumn statement? Because, the Chancellor has a very narrow path to land the plane, and last time it didn't quite land where it should have.
Well, I think it will probably be more of the same. I think they're going to try to, live up to their manifesto that they don't want to raise the three key taxes, even though realistically that's probably what they need to do. They need to cut spending, but they probably won't do that because they don't want to do that. So I think they'll be looking for little things to try to, move taxes higher, but without breaking out of their promises.
So between finding savings and raising taxes, I mean, is there a danger? Like, what do bond speculators or
I think bonds just continue to go up in yields. I don't think they'll believe that this is actually going to fix it by trying to put these band-aids on it. I think it's going to be more. We need to see a more radical cut in spending and a broader tax increase in order to bring the budget into balance. And if that doesn't happen, bond market will just continue to see yields move higher.
At what point does it become very uncomfortable for the government?
Well, I think it's already starting to become uncomfortable, but I think that, we've always talked about 6% on the 30-year, which, a while ago didn't seem that far. It seemed a long way away, but we're getting quite close now. So I think above 6 is when people start to question, is this actually a viable?
So what do you think? I mean, do you think we'll touch 6 in the short term?
And I think with that, by the end of the year, we'll be above 6, yeah.
And what happens again, because it's also psychological level?
Yeah.
Are we going to see radical reform for the government, or do people just get, come out of the UK?
Well, I think it's up to the government what they decide to do, and I think they're going to continue to try to just plug along and not really address the problems. But if the yields get too high, eventually they will have to do something much more substantial, which will include spending cuts.
Yeah, and I know it's not radical, but still, I mean, when you look at these moves, the yield climbed to the highest level since 1998. I mean, it's not nothing.
No, absolutely
right?
not. I guess what I'm saying is it's quite orderly. Like we're moving, 5-10 basis points a day. It's not like we're seeing big gaps. It's orderly, and I think that's what like the Bank of England would be saying. Well, it's being very orderly, so we don't need to do anything.
How do you see France?
Well, France is another country that's having its own issues. We see that the government is going to fall probably next Monday when they have the no confidence vote. It seems pretty certain that won't stick. And then really becomes what happens next. Are they going to just appoint another PM? That's possible. Do they go to elections? That's possible, but I think we'll get back a very similar parliament to what we have now, so that doesn't really fix anything. What we really need to have is to have new parliamentary elections and presidential elections. But again, Macron isn't going to step down. His term ends in 27. I see no reason why he should step down 18 months early, so I think that they will just continue in this kind of stumbling down the road. But, the credit of France is still a good credit. I mean, it's going to be, it's AA minus. It's probably going to be a single A after the credit rating agencies go through their moves, but I think from that perspective, it's still a very solid country within the EU, so it has the backing of the EU, which I think is also quite important.
David, I mean, overall, it does feel like the bond market is playing a bigger role. Like, as far as I can remember, it's always the bond market that, got rid of governments that weren't doing the right things in their eyes. I mean, have they become more powerful now?
Well, I think the bond markets have always been something that people have looked to for information. I think that given that we're no longer in a QE era where all yields are suppressed, I do think you can have much more push from the bond market of we want radical change.
Is there anything that you buy right now in Europe?
We actually like the kind of 5-year part of the curve. And most countries like Spain or Germany, we think those offer good value. But overall, we're short duration. We believe yields in Europe are going to continue to rise.
Treasuries. What do you do with treasuries?
Well, treasuries are a tricky one because I think that you have a central bank that they've kind of said they're going to cut later this month, but that's all down to the data, so we'll see what happens there. But I don't think they're going to go through a lot of cuts. I mean, they may cut 50, 75, but we're not seeing the market's pricing, I think, 150. We don't see that degree of cuts coming because inflation is still very much being sticky in the U.S.
David, I mean, there was a lot of talk about an auction in the U.S. going badly at some point and it being the day of reckoning, and that would definitely be disorderly. At the same time, the president is using a lot of these tariffs as a way to pay for what he's trying to do, for example, with the big, beautiful bill. So does it even out?
Well, I think that's one of the things that we have to see how much money actually comes in from the tariffs, because so far we've seen tariff receipts go up massively, I mean, compared to anything we've seen in the past. And that does actually help the fiscal balance of the U.S. Not enough, probably, but I think that could actually make your budget deficit not look quite as bad, and so maybe people will be more relaxed about it.
Japan?
Japan, I think we see yields continue to rise there. We've seen the long end move up massively. I think the one area that people aren't as focused on Japan is that Japan is actually one of the big investors in global bond markets by investing outside of Japan. And now that their 30-year is 3+, and the curve is so steep, it actually doesn't make as much sense for them to move marginal new money out into the U.S. or into Europe. They may stay more at home, which also will have an impact, I think, on other bond markets.
So given all of these complexities, is there one thing that you're selling right now?
The long end of the curve. We still think that long end.
Across the board?
Yeah. And Europe, we're short, and gilts, we're short. We think the long end of the curve should continue to rise because we have big fiscal deficits that need to be funded. And how is that going to be done? It's going to have to be termed out because still, overall, yields are relatively okay for all these countries.
So interesting. David, thank you so much for coming on. David Zander, head of European fixed income at Franklin Templeton. Now, Nestlé has sacked its chief executive, Laurent Fréchet, after only 1 year in the job due to an undisclosed undisclosed workplace affair. The Swiss food giant named Philippe Navratil, who heads the Nespresso coffee brand, as his replacement. Well, we reached out for Freixé for a comment, but now let's bring in Jennifer Creary, our global business reporter. Jennifer, thank you for joining us. I mean, this took many, many people by surprise. What more do we know about the decision to fire Freixé?
So we know a few things. So we know that there was an internal investigation from the company, and this was after the matter was raised to the company via an internal platform called Speak Up. The company couldn't substantiate the allegations after that, and so they brought in an external counsel to conduct another investigation, and that is the result that we see today. So Lauren Frex had an undisclosed relationship with a colleague, and you know, this is a company that's known for its conservative culture, and the chair has said that this is against Nestlé's values, and to really drive that point home, he won't receive an exit package. I think the reality is here, this is not an uncommon situation for companies. We see CEOs being ousted because of these undisclosed relationships before. The most prominent example, I think, is in 2019 when McDonald's CEO Steve Easterbrook left the company after an undisclosed relationship with a colleague. And most recently, earlier this year, Kohl's CEO was also ousted after directing millions of dollars of business to a romantic partner. So not an uncommon scenario, and this is the outcome that we see today.
So what are the challenges for his replacement?
Yeah, I mean, it's the same challenges, to be honest. So it's really trying to boost that share price that we know has been sluggish for many years now. It's down almost 20% over the past 12 months. And one of the big challenges will be tariffs, of course. We know that, particularly with their U.S. products, Nestlé said that the majority of them products are made domestically, with the exception of Nespresso capsules that are made in Switzerland and now subject to those 39% tariffs. Interestingly now, the new CEO, Philippe Navratil, he headed the Nespresso division, so hopefully he can bring expertise now to that. Something that's very interesting as well, I think is important to highlight, is that Navratil is a very young CEO, so he's under the age of 50, and so investors can be looking to see whether or not he has a particularly long tenure going forward.
Very young, under 50. You've cheered everyone up who's watching. Jennifer, thank you so much. Jennifer Creary, our global business reporter on this pretty extraordinary story from Nestlé. Now, coming up, we're live at the Goldman Sachs EMEA Credit and Leveraged Finance Conference. We'll discuss credit risks, M&A, and much more with Cristina Muniz, Goldman's Global Head of Credit and Asset Finance. That's next, and this is Bloomberg.
Up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
In case you missed it on Bloomberg Tech.
Overall, our roadmap for the rest of the world is very strong, and we think is just getting stronger as we go forward. And as it relates to China, it's something that we have to work through with the administration. But as I said, we've had very close conversations, and we're making good progress there. So from that standpoint, I think the overall competitiveness of our AI roadmap has never been stronger.
Don't miss Bloomberg Tech, live every weekday.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Friday on Bloomberg. Context changes everything.
I do think France remains an attractive investment area for a variety of reasons. Despite the political turmoil and the vote of no confidence on the 8th of September, domestic stocks have reacted well to the current uncertainty. And I think the country has a lot of positives.
Well, that was Céline Michelin, head of investment banking for France at Goldman Sachs, speaking to us at the Goldman Sachs EMEA Credit and Leverage Finance Conference. Now let's return to the conference, and U.S. companies are poised to boost their debt levels to help fund a $1 trillion wave of acquisitions, a reversal after years of scaling back their borrowings. Now the Fed moving closer to a renewed round of rate cutting, with executives gaining more confidence that stock market volatility has eased. Now that's improving conditions to make acquisitions. Well, I'm delighted to be joined by Christina Minnis, Global Head of Credit and Asset Finance and Head of Global Acquisition Finance at Goldman Sachs. Christina, as always, thank you so much for joining us. So what are the most important and appealing opportunities in credit right now?
Well, first of all, Francine, thank you for having us. This is a very exciting time for us, our 15th year doing this conference, our most successful conference with over 1,600 people registered. So thank you for being here. In terms of credit, some of the main themes that we continue to see we're excited about remain investing in technology and what's going on broadly in digital infrastructure and in infrastructure writ large. There's a significant need for capital deployment over the next decade, and we believe the private credit markets are very well set up to support that as long as private credit continues to grow.
So when do you see a meaningful return in M&A?
So Celine, I think my partner was on earlier, a couple of statistics. The first half, global M&A was actually up 40%. Now, it was slightly softer in Europe. But what's interesting about M&A, today we've seen about 34% of that volume driven by our sponsor community. That's off of a 40% kind of historical number. So I do believe the return of sponsors into the market in a meaningful way is going to be super important. And we've started to see signs of that. In the U.S., just last week, there was a very large take-private announced. And so we're quite optimistic that sponsors are going to be very active coming into the end of the year and into 26.
Christina, I mean, GS has been involved in private credit, for quite some time. The broadly syndicated market is coming in at pretty tight spreads. What role do you see for private credit? Can it actually remain competitive?
Yeah, I continue to believe very strongly that both markets are going to coexist and are very important to each market. So there'll be many use cases where private credit steps forward and really can help clients access capital. And then to your point, in strong markets with very strong credits, the broadly syndicated markets are far more competitive in terms of pricing. So both markets will grow, and I think there's a very strong indication that that's going to support our client franchise. And again, at Goldman Sachs, because we have one of the largest asset managers, and as you mentioned, we've been in private credit for over 30 years, we're quite supportive of both markets. And we think there's a lot of opportunity for investors in both.
I mean, there's some, when you look at the financing in the leveraged credit, space, there has been some quirky moves, certainly when it comes to the junior portions of it. Do you see that as a quirk? Yep. Can we see more of those moves?
I think there's still credit dispersion, and I think you still see some interesting opportunities in the triple C part of the market, whereas the single B and double B market has really rallied to all-time tights. And so I wouldn't call it quirkiness; it's just an opportunity for investment for those that really want to go down the risk profile.
Where do you see secondary trading in the private credit space heading?
I think it's going to continue to be a topic for conversation. There are many people that believe it's going to be very, very, very publicly traded. There are those that believe it will not be publicly traded. It probably lands somewhere in between. It's a significant market, and over time, I think players will want to look for some secondary liquidity. So I'm kind of in the middle, and I think it's actually a constructive development if we see some liquidity in that market.
Christina, overall, how do you see these markets actually changing in the next 12 to 24 months, given everything that we're seeing, but also reshaping of the global economy?
So I think we are all pretty much set that we're going to have Fed easing, and so that's going to have an impact on spreads. But all-in yields, I think, are going to be very attractive. I think the macro setup is actually relatively constructive. I think there's some concerns about the consumer and potentially the impact of tariffs and what that might do to earnings, but that certainly hasn't cropped up yet in any results. And so overall, I think credit is going to continue to be a very important, attractive asset class. And I think the deal industry is going to continue to pick up. Now, we've been talking about that for a number of years now, Francine, the return of M&A. But I think what we see in terms of corporate boardrooms and sponsor willingness to transact is really picking up. So we're quite optimistic about the end of 25 going into and into 26.
And Christina, is this opportunistic M&A because valuations are good, or because there's a genuine appetite for some of these companies to become bigger?
I think it's a combination, Francine. I think you see certain companies that are taking advantage of great credit markets and going after acquisitions that have been potentially off the table in the past. And so we've seen some very interesting strategic M&A pickup. I think we've seen sponsor portfolio companies probably spend a little bit more time around dividend recaps, and now maybe it's time to think about actually monetization of the entire asset. And then I also think what's going on in infrastructure is really incredible, which is going to drive significant financing driven by what's going on in AI, computing, data centers, et cetera. And so I think the Goldman Sachs research that just came out for 2027 has a $300 billion number in data centers. We're pretty excited that we've got a very strong market share in that financing. We've got #1 CMBS market share, and we've also got involvement in almost 40% of the transactions that have been done around data centers. And so while that's not necessarily M&A driven per se, there's a significant amount of capital raising that's going to be required over the next decade.
And Christina, maybe final question on Europe. Are you optimistic about what Europe can offer, both in the M&A but in the credit space, in the next few years?
Quite optimistic, and I think one dynamic, back to infra for a second, that is unique in Europe, or more unique in Europe, is that with the Basel rules just coming out, a lot of the infrastructure financing historically has been handled by banks, and I think with the stricter capital regulations, it's going to push more of that financing need into the capital markets, which again, I think is going to be a very attractive opportunity both for our issuing clients and our investing clients.
Mm-hmm. Christina, as always, thank you so much for joining us. That was Christina Minnis, a global head of credit and asset finance, head of global acquisition finance at Goldman Sachs. Now, coming up, President Trump claims India is offering to lower its tariffs to nothing. We'll get the details next. Also, a quick check on the markets, because there's a lot moving, not only in futures in the U.S., but that UK 30-year bond yield climbed to the highest since 1998. I mean, the other thing we're talking about is, of course, when you look at pound, that's also moving. Economists predicting the UK will soon need to raise taxes to keep on the right side of the government's self-imposed fiscal rules due to concerns over basically the fiscal outlook and the structurally higher inflation. You can see sterling 134.04. You can see the dollar index 1,207. And then, look, the big one, we always look at the U.S. 10-year yield at 4.2731. This is Bloomberg.
case you missed it on the close.
Sweet green, which has a kind of a similar
News when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Stephen Carroll.
The yield on long-dated UK bonds has risen to the highest since 1998. The rate on 30-year gilts rose 3 basis points to 5.688%, actually up 5 basis points now, and it puts yet further more pressure on Prime Minister Keir Starmer's government to take steps to regain the confidence of markets. The yield on 30-year gilts has surged about 40 basis points so far in the second half of this year, and the pound has weakened in early London trading against the dollar to $1.34, more than 1% weaker now. Economists are predicting that the UK will soon need to raise taxes to keep on the right side of the government's self-imposed fiscal rules. And Chief Investment Officer at Allianz, Ludovic Subran, told Bloomberg Radio that people are looking for how Rachel Reeves will balance the books.
I think it would be actually quite smart of the government to try to explain the strategy leading to the autumn budget, especially trying to reassure on the forward guidance on the fiscal side. I think that could actually be soothing markets slightly, and I would do that if I were them, yes.
Sue Brown and other traders are concerned about a hole in the government's budget, estimated to be as big as £51 billion.
The move comes a day after the Prime Minister Keir Starmer announced a series of personnel changes centred around his economic top team. The former Bank of England Deputy Governor, Minouche Shafik, has been hired to be his Chief Economic Advisor, and Treasury Minister Darren Jones was moved to run Starmer's office. But the former head of the Institute for Fiscal Studies, Paul Johnson, criticised the attempts to hit the reset button after a stuttering start.
More than a year into this government, they're only just working out that they might need some senior economic expertise within Number 10, both at a political level and at the advisor level. It's yet another example, I think, of how staggeringly unprepared this government was for government, despite the fact that they essentially knew they were going to win the election some considerable time out.
Economist Paul Johnson there speaking to Times Radio. Polls suggest Labour have seen an incredible fall in popularity in their first year in office, driven by issues including the economy and migration. Meanwhile, yesterday the Home Secretary made a significant announcement on migration policy as Parliament returned. The government will temporarily suspend the scheme that lets asylum seekers bring family members to the UK.
In corporate news, Nestlé has dismissed its CEO, Laurent Frex, after only a year in the job due to an undisclosed workplace affair. The abrupt change removes the boss of the world's largest food company, who was seen as a safe pair of hands. Bloomberg's James Wilcock has more.
Nestlé's board said an investigation found Frakes had an undisclosed romantic relationship with a direct subordinate. The CEO, who worked for the company for 40 years, was only 12 months in his role at the top and will not receive an exit package. He's been contacted for comment by media outlets but hasn't yet responded to the announcement. The food company has named Philip Navratil, who currently runs its Nespresso coffee brand, as his replacement. In London, James Woolcock, Bloomberg Radio.
Price of gold is at a record high, driven by expectations for Federal Reserve rate cuts and concerns over the central bank's independence. The price of the precious metal topped $3,500 an ounce as investors loaded up on the safe haven asset. The latest run comes after Fed Chair Jerome Powell cautiously opened the door to an interest rate reduction after the data showed the jobs market weakening. With more, here's our economics reporter, Katia Dmitrieva.
This growing expectation by markets, by economists, that the Fed is going to have to cut interest rates this month. And also because, economic activity is slowing and you have these potential changes at the Fed, and that's sort of the second reason. So there's been a lot of risk, growing volatility because of Trump's attacks on the Fed.
Katia Dmitrieva was speaking as bond investors are worried they could be in for a rough September. Over the past decade, debt maturing beyond 10 years has typically lost 2% in the month. And with governments set to boost borrowing, long-dated bonds are already trailing shorter maturities.
Revolut has begun a secondary share sale at a $75 billion valuation. Bloomberg understands that staff at the London-based digital bank will be able to sell as much as 20% of their stakes for just over $1,300 a share. The deal will cement Revolut's status as one of the most valuable fintechs, with the latest valuation up from $45 billion last year.
Premier League football clubs have splashed out a record £3 billion in transfer fees this summer. The transfer bill was greater than the combined total spent by all of the clubs in the Bundesliga, La Liga, Ligue 1 and Serie A. And Alexander Isak's £125 million move from Newcastle to Liverpool set a new British record for the most expensive player. The news comes as Europe's battle for football talent ignites its own debt market featuring industry players including Apollo and Blackstone. Here's what Tristram Leach, co-head of European Credit at Apollo Global Management, told us last month.
Certainly it's an area we're involved in, we think is interesting, we think represents compelling risk-reward. And look, we look at that as part of our asset-backed business where, lending against receivables from high-quality counterparties is something we're happy to do and we think we can do in a competitive way. And look, the sports world seems to be attracting more and more money all the time.
Apollo's Tristram Leach speaking there as transfer fees are becoming some of the main items on football clubs' balance sheets.
Well, those are your top stories this morning. On the markets, the Stock 600 is weaker 0.7%. On Wall Street, S&P E-mini futures are down 0.6% as traders come back from the Labor Day holiday. The 10-year US Treasury yield is up 5 basis points at 4.27, and we're keeping an eye on that 30-year UK gilt yield up 5 basis points at 5.686%.
That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
And I'm Lizzie Burden, and this is Bloomberg.
Do you see that as that big in for the SCO as a block?
I don't think the SCO has shown over time that it's developed the capacity to launch wide-scale cooperation and links among its members. I mean, first, you've got to remember it's only really 10 members. Yes, we've got over 20 countries represented there. This is relationships between the SCO and other countries, but the SCO has really confined itself to date to issues like climate change, counterterrorism, and so on. And it will probably move forward incrementally. But as I was noting before, it has some issues among its countries. India and Pakistan are both in the SCO, and we've seen that cause difficulty already. And the Central Asian countries in the SCO are really quite wary of Russia. So I don't see the SCO coming out of this elevated in a significant way. But I do think we will remember this week as a week where China demonstrated that it could host both of these events and really put on a show for the world about the stability that it wants to convey, the way that it is wed to multilateralism, the way that it wants to develop even deeper relations with the global South, and it wants to be, it wants to represent for the global South the opportunities for a more open trading and economic system that will help their development. And in doing so, China is contrasting itself with the United States, which, of course, as we all know, is in the process of having launched this tariff war and is at odds with many of its allies and partners.
David, we've just got a live shot here of the opening ceremony just getting underway this morning. Just prior to that, we'd actually just seen Narendra Modi holding conversation with Russian President Vladimir Putin. I mean, we can see right here as they take that photo opportunity that Vladimir Putin has a very prominent position right next to Xi Jinping. But what do you make then of Russia's presence at that, and also the relationship between India and Russia in particular?
Well, the India-Russia relationship goes back decades. India and the Soviet Union were very close in those days, and India has maintained its military supply links to Russia and has maintained quite a bit of work with Russia over time, and that does not look like it's about to change anytime soon. There's no surprise here to see Vladimir Putin on the stage there. It's always been planned that he would attend this event, so I wouldn't make much out of that. But I do think the optic of Modi being there with them in the context of what has happened recently between the U.S. and India, and in the context of the India-China warmth that we're seeing, at least tactically for the moment, is quite significant, and we will remember this week.
Always good to have you in the Lion City. So when you take a look at the AI play, given that China's AI players are much cheaper, valuations are way cheaper than the U.S., why wouldn't you be buying into China then try to keep on, racking up gains in the U.S.?
I think the rally certainly started in the U.S., but it has broadened out to areas like China because the applications around AI are really starting to expand. But let's not forget what's happening in the U.S. markets as well. The U.S. markets historically grew earnings at about 6 or 7% a year. And post-AI, since 2022, U.S. markets earnings EPS is growing at double digits. So we've grown from a market that's growing at 6 or 7% to now a market that's growing at 11 to 12%. And for the next 3 years, we think that earnings growth is once again going to be in the double digits. And so you've seen a little bit of an expansion in the absolute valuation in the U.S., but we think it's much more than justified.
The thing is, NVIDIA disappointed. Was it a surprise to you? I mean, expectations were sky high. It was kind of bound to disappoint.
Yeah, look, the stock's doubled in a very short period of time, so expectations had certainly gone a lot higher. But I think it was a very, very good result. And fundamentally, the question around NVIDIA is always what happens to the trajectory of CapEx from these levels, right? CapEx, remember at the beginning of the year, CapEx, the 4 major hyperscalers, was expected to be around $280 billion. You know what that number is now? It's $360 billion. And so that's the single biggest KPI that's still impacting NVIDIA. And we think that models are going to get increasingly more competitive. Hyperscalers are chasing after artificial general intelligence. They're not happy with standing still right now. They understand that this is going to be the biggest technology pivot that we've seen in our lifetime, and they want to be the leaders. And that race is not slowing down. And until it does, NVIDIA is going to continue to be interesting.
The thing is, show me the money. If CapEx is so high, I want to see the returns. I'm not seeing the kind of returns that I should be seeing if I'm putting that much money.
Yeah. So you might start. So part of the reason why Alibaba has been so strong today is because they're actually starting to see the returns around AI as well. You're seeing a lot of consumer internet platforms
Not to the level that you're investing, though.
So one interesting stat that NVIDIA put out over the last couple of quarters is that if you look at training versus inference workloads, inference is actually the monetization piece. Training is actually the building of the models, right? We're now crossed over to the point where more than 50% of the workload is on inference relative to training. And so you're actually getting to the point where monetization is increasing. And we're optimistic as we look into 2026 with things like the development of AI agents, the continued monetization of consumer internet platforms like Meta, Netflix, and Spotify. The reason why these stocks have been so strong is because they're using AI and leveraging.
This natural gas बहुत slowly study जा रहा है. क्रूड ऑयल में देखो यहाँ पर एक सेलिंग का प्लान इस रेजिस्टेंस एरिया पे कर सकते हैं. एसएल का ध्यान रखना 25 पॉइंट का एसएल है. एसएल जाए तो निकल भी जाना है, होल्ड नहीं करके बैठना है. ठीक है. टारगेट ये नीचे जो ब्लू कलर की लाइन है, दिस वन 5735 पहला टारगेट. उसके नीचे अगर सस्टेन करेगा तो फिर ये सेकंड टारगेट रहेगा. इससे बड़ा एसएल मत लेना. दिस इज इनफ. मूव क्यों नहीं हो रहा? लेट्स सी क्या होता है. अभी टाइम तो है, 3:30 तक तो वॉल्यूम रहता ही है मार्केट में. Fall sharply news. I don't know any about news. मॉर्निंग तक तो पूरा साइडवेज ही था. फर्स्ट 15 मिनट की कैंडल के अंदर ही मोमेंटम कर रहा था. थोड़ी देर पहले ही रेंज ब्रेक करी है. थोड़ी देर पहले इन द सेंस ऑफ अभी 130 की कैंडल ने आ गया 130 तक तो वापस रेंज बाउंड हो जाएगा. न्यूज आई होगी तो बहुत पहले आई होगी 130 के आसपास, क्योंकि वहीं पर कैंडल ओपन इक्वल टू हाई बनी थी. उसके बाद कंटिन्यूसली ओपन इक्वल टू हाई दूसरी कैंडल भी थी. सी कोई अगर न्यूज़ आई हो. PM Modi sets stage for India's semiconductor mission 2.0, next generation reform. Can Reliance Intelligence be the next geo movement for Ambani? Reliance Industries share jumps 2%. It is about AGM or what China is doing. सारे बैंकिंग स्टॉक गिरे हैं या फिर लेट्स सी देखें एक बार. PM Modi settles Trump dead economic chain or GDP perform better than this. ICICI बैंक भी गिर गया. DFC भी गिरा है. PI भी थोड़ा बहुत गिरा. 130 से ऑलमोस्ट सारे ही बैंकिंग स्टॉक गिरे हैं. लेट्स सी रिकवरी आती है तो. रिलायंस इंडस्ट्रीज भी गिरा था बट मॉर्निंग पे ऑलरेडी काफ़ी हाई था. उतना कुछ खास इम्पैक्ट नहीं दिखा है. अभी भी पॉजिटिव है 1% से ज़्यादा. India eyes Russia, Brazil, Netherlands for pharma export growth as US tariff concern linger. ब्रेकिंग न्यूज़ तो यही है फिलहाल के. India aims to expand its pharmaceutical export presence beyond largest market of United States. US accounts for about a third of Indian pharmaceutical exports. Potential to increase export to newer market by 20% with current production capacity. Sources say India plans to increase pharmaceutical this. India Mobica is best 2-day gain near 6 month. Currency $1.5 billion ये भी पुरानी न्यूज़ है। Natural gas भी open equal to low. अभी भी सेलिंग का प्रेशर बना हुआ है रिलायंस में। थोड़ी बहुत जो सेलिंग आई थी उसके 15 मिनट के बाद भी कंटिन्यूअसली सेलिंग का प्रेशर है। निफ्टी में भी सेलिंग का प्रेशर ही दिख रहा है अभी भी। सपोर्ट भी काफी नीचे है इसमें फ्यूचर में। बाकी थोड़ा सा नीचे आता है बैंक निफ्टी फ्यूचर तो सपोर्ट पे आ जाएगा एग्जैक्टली थोड़ा और गिर जाए 53,740 के अराउंड फ्यूचर में सपोर्ट जोन है एक। तो यहाँ से लगभग अगर करंट एरिया से 200-250 पॉइंट और गिर जाता है तो एग्जैक्टली सपोर्ट पे आ जाएगा। बाकी ऐसी कोई न्यूज़ और तो दिखा नहीं रहा मुझे बैंक निफ्टी के रिगार्डिंग, लेकिन सारे बैंकिंग स्टॉक एक के बाद एक गिरे हैं। इलेक्ट्रिसिटी फ्यूचर भी गिर गया यार, क्या बात। वाओ, लुक एट द एमसीएक्स स्टॉक, इसमें क्या हो गया भाई। इलेक्ट्रिसिटी फ्यूचर में क्या हो गया। इलेक्ट्रिसिटी फ्यूचर देखोगे लोअर सर्किट पे चला गया, ओपन हुआ गया, हो गया ओपन हो गया, लोअर सर्किट से भी नीचे चला गया। मेजर न्यूज़ तो नहीं है वैसे तो, वॉल्यूम डाउन ही है बट इट इज़ गोइंग डाउन कम्प्लीटली। 3,700 ऑलमोस्ट 7% डाउन है, 8%। कुछ तो मेजर न्यूज़ चाहिए। क्रूड ऑयल का ध्यान रखना, ठीक है, ऐसे जाएगा होल्ड मत करके बैठ जाना, जाएगा तो निकलना है। क्रूड भी नहीं रुक रहा है। अगर ये नहीं रुकता है ब्रेकआउट सक्सेसफुली हो जाता है तो फिर नेक्स्ट रेजिस्टेंस सीधा 5,920 के अराउंड दिखाई दे रहा है। Massive monsoon surge across northern Massive monsoon surge across northern Bharat is keeping pressure on the power demand. तीसरा लोअर सर्किट भी मारेगा क्या ये। नेचुरल गैस में यहाँ पर ये थोड़ा टारगेट बना रखा हुआ है, कल का ये ट्रेड चल रहा है। इसमें भी यहाँ पर हाफ प्रॉफिट बुक कर लेना, इसका पूरा टारगेट लगभग 8 पॉइंट का है। 264.5 ये ब्लू कलर की लाइन के आसपास हाफ प्रॉफिट बुक करके ट्रेल कर लो। अगर इसके ऊपर जाता है तो फिर सेकंड टारगेट वहाँ से सेल करेंगे। नीचे वापस सपोर्ट पाया तो बाइंग दोबारा नहीं करने वाले वहाँ पे, क्योंकि बहुत स्लो जा रहा है एक्चुअली। इलेक्ट्रिसिटी फ्यूचर तो इंडिया का इसलिए गिर रहा है क्योंकि मानसून नॉर्दर्न इंडिया में काफ़ी ज़्यादा हैवी लग रहा है, जिसकी वजह से आईएक्स का जो डेटा आया है वो बता रहा है। कि इंडिया में जो मानसून है वो सर्ज कर सकता है फिर से नॉर्दर्न इंडिया में, तो उस वजह से पावर डिमांड थोड़ा सा प्रेशर में रह सकती है। दैट्स वाई हाइड्रो और विंड की जो सप्लाई है इंक्रीज होगी। 3 बजे शायद आई थिंक रिलीज करेंगे वो लोग 3 PM इंडियन टाइम के अकॉर्डिंग। तो जो लोग ट्रैक करते हैं इलेक्ट्रिसिटी फ्यूचर को 3 बजे का डेटा देख लेना। इंडिया के प्रोस्पेक्टिव से बता रहा हूँ मैं, ठीक है, वो मेनली इंडिया का ही है इलेक्ट्रिसिटी फ्यूचर। तो वो इम्पैक्ट जरूर करेगा जब अभी शाम को 3 बजे, कितना आधा घंटा बचा हुआ है, 3 बजे आईएक्स इंडियन एक्सचेंज एनर्जी जो रिलीज करेगी डीडीआर का डेटा। नेचुरल गैस में हाफ प्रॉफिट बुक कर लेना यहाँ पर, देन ट्रेल। थोड़ा सा बड़ा टारगेट है 1:4 का, 1:2 हो चुका है, तो बुक द हाफ प्रॉफिट एंड द रिमेनिंग क्वांटिटी। पर है तो सही है। गैस भी स्टक है, बुक कर लेना इसमें हाफ प्रॉफिट नेचुरल गैस में, ठीक है, देन ट्रेल। जाना है तो स्लोली स्टडी जाए अब, या फिर डायरेक्टली जाए, चला जाना चाहिए एक बार में ही। 50% डन। बस अगर ये ऊपर आ जाएगा तो इसमें भी एक सेलिंग का ट्रेड बना देंगे, नहीं तो नेचुरल गैस में अगर ये पूरा नहीं भी हिट करता है लेवल को 265 के अराउंड। भी करते रहो गाइस।
AI to actually drive higher levels of monetization. So there might not necessarily be visible forms of ROI to us right now because enterprise is just getting started, but it's well underway.
But you can understand why people are beginning to think about it being a bubble, right?
Yeah.
Because of the surge in the stock prices. I
Yeah.
mean, you're optimistic about the future, but you have changed your mind before.
Yeah.
That DeepSeek moment did prompt you to reassess perhaps your position on NVIDIA.
Yeah.
What would cause you to rethink again?
Yeah, look, I think what would cause us to rethink, and first of all, we've been talking about an AI tech bubble for the last 10 years, right? 2015, it's a bubble. 2016, it's a bubble.
It's just a bigger and bigger bubble, though.
And by the way, the reason why is because we had such a sharp correction down that this rally up has been so powerful that people are saying, hey, we need to be cautious. But if you think about 2025 in isolation, the NASDAQ is up 12%. Over the last 10 years, the NASDAQ has averaged about a 16% return per year. So we're really back on track to where it has been, right? And if you told me at the start of the year that the single most important KPI for AI trade is AI CapEx, and AI CapEx has gone from 280 billion to 360 billion, and now the trajectory going forward is many people think that it's going to be more than the size of the U.S. Department of Defense spending, which is crazy to think about. Then you got to think that the trade continues to have legs.
So how do you play this? I mean, you buy the dip?
Yeah, I mean, this is a period of digestion. So, like stocks, anytime
every dip, buy every dip.
You buy every dip. But so you have to think about what's happening, and you have to really go into the mindset of these people that are the companies that are spending this large amounts of capital. So, if you think about what Meta is thinking, Meta is just hiring engineers for $100 million per engineer. Is that because they're going to stop spending on AI tomorrow? No, you have to think about what they're chasing after. And the big goal of what they're trying to chase after is AGI. And AGI is trying to unearth something beyond what humans are capable of today. So how do we cure cancer? How do we solve climate change? How do we solve, are there aliens in existence, right? There's things that human intelligence can't currently comprehend, and we're trying to move towards that AGI, and we're just cracking the surface on that, and I just don't see them slowing down in terms of that. So outside of any kind of big multi-standard deviation event where we lead to a big correction, I just think that the medium to long-term trajectory of spend is upward, not downward. And so for those reasons, I'd probably be buying a lot of the dips.
I'm a little bit nervous because I think there are risks there, and I guess risks are being underpriced right now. How do you hedge? I mean, just in case you're wrong.
Yeah. So look, I think you have to think about it and one of the things about Goldman is what we try to pride ourselves on is trying to be humble. And anytime the fact pattern changes, we're going to change our opinion as well, right? At least the investing culture is that way. And so, we're going to continue to look for signposts that maybe we are wrong on this.
Including like what? What signposting?
So basically, anytime that we think there's indicators that the CapEx trajectory is slowing. Think about it, that's the most important KPI right now in the whole AI CapEx trade. And so what we're going to look for is any indication that that's slowing down.
Yeah, precisely. Trump shifts the goalposts on a daily basis on this whole story, as a result of which, did you have any certainty before? I'm not sure you did.
No.
Do you have any certainty now? You probably don't. I don't think it's changed very much. I think the expectation was that he was going to struggle legally with this, but would spin it out. And ultimately, he can go to Congress. That is the way of resolving this. Legislation is the way of resolving this. Will Congress go along with that? I don't know. But the Supreme Court thus far has largely sided with Trump. And he's got until October to file an appeal against this ruling.
Yeah, or to find a different way of doing it. Yeah.
And so the Supreme Court can then take its time. They stay in place, so nothing's going to change between now and the end of the year.
Let's talk about France, because here is another story that maybe has not changed over the weekend, but perhaps notable for that in itself. Yep. If you were looking for any signs that maybe these opposition parties were going to come round to support the Prime Minister for any reason whatsoever, you're not seeing it over the weekend. So the opposition parties are still talking tough, still not saying that they will support the Prime Minister. I was drawn to the Socialist words. I mean, they've both, all of the opposition parties have said that we're agreeing to meet with Beirut But some of them are saying this is just a courtesy. There's nothing really to talk about. And the socialists saying the only word I'm waiting to hear from Beirut, Prime Minister, of course, is goodbye. And that just sort of highlights where we are in this conversation. But then there's also this interesting front being opened up here. If the French Prime Minister feeling under attack, then he's certainly opening up a new area of offence, and that is around Italy, and talking about the Italians enacting what he calls fiscal dumping, essentially objecting to fiscal tools being used as a tool of competition.
Problems at home, blame somebody else.
Yes.
Okay? Usually quite a good tactic. Blame the Italians.
For poaching all the high net worth individuals.
That's obviously the reason why we've got so many problems at home. Seems like a fairly well-worn tactic by any government if they've got problems at home. It is clear that he is going to lose this vote at this point. So we're still in this kind of phase of not really understanding what comes next.
Yeah. I mean, he still thinks he has a chance, but I don't know what he thinks he's going to say this week that will change to turn it around. But he does still think he has a chance. I mean, there's 8 basis points now, Guy, between Italy and France, and I wonder if that's going into his thinking as to why he lashes out at Milan and Rome. Maybe this hurts in Paris.
I'm sure it does. But it doesn't change the arithmetic that he now faces, and it doesn't change critically the arithmetic that Macron faces. So what is Macron going to do? And we're all talking about Beirut this week, but this is a... Macron has to decide what he wants to do next. Does he want to appoint another Prime Minister? How does that change the calculus? Clearly, with the current Parliament, you are going to struggle to deliver anything that is meaningful. Does he have parliamentary elections, snap parliamentary elections? That has a huge risk associated with it. Does he call presidential elections? That's obviously his resignation, and he's gone. So I struggle to see what...
He sort of ruled out any of those calling election-type activities, hasn't he? But, these things have been a surprise in the past, so we'll wait and see.
I'm surprised that anybody's surprised that anything is... this is where we are. This doesn't look like it's changed very much over the weekends. Alex Yakov, BNP Paribas, Markets 360, is going to be joining us very shortly to talk about all of this. I'm quite curious to get his take on kind of what's happening in China, and we'll get his take on that, plus also the dollar. We need to talk more about that. Callum Pickering is going to join us from Peel Hunt, Chief Economist there. Why is the UK struggling as well? And portfolio manager Julius Baer will join us to talk about the markets, and Bronwyn Maddox is going to join us as well to talk a little bit later on about what is happening with the geopolitical narrative, firm eye again, as to what is happening out in China this week.
Let's tell you some of the data points we have on the agenda, other items to watch. Today, German manufacturing PMI will be hitting the Bloomberg terminal. It's a US Labor Day holiday, of course, we know, so markets are closed stateside. Tomorrow we get the US manufacturing PMI numbers, we get Euro area CPI, and that's really where the interest for Europe will lie, I suppose. We get retail sales on Thursday. We've got on Wednesday a China military parade, all of this coming on the back of the dialogue that we've been talking about between China and Russia and India and others. Thursday, we get retail sales, as I mentioned. And Friday, this is the big one, of course, payrolls. And we heard Jemana at the end of the last hour, Guy, making the point, of course, that it was the revisions to the July number, or that was where a lot of the shock has been, the fact that we thought we had jobs created, and then we realised that there were a couple of months that didn't create as many jobs as we'd anticipated.
And the next calculus on that comes a few days later. The whisper number is 75, the survey number is 75. I wonder whether those numbers change a little bit. And is 75 actually the right number to keep things reasonably steady at the moment? Anyway, payrolls Friday, one of the big events of the week. What else do you need to know as we start the week this Monday morning? Norway has picked the UK to supply warships for its navy in a £10 billion deal. It's the Nordic nation's biggest ever investment in its defence. Among the NATO members that border Russia, Norway had also considered France, Germany and the US for the contract. Delivery of the British Type 26 frigates, which are specifically designed to detect, track down and combat submarines, will start in 2030. Bloomberg has learnt that OpenAI is seeking to build a massive new data centre in India. The project could mark a major step forward in Asia for its Stargate-branded AI infrastructure push. Sources say the company is currently scouting local partners to set up a facility with at least 1 gigawatt of capacity. The exact location and timeline of the project remain unclear. And Indonesian stocks have tumbled by the most in nearly 5 months, hit by growing concerns over political instability in Southeast Asia's biggest market. President Prabowo Subianto cancelled a trip to China following the unrest, and demonstrators targeted the homes of Indonesia's finance minister and several lawmakers. On Sunday, the president announced Parliament will remove hefty lawmaker perks that had been a source for ire for many protests, a source of ire for many protests. To us.
Protesters, yes, indeed. And we see that playing out on the streets and in the markets. Coming up on this programme, then, the UK's Parliament returns from its summer recess. We discuss challenges facing the country's economy and more. Plus, Chinese EV maker BYD reports a 30% plunge in quarterly profit. More on the cutthroat battle for EV market share. We thought they were one of the winners, but we'll get into that story. Up next, we will be live from China's summit in Tianjin as President Xi Jinping hosts Russia's Vladimir Putin and the Indian leader Narendra Modi. More on that summit coming up. If you have questions, if you want to get involved in these conversations, IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
That was, of course, the Chinese President Xi Jinping speaking at the Shanghai Cooperation Organization Summit, which is taking place just outside Beijing in Tianjin. Let's bring in Min Lo, who's there for us now on this summit that is taking place. I mean, in theory, these leaders look unified. They look like they are standing together and are against Donald Trump, the US president. How unified a group really is this?
Yes, the relevance of the SEO grouping has been under question for many years because it started out in 2001 as a security grouping to rival the likes of the NATO. But you look at some of its member countries, India and Pakistan have conflicts with each other. Iran was attacked by the US, and the SEO during these instances didn't really, do a good job in showing its effectiveness in intervening in some of these conflicts. So, of course, today it is billed as one of the biggest, in fact, the biggest SEO gathering in its history, something that China is very proud of. It's all over Chinese state media. It's a platform for President Xi to show that he has this global leadership among these countries of the global south. And we'll be looking out for the joint statement, if any, that comes out of this, and what is the tone that the group adopts, especially in reference to the US, and whether there is any framing of the conflict, the territorial conflicts, the terrorist attacks on India and Pakistan. Are they given equal weight in the joint statements, and whether there is any mention of Iran and the conflict in Gaza as well?
Min, switching to markets, it looks as if there's a lot of focus on tech, and some of that tech's getting a negative read across from US stocks on Friday. Other tech, like Alibaba, lifting Chinese stocks today because of the progress that Alibaba is making in AI. Talk us through that.
Yes, Alibaba really surprised markets with its earnings report, right? Revenue surging, really supported by its cloud computing business, helping to offset the price competition and the hit to the profit in the food delivery front. And we saw this surge in its stock prices, helping to lift the other chip stocks in China, including SMIC, Hua Hong, and broadly we continue to see this blazing rally on Chinese onshore markets. Markets really shrugging off the weak or the contraction in the PMI data that we got over the weekend. The private PMI actually expanded, and it shows you that China is starting to learn to live with these tariffs. And of course, we have Modi and Xi meeting over the weekend, suggesting this normalization of ties as President Modi announced that both sides will resume direct flights with each other. And some of these Indian companies with ties to China, they could set to benefit from the improved relations between China and India as well.
Min, thank you for the catch-up. Thank you very much indeed for the reporting. Min Lo joining us out of Tianjin. Let's carry on the conversation and connect this back to the markets that we're going to spend this week talking about. Alex Yekov is the head of G10FX strategy for Europe, BNP Paribas Markets 360. I just want to kind of connect what we've just been hearing about, what's happening out in Asia, what's happening in China right now, this gathering of India, China, Russia. These are the countries that have talked so much about de-dollarizing, finding an alternative to the global dollar system. You spend your life in this world. Do you see any progress? Is de-dollarization real in any shape or form?
Good morning. Thanks for having me on again.
We've held a bearish view for the majority of this year on the dollar and still look for euro dollar to trade to 120.
Yeah.
A reduction in dollar exposure from European investors in particular has been a core part of that view. And that was the main story for H1. So higher hedge ratios from European investors in particular. We think the drivers of dollar weakness are now shifting increasingly more towards the Fed, with the Fed more in focus. It's not to say the hedge ratio story is over by any means. We think it will continue. But the Fed is increasingly important for the dollar, and that means the FX rates correlation, which had broken down in the first half of this year, can reestablish itself, meaning weeks like this, where we have payrolls, are really key for the dollar.
But is the euro... people are talking about migrating away from the dollar or focusing back on Europe. Is the euro an alternative to the dollar? Are there tectonic shifts happening within FX at the moment? Or is it just interest rate differentials still dominate, growth rates still dominate? Are these still the things that drive what we are seeing in terms of the FX landscape at the moment?
We think it's a bit of both. Yes, traditional relationships are coming back, but those tectonic shifts that you mentioned, Guy, are still there. And within the FX universe, yes, we think euro is the most attractive currency to rotate into. Importantly, we're not calling for an asset rotation. We're not calling for US asset selling, European asset buying from global investors. We're calling for higher hedge ratios from European investors. So a reduction in dollar exposure that way.
OK, so let's stick with the dollar. We'll come back to more on the euro in just a moment, because I see that Christine Lagarde is speaking. But let's stick with the dollar and that link between FX and rates that you say that correlation is sort of coming back. So what should we be watching for? It's Monday, can't speak. What should we be watching for when it comes to Friday, when we get the payrolls data and we're looking at, maybe some more strength in payrolls than we thought, or maybe some weakness? And what is the reaction function in the dollar?
So I think the two, exactly like you say, Anna, are two separate questions. On the one hand, we look for a resilient payroll print of 90K with unemployment at 4.2. But the asymmetry for the dollar, we think, is to the downside. So let me break that down for you. For starters, the fundamental picture, as I just outlined, is already bearish dollars. But importantly, as labor supply has been coming off, so too has the break-even rate, so the level of job growth required to keep the unemployment rate stable, fallen. And that increases the chance of a soft or negative payroll print. Now, that negative or soft payroll print might not raise the unemployment rate, but it would optically be sufficient for the dollar to sell off. And that's kind of what the asymmetry for payrolls is all about in FX, even though our base case is for a resilient print.
And so does that mean that the euro gains as a result?
Yes.
Yeah, that's the euro. So, and I'm watching Christine Lagarde speaking this morning. She's speaking on other media at this point, and she's talking about, she's probably being asked about France, but trying her best not to mention France by name, I would imagine. But she's saying, I look very carefully at spreads. We need to see discipline in public finances. How much does any of that conversation around what's going on in bond markets, around widening spreads for France, around political unrest in France, how much does that cut through to the euro?
Not so much at this stage. When we look at 10-year OAT asset swaps, they're already trading above 100 basis points. So rates markets, as you say, already discount quite a lot. And parliamentary elections in France, to the extent that that's where we arrive, tend to have only a short-lived impact on the euro. Last year is a good example of that, where the euro sold off a little bit into parliamentary elections, but pretty much reversed that move straight away after the elections were over. Presidential elections would be more impactful than parliamentary elections, but that's not something the market is talking about at this stage.
By the yen into a BOJ rate hike, is that the trade right now? It seems to be warming up.
We think it's that simple. The BOJ will be hiking rates in October, and the Fed will be in easing mode, so you have strong monetary policy divergence again. And it doesn't seem like the market expects an imminent LDP election.
Nope.
Plus, we think positioning in the yen is lighter than in some other currencies when we look at our models. So the stars are really aligning for a bottom end of the tight range, a break of the bottom end of the tight range that dollar yen's been in August.
So it's domestic drivers then? It's that BOJ anticipation of hikes at the BOJ that you think that drives the yen? Because others say, look elsewhere, look at the tensions between the Fed and the US government, look at what's going on in France and other areas of political uncertainty that maybe drive into the yen. I suppose both could be true.
Exactly. I think both are true. I think the main driver is monetary policy divergence, and all the other factors that you mentioned just add to the bearish dollar yen story.
OK, Alex, thank you very much. Thank you for joining us. Alex Yakov, head of G10 FX strategy for Europe at BNP Paribas Markets 360. It's going to be a busy week for Alex and anybody in FX, of course, with the payrolls data breaking on Friday. Before that, we get inflation data out of the Eurozone, just expecting that to come in at 2%. So as it was and as it is targeted, that'll be the conversation tomorrow, perhaps. Coming up on the programme, we'll focus in on the UK. Parliament returns from recess. We'll discuss the challenges facing Prime Minister Keir Starmer. Peel Hunt economist Callum Pickering joins us. Challenges for Keir Starmer, challenges for his Chancellor as well, in terms of that budget that is coming up and a lot of expectation around tax hikes. Is that overdone? Should we be expecting that to come to pass? We will talk about the UK next. This is Bloomberg. Welcome back. 30 minutes until the start of equity trading for Europe. Not for the United States, of course. It's Labour Day holiday there, so we will be without probably some volume as a result. But the futures picture looks like this. Pretty flat for London. We'll talk about the UK and the broader macro context in just a moment. The CAC 40 futures suggesting a little bit of upside, continuing perhaps to rebound a little from what we saw last week. Of course, we have negativity around tech stocks in the US on Friday and into the Asia session as well, but maybe that doesn't cut through much here in Europe. We could see weakness, as Guy was mentioning at the top of the programme, in London as a result of the weakness in the iron ore price. But then copper is higher, so mixed picture there. Let's talk about the bond markets. We're watching to see what happens, of course, again, because of the political uncertainty in France. Not because there's a huge amount of news flow, but just because that is where the market is paying attention right now in terms of European bonds. And we're at 3.53% on the French 10-year yield right now.
Is summer over? Kind of feels like it. Will be tomorrow. The Americans will be back. Labour Day holiday behind us. And today, here in the UK, Parliament returns from its summer recess. Prime Minister Keir Starmer is facing multiple domestic challenges after a summer which has seen asylum protests, tumbling government poll ratings and fresh surges in inflation. Joining us to wrap all this good news together is Bloomberg's Alex Morgan. Now what?
Yeah, well, Guy, where to start? Let's start with a poll, shall we? A poll of polls, looking across a composite poll that Bloomberg's put together, looking across the main pollsters, and this puts the Reform Party well out ahead on 28%. Labour trailing on 20%, the Conservatives on 18%. Now, that chart, if you like, is the backdrop to the start of this new parliamentary session. You can see there that now we're looking at their YouGov survey looking at Keir Starmer's favourability ratings. Now, Labour really are going to be wanting to sort of play the long game here. 4 years until a general election must be called. A lot of what Labour promised at the last election, making people feel better off, you know, they've had a lot of headwinds on that front, so you can imagine the governing Labour Party wanting to sort of push this along. Over the summer, though, Reform have been almost every single week out with another press conference. Nigel Farage, I think it's fair to say, has been setting the political weather on the issue of immigration and asylum across the summer. And that is a hot-button issue for politics in the UK, certainly for voters. We're looking ahead to the autumn as well. It's going to be a very interesting parliamentary session. We've got all the parliamentary party conferences coming up. We've got, starting off with Reform, with a record turnout from business leaders there. Then, of course, moving through to Labour, Liberal Democrats, and finally the Conservatives. Now, for the Conservatives, of course, who were in power for 14 years...
Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. President Xi Jinping hosts Russia's Vladimir Putin and Indian leader Narendra Modi, resetting relations for the three countries facing pressure from the US administration. The legal fight over President Trump's global tariffs deepens after a federal appeals court rules the levies were issued illegally, extending the chaos in global trade. And French Prime Minister François Bayrou acknowledges that talks with political parties may fail to save his government from being ousted. Opposition parties talk down the prospects for their support.
1st of September, the American markets are out for the obviously misnamed Labor Day. They're on holiday. I just point that one out. But elsewhere, there's actually a few interesting things happening this Monday morning. European futures are a little bit positive, but the story's not there. The futures are out in Asia, because that certainly is the story being delivered by Alibaba. It is pointing to a strong future in AI. That's where the narrative is shifting at the moment. How does that affect maybe US tech multiples going forward from here? Alibaba, on the back of its numbers, up by nearly 19% on its Hong Kong listing. Euro-dollar fairly flat, but we're up. The dollar's generally down, kind of on the back foot. The real story elsewhere in other markets, though, is also in what is happening in gold and silver. Silver's through 40. Gold is chasing a fresh record high. We've got all of that to talk about. The countdown to the opening trade starts right now. Monday morning, good morning. Lots to talk about, despite the fact that the American markets aren't with us for today. They will be back tomorrow as we work our way towards the end of the week. And, of course, the NFP number, which we're all on tenterhooks waiting for. But the geopolitical spotlight now turns firmly to China. It was there yesterday. It's there today. Over the next few days, it will be there as well. Because global leaders are gathered there. Obviously, this is not Western leaders. This is China, India, Pakistan, Russia. Lots of really interesting countries coming together. In theory, they all look very united because they don't like Trump. But
yes.
Are they as united as they appear?
Yes, nothing like a common challenge to bring people together, and that seems to be what's happening here. So this is the Regional Security and Economic Summit, as you say, taking place in China. We had some of those meetings yesterday, some of them continuing today. So China has met with India, and India has met with Russia. So all of these meetings carry on. But the big picture around this is, as you say, the role that the Trump administration is playing here, even though, of course, it is not on the ground. But criticising India's relationship with Russia in particular, and the fact that there's that oil trade that goes on, that's been a big topic. And so the extent to which the Trump administration's policies are having this sort of unintended or maybe even intended consequences is interesting to watch.
I think the nuance is really important here. It's really interesting. Narendra Modi went to Japan before he went to China, just to kind of maybe keep a few balls in the air at the same time, not putting all his eggs in one basket. How many more of these can I deliver? But I think he's being really careful. And he's also not sticking around for the military parade, which is going to be taking place as well.
He talked to Zelensky as well before meeting Vladimir Putin, which chimes in exactly with the theme you're
so I think he's been quite careful. So this is my point, really, about the fact that this is not all it appears. This is a loose gathering of global leaders that don't particularly like Trump, but not quite so sure about each other either. Yeah. So you just wonder whether or not actually we read too. There's a danger, I think, in reading too much into this.
Right. Yes, and in fact, maybe they are keeping options open. Let's transition into the part of this conversation that takes us into how the Chinese economy is doing. We've had pretty mixed data out of China over the weekend. The official PMI looking kind of sluggish. The more private sector-facing PMI looking more positive. In fact, beating every estimate out there. Commodities are responding divergently to that. We've got copper prices going higher. We've got steel and iron ore prices coming down. So it seems we're still struggling to get a decent reading on what is happening in China. But we're coming off a really strong run for the Chinese equity market. The CSI 300 in the month of August up by 10%.
Let's talk about the tech stocks in just a moment. Just with the metals, they've had a good run recently as well, so I think that needs to be borne in mind too. And just keep an eye on the effect that could have on the European miners, particularly the London miners, first thing this morning. The tech stock story, you bring up what's happening in equity markets. Baba's up. The Hong Kong listing, US listing obviously closed today. The Hong Kong listing's up really strongly on the back of this, which I think is fascinating. This is a stock that trades on circa 15 times. Amazon, which I think is probably the nearest competitor in the United States, trades on 34 times. And there's all this kind of AI story that's swirling, beginning to bubble up in China, beginning to gain some traction. Yes, it's not there. Yes, it's not able to compete directly, with the US.
Yeah.
But the US multiples, do they really stack up when the rest of the world is coming for the same business and is very good generally at commoditizing it? That's a question that I think is going to be very pressing. Going into the end of this year. So Bubba, I think, is a really interesting trade to watch out for. Let's talk about another trade that we're watching out for as well, and that is what is happening with all this tariff turbulence. The headline is US trading partners are dazed and confused. I'm not sure. I'm not that dazed or confused about what is happening here. Trump, the Liberation Day tariffs have been declared illegal twice now. You initially had the International Trade Court ruling them illegal back in May. Now you've had a federal appeals court ruling that they're illegal as well. Basically, this is the idea that tariffs are meant to be the designated area of Congress, and Trump is using emergency legislation to get round that. Ultimately, though, we're still in the same place.
Yeah.
Supreme Court is going to rule at some point. The US administration doesn't have to file until October. The tariffs are still in place. They haven't taken them away. The court hasn't disbanded these tariffs, so they're still in place, so they can still collect this. It's likely the Supreme Court will take its time maybe to rule on this, so it could be into the beginning of next year before this changes. So nothing is going to change between now and probably the beginning of next year, so they're going to continue to collect these tariffs. And ultimately, all Trump has got to do is go to Congress and go, can you pass this piece of legislation? And they do that. Courts go away.
So I suppose our default thought, as we've seen other legal challenges, is this is an administration that will find other ways to get its way, to put its will in place in this particular area of policy. And so that maybe is why we are seeing quite muted response. I thought maybe we would see some response, but virtually nothing. I mean, if you look at US futures, of course, they're closed today, the US equity cash markets, but we've got futures, and they're really not doing very much, down 0.1% on E-minis. I will just flag, there's a lot going on in Asia, and we've talked about some of the tech rally. There's an area of strength there, but there's some weakness in other tech names coming under pressure. But we might not be dazed and confused, but to your point, maybe we are medium term a little more confused. Looking at South Korea, the Kospi and the Japanese Nikkei, both of those markets down, and that's tech read across from Friday. Yep. But is there also a question about whether trading partners who don't have trading deals in place might just kind of slow walk these things now to see where the land lies, and we end up in a period of prolonged uncertainty, I suppose, around trade?
But I think it was already uncertain anyway.
Trump I'm not sure there is a certain place ever on trade.
Trump shifts the goalpost on a daily basis on this whole story, as a result of which, did you have any certainty before? I'm not sure you did.
No.
Do you have any certainty now? You probably don't. I don't think it's changed very much. I think the expectation was that he was going to struggle legally with this, but would spin it out. And ultimately, he can go to Congress. That is the way of resolving this. Legislation is the way of resolving this. Will Congress go along with that? I don't know. But the Supreme Court thus far has largely sided with Trump. And he's got until October to file an appeal against this ruling.
Yeah, or to find a different way of doing it. Yeah.
And so the Supreme Court can then take its time. They stay in place, so nothing's going to change between now and the end of the year.
Let's talk about France, because here is another story that maybe has not changed over the weekend, but perhaps notable for that in itself. Yep. If you were looking for any signs that maybe these opposition parties were going to come round to support the Prime Minister for any reason whatsoever, you're not seeing it over the weekend. So the opposition parties are still talking tough, still not saying that they will support the Prime Minister. I was drawn to the Socialist words. I mean, all of the opposition parties have said, look, we're agreeing to meet with Beirut. But some of them are saying this is just a courtesy. There's nothing really to talk about. And the Socialists saying the only word I'm waiting to hear from Beirut, Prime Minister, of course, is goodbye. And that just sort of highlights where we are in this conversation. But then there's also this interesting front being opened up here. If the French Prime Minister feeling under attack, then he's certainly opening up a new area of offence, and that is around Italy, and talking about the Italians enacting what he calls fiscal dumping, essentially objecting to fiscal tools being used as a tool of competition.
Problems at home, blame somebody else.
Yes.
Okay? Usually quite a good tactic. Blame the Italians.
For poaching all the high net worth individuals.
That's obviously the reason why we've got so many problems at home. Seems like a fairly well-worn tactic by any government if they've got problems at home. It is clear that he is going to lose this vote at this point. So we're still in this kind of phase of not really understanding what comes next.
Yeah. I mean, he still thinks he has a chance, but I don't know what he thinks he's going to say this week that will change to turn it around. But he does still think he has a chance. I mean, there's 8 basis points now, Guy, between Italy and France, and I wonder if that's going into his thinking as to why he lashes out at Milan and Rome. Maybe this hurts in Paris.
I'm sure it does. But it doesn't change the arithmetic that he now faces, and it doesn't change critically the arithmetic that Macron faces. So what is Macron going to do? And we're all talking about Beirut this week, but Macron has to decide what he wants to do next. Does he want to appoint another Prime Minister? How does that change the calculus? Clearly, with the current Parliament, you are going to struggle to deliver anything that is meaningful. Does he have parliamentary elections, snap parliamentary elections? That has a huge risk associated with it. Does he call presidential elections? That's obviously his resignation, and he's gone. So I struggle to see what...
He sort of ruled out any of those calling election-type activities, hasn't he? But, these things have been a surprise in the past, so we'll wait and see.
I'm surprised that anybody's surprised that anything is... this is where we are. This doesn't look like it's changed very much over the weekends. Alex Yakov, BNP Paribas Markets 360, is going to be joining us very shortly to talk about all of this. I'm quite curious to get his take on kind of what's happening in China, and we'll get his take on that, plus also the dollar. We need to talk more about that. Callum Picker is going to join us from Peel Hunt, chief economist there. Why is the UK struggling as well? And portfolio manager Julius Baer will join us to talk about the markets, and Bronwyn Maddox is going to join us as well to talk a little bit later on about what is happening with the geopolitical narrative, firm eye again, as to what is happening out in China this week.
Let's tell you some of the data points we have on the agenda, other items to watch. Today, German manufacturing PMI will be hitting the Bloomberg terminal. It's a US Labor Day holiday, of course, we know, so markets are closed stateside. Tomorrow we get the US manufacturing PMI numbers, we get Euro area CPI, and that's really where the interest for Europe will lie, I suppose. We get retail sales on Thursday. We've got on Wednesday a China military parade, all of this coming on the back of the dialogue that we've been talking about between China and Russia and India and others. Thursday, we get retail sales, as I mentioned, and Friday, this is the big one, of course, payrolls. And we heard Jemana at the end of the last hour, Guy, making the point, of course, that it was the revisions to the July number, or that was where a lot of the shock has been, the fact that we thought we had jobs created, and then we realised that there were a couple of months that didn't create as many jobs as we'd anticipated.
And the next calculus on that comes a few days later. The whisper number is 75, the survey number is 75. I wonder whether those numbers change a little bit. And is 75 actually the right number to keep things reasonably steady at the moment? Anyway, payrolls Friday, one of the big events of the week. What else do you need to know as we start the week this Monday morning? Norway has picked the UK to supply warships for its navy in a £10 billion deal. It's the Nordic nation's biggest ever investment in its defence. Among the NATO members that border Russia, Norway had also considered France, Germany and the US for the contract. Delivery of the British Type 26 frigates, which are specifically designed to detect, track down and combat submarines, will start in 2030. Bloomberg has learnt that OpenAI is seeking to build a massive new data centre in India. The project could mark a major step forward in Asia for its Stargate-branded AI infrastructure push. Sources say the company is currently scouting local partners to set up a facility with at least 1 gigawatt of capacity. The exact location and timeline of the project remain unclear. And Indonesian stocks have tumbled by the most in nearly 5 months, hit by growing concerns over political instability in Southeast Asia's biggest market. President Prabowo Subianto cancelled a trip to China following the unrest, and demonstrators targeted the homes of Indonesia's finance minister and several lawmakers. On Sunday, the president announced Parliament will remove hefty lawmaker perks that had been a source for ire for many protests, a source of ire for many protests.
Protesters, yes, indeed. And we see that playing out on the streets and in the markets. Coming up on this programme, then, the UK's Parliament returns from its summer recess. We discuss challenges facing the country's economy and more. Plus, Chinese EV maker BYD reports a 30% plunge in quarterly profit. More on the cutthroat battle for EV market share. We thought they were one of the winners, but we'll get into that story. Up next, we will be live from China's summit in Tianjin as President Xi Jinping hosts Russia's Vladimir Putin and the Indian leader Narendra Modi. More on that summit coming up. If you have questions, if you want to get involved in these conversations, IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
For over 147 years, Bgrim has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
That was, of course, the Chinese President Xi Jinping speaking at the Shanghai Cooperation Organization Summit, which is taking place just outside Beijing in Tianjin. Let's bring in Min Min Lo, who's there for us now on this summit that is taking place. I mean, in theory, these leaders look unified. They look like they are standing together and are against Donald Trump, the US president. How unified a group really is this?
Yes, the relevance of the SEO grouping has been under question for many years because it started out in 2001 as a security grouping to rival the likes of the NATO. But you look at some of its member countries, India and Pakistan have conflicts with each other. Iran was attacked by the US, and the SEO during these instances didn't really, do a good job in showing its effectiveness in intervening in some of these conflicts. So, of course, today it is billed as one of the biggest, in fact, the biggest SEO gathering in its history, something that China is very proud of. It's all over Chinese state media. It's a platform for President Xi to show that he has this global leadership among these countries of the global south. And we'll be looking out for the joint statement, if any, that comes out of this, and what is the tone that the group adopts, especially in reference to the US, and whether there is any framing of the conflict, the territorial conflicts, the terrorist attacks on India and Pakistan. Are they given equal weight in the joint statements, and whether there is any mention of Iran and the conflict in Gaza as well?
Mimin, switching to markets, it looks as if there's a lot of focus on tech, and some of that tech's getting a negative read across from US stocks on Friday. Other tech, like Alibaba, lifting Chinese stocks today because of the progress that Alibaba is making in AI. Talk us through that.
Yes, Alibaba really surprised markets with its earnings report, right? Revenue surging, really supported by its cloud computing business, helping to offset the price competition and the hit to the profit in the food delivery front. And we saw this surge in its stock prices, helping to lift the other chip stocks in China, including SMIC, Hua Hong, and broadly we continue to see this blazing rally on Chinese onshore markets. Markets really shrugging off the weak or the contraction in the PMI data that we got over the weekend. The private PMI actually expanded, and it shows you that China is starting to learn to live with these tariffs. And of course, we have Modi and Xi meeting over the weekend, suggesting this normalization of ties, as President Modi announced that both sides will resume direct flights with each other. And some of these Indian companies with ties to China, they could set to benefit from the improved relations between China and India as well.
Mimin, thank you for the catch-up. Thank you very much indeed for the reporting. Mimin Loh joining us out of Tianjin. Let's carry on the conversation and connect this back to the markets that we're going to spend this week talking about. Alex Yekov is the head of G10FX strategy for Europe, BNP Paribas Markets 360. I just want to kind of connect what we've just been hearing about, what's happening out in Asia, what's happening in China right now, this gathering of India, China, Russia. These are the countries that have talked so much about de-dollarizing, finding an alternative to the global dollar system. You spend your life in this world. Do you see any progress? Is de-dollarization real in any shape or form?
Good morning. Thanks for having me on again. We've held a bearish view for the majority of this year on the dollar and still look for euro dollar to trade to 120.
Yeah.
A reduction in dollar exposure from European investors in particular has been a core part of that view. And that was the main story for H1. So higher hedge ratios from European investors in particular. We think the drivers of dollar weakness are now shifting increasingly more towards the Fed, with the Fed more in focus. It's not to say the hedge ratio story is over by any means. We think it will continue. But the Fed is increasingly important for the dollar, and that means the FX rates correlation, which had broken down in the first half of this year, can reestablish itself, meaning weeks like this, where we have payrolls, are really key for the dollar.
But is the euro... people are talking about migrating away from the dollar or focusing back on Europe. Is the euro an alternative to the dollar? Are there tectonic shifts happening within FX at the moment? Or is it just interest rate differentials still dominate, growth rates still dominate? Are these still the things that drive what we are seeing in terms of the FX landscape at the moment?
We think it's a bit of both. Yes, traditional relationships are coming back, but those tectonic shifts that you mentioned, Guy, are still there. And within the FX universe, yes, we think euro is the most attractive currency to rotate into. Importantly, we're not calling for an asset rotation. We're not calling for US asset selling, European asset buying from global investors. We're calling for higher hedge ratios from European investors. So a reduction in dollar exposure that way.
OK, so let's stick with the dollar. We'll come back to more on the euro in just a moment, because I see that Christine Lagarde is speaking. But let's stick with the dollar and that link between FX and rates that you say that correlation is sort of coming back. So what should be we be watching for? It's Monday, can't speak. What should we be watching for when it comes to Friday, when we get the payrolls data and we're looking at, maybe some more strength in payrolls than we thought, or maybe some weakness, and what is the reaction function in the dollar?
So I think the two, exactly like you say, Anna, are two separate questions. On the one hand, we look for a resilient payroll print of 90K with unemployment at 4.2, but the asymmetry for the dollar, we think, is to the downside. So let me break that down for you. For starters, the fundamental picture, as I just outlined, is already bearish dollars. But importantly, as labor supply has been coming off, so too has the break-even rate, so the level of job growth required to keep the unemployment rate stable, fallen. And that increases the chance of a soft or negative payroll print. Now, that negative or soft payroll print might not raise the unemployment rate, but it would optically be sufficient for the dollar to sell off. And that's kind of what the asymmetry for payrolls is all about in FX, even though our base case is for a resilient print.
And so does that mean that the euro gains as a result?
Yes.
Yeah, that's the euro. So, and I'm watching Christine Lagarde speaking this morning. She's speaking on other media at this point, and she's talking about. She's probably being asked about France, but trying her best not to mention France by name, I would imagine. But she's saying, I look very carefully at spreads. We need to see discipline in public finances. How much does any of that conversation around what's going on in bond markets, around widening spreads for France, around political unrest in France, how much does that cut through to the euro?
Not so much at this stage. When we look at 10-year OAT asset swaps, they're already trading above 100 basis points. So rates markets, as you say, already discount quite a lot. And parliamentary elections in France, to the extent that that's where we arrive, tend to have only a short-lived impact on the euro. Last year is a good example of that, where the euro sold off a little bit into parliamentary elections, but pretty much reversed that move straight away after the elections were over. Presidential elections would be more impactful than parliamentary elections, but that's not something the market is talking about at this stage.
By the yen into a BOJ rate hike, is that the trade right now? It seems to be warming up.
We think it's that simple. The BOJ will be hiking rates in October, and the Fed will be in easing mode, so you have strong monetary policy divergence again. And it doesn't seem like the market expects an imminent LDP election.
Nope.
Plus, we think positioning in the yen is lighter than in some other currencies when we look at our models. So the stars are really aligning for a bottom end of the tight range, a break of the bottom end of the tight range that dollar yen's been in August.
So it's domestic drivers then. It's that BOJ anticipation of hikes at the BOJ that you think that drives the yen, because others say, look elsewhere, look at the tensions between the Fed and the US government, look at what's going on in France and other areas of political uncertainty that maybe drive into the yen. I suppose both could be true.
Exactly. I think both are true. I think the main driver is monetary policy divergence, and all the other factors that you mentioned just add to the bearish dollar yen story.
OK, Alex, thank you very much. Thank you for joining us. Alex Yakov, head of G10 FX strategy for Europe at BNP Paribas Markets 360. It's going to be a busy week for Alex and anybody in FX, of course, with the payrolls data breaking on Friday. Before that, we get inflation data out of the Eurozone, just expecting that to come in at 2%. So as it was and as it is targeted, that'll be the conversation tomorrow, perhaps. Coming up on the programme, we'll focus in on the UK. Parliament returns from recess. We'll discuss the challenges facing Prime Minister Keir Starmer. Peel Hunt economist Callum Pickering joins us. Challenges for Keir Starmer, challenges for his Chancellor as well, in terms of that budget that is coming up and a lot of expectation around tax hikes. Is that overdone? Should we be expecting that to come to pass? We will talk about the UK next. This is Bloomberg. Well, 30 minutes until the start of equity trading for Europe, not for the United States, of course. It's the Labour Day holiday there, so we will be without probably some volume as a result. But the futures picture looks like this, pretty flat for London. We'll talk about the UK and the broader macro context in just a moment. The CAC 40 futures suggesting a little bit of upside, continuing perhaps to rebound a little from what we saw last week. Of course, we have negativity around tech stocks in the US on Friday and into the Asia session as well, but maybe that doesn't cut through much here in Europe. We could see weakness as Guy was mentioning at the top of the programme, in London as a result of the weakness in the iron ore price. But then copper is higher, so mixed picture there. Let's talk about the bond markets. We're watching to see what happens, of course, again, because of the political uncertainty in France. Not because there's a huge amount of news flow, but just because that is where the market is paying attention right now in terms of European bonds. And we're at 3.53% on the French 10-year yield right now.
Is summer over? Kind of feels like it. Will be tomorrow. The Americans will be back. Labor Day holiday behind us. And today here in the UK, Parliament returns from its summer recess. Prime Minister Keir Starmer is facing multiple domestic challenges after a summer which has seen asylum protests, tumbling government poll ratings and fresh surges in inflation. Joining us to wrap all this good news together is Bloomberg's Alex Morgan. Now what?
Yeah, well, Guy, where to start? Let's start with a poll, shall we? A poll of polls, looking across a composite poll that Bloomberg's put together, looking across the main pollsters, and this puts the Reform Party well out ahead on 28%. Labour trailing on 20%, the Conservatives on 18%. Now, that chart, if you like, is the backdrop to the start of this new parliamentary session. You can see there that now we're looking at their YouGov survey looking at Keir Starmer's favourability ratings. Now, Labour really going to be wanting to sort of play the long game here. 4 years until a general election must be called. A lot of what Labour promised at the last election, making people feel better off, you know, they've had a lot of headwinds on that front, so you can imagine the governing Labour Party wanting to sort of push this long. Over the summer, though, Reform have been almost every single week out with another press conference. Nigel Farage, I think it's fair to say, has been setting the political weather on the issue of immigration and asylum across the summer. And that is a hot-button issue for politics in the UK, certainly for voters. We're looking ahead to the autumn as well. It's going to be a very interesting parliamentary session. We've got all the parliamentary party conferences coming up. We've got, starting off with Reform, with a record turnout from business leaders there. Then, of course, moving through to Labour, Liberal Democrats, and finally the Conservatives. Now, for the Conservatives, of course, who were in power for 14 years, I think it's fair to say their challenge for this parliamentary session is getting heard. Really, I mean, I've talked to you there about Reform on 28 in the poll, this poll of polls, Labour on 20%, Conservatives on 18. Kemi Badenoch, the leader of the Conservatives, really trying to make sure now that she can get heard. Nigel Farage sort of parked his tanks on the Conservatives' lawn on some key topics, and all of this, of course, coming as well at the time we'll be having the autumn budget from Rachel Reeves. I know we're going to go into that in just a moment, talking about the economic pressures on the government at a time when Keir Starmer over the summer had defended Labour's stewardship of the economy, saying that he'd overseen a rise in wages and, of course, the Bank of England having done interest rate cuts. That, of course, is coming at a time when we have seen a rise in consumer prices. The Bank of England expecting inflation to peak at 4%, albeit coming down slightly after that. So what are the challenges? Guy, I think the challenges for the Labour Party are regaining a sort of the front foot in the conversation on a whole number of issues. Immigration, of course, is a real big one, but then, of course, you'll be having the economic picture, forecasts, and then the budget as well. So it is a busy old time, party conferences, and Donald Trump appearing for his state visit, sort of nestled in the middle of all that.
Nestled.
Nestled.
That's how we're going to describe it. It's going to be nestled.
Nestled.
Sounds cosy. Alex, thanks very much. Bloomberg's Alex Morgan there with a rundown of some of the challenges facing the UK administration. Let's stick with that theme. Callum Pickering joins us, Chief Economist at Peel Hunt. So, Callum, no doubt there are challenges. We'll spend a lot of, 2 months talking about the run-up to the budget. So there we are. What a thing to look forward to. So we've got all of that ahead of us, and no doubt there is a big fiscal challenge. But if we step back, what is the story that you're telling around the UK? Because we've emphasised some of the negatives, but I know that the GDP prints earlier on this year actually came in a bit higher than had been anticipated by some. So what's the story you're telling?
Well, look, clearly there's a great deal of pessimism, and a lot of it is justified. Without question, the UK has made for a decade a succession of policy mistakes which have cost growth, productivity, profits and wages. No question. Then let's look at the data. Data for the first half of the year, real GDP growth, 2.2% annualised. That's pretty good. By G7 standards, that's pretty good. Only the US beats the UK in that respect. Recent PMIs, 53. Composite, that's not bad by any stretch. Inflation's a little bit high, no question. That's partly a policy mistake, but it also reflects decent domestic demand. People are willing to spend. And then across the private sector, actually, the situation's not bad. Banks are overcapitalised. Businesses have never had more cash in their balance sheets, and investment's growing. Corporate debt levels are low. You make the same argument for households. And what people forget is, just now, we're facing the tightest part of the monetary policy cycle. So from here, actually, monetary policy gets substantially easier because of the interest rate cuts that we've had. And so you look at the underlying data and you say, actually, this is an economy that's not doing great by UK standards, but it's actually not all that bad. And then you say, well, what happens next? And that's where you get panic.
Yeah, and that's where you get to the difficulty, I suppose, because even if the growth story has not been as bad as it could have been over the last 6 months or so, that's not good enough, I assume, to fix the fiscal headwinds that Rachel Reeves is facing.
Well, we need a sense of perspective when it comes to the fiscal headwinds. So a few things that I think are misunderstood. First is borrowing so far this year, completely in line with the OBR's forecast. You can look at that data online. We've not had any borrowing surprises. Second thing is borrowing costs. 10 years today, roughly where they were in March. The 30-year is higher by about 30 basis points. But when you bake all of that in, that's probably 5-6 billion extra. And then the question is, what does the OBR do with the forecast? The danger is that the OBR downgrades the longer end of the forecast. It's expecting about 1.7, 1.8%.
Because it has some punchy productivity expectations, right?
It does, but actually in the first half of the year, actually basically for the past 2 years, the UK has been growing around the long end of the forecast. So since November 23, UK annualised growth's been around 1.8%. That's roughly what the OBR is. So do you make that argument? And then for this year, don't forget the OBR forecasts 1% growth.
So the IMF's
We're
not required,
more likely to get to 1.3, 1.4. What's that, sorry?
The IMF's not required.
The IMF's certainly not required in the UK's case. The situation's... That's hyperbole, without question.
So why is the why is this happening? Okay. If the numbers you talk about are accurate, because I'm also looking at bond yields.
Yep.
The UK is in a completely different position to its nearest peer group in terms of the yields that it's being charged right now. Why doesn't the market see what you're saying?
Well, the market does see what I say. The UK's bond yield is consistent with long-term expectations for growth, inflation, plus some term premium. And then you have some structural factors. So let's take the UK 10-year rate. What are we trading at today? 4.7%?
4.7, yeah.
Bank of England's inflation target's 2%.
Yep.
Normal economic growth in the UK, let's call it 1.7, 1.8%. Maybe you want to add 50 basis points of term premium in there. OK, that's getting you to, what, 4, 5, something like that? Maybe you're 20 basis points higher, reflecting less liquidity at the long end, the fact that it's the smallest pool of debt among all reserve currencies. There's no natural buyer in the case that there is in Japan. And the UK's followed bad economic policies, which have produced too much inflation, but that's likely to be temporary. Fast forward a year from now, once inflation has probably got a 2 handle, and a lot of this at the long end of the curve will have come out. We don't have a lack of demand for our debt. We just don't like the price that we're paying for it. The price that we're paying for it is due to the policy mistakes, which are twofold. Too much inflation, too much hits to supply side. And then when it comes to the specific issue of fiscal policy, Labour's fundamental problem is that it's said half of spending we fail to touch, welfare, half we can't because it's protected, it's NHS and all the rest of it, and then 2/3 of the tax base, income tax, VAT and employee national insurance, we're not going to touch this. And so they've painted themselves into a corner.
How does Rachel Reeves get ourselves out of it, though? Get us out of it. Get us out of it.
They can't do anything without paying a significant political price at this point. What matters for fiscal policy is not real growth, but nominal growth, actually. And if you look at on that metric, the UK has got sufficient nominal growth to balance a budget. Let's say 2% real plus, let's say, 3.5. You could raise income taxes by a penny on the 21...
You're not allowed to, though, because they said they weren't.
Well, exactly. So that's the political cost. But the economics of that actually would be fairly straightforward. Right? UK households, for the most part, are not lacking funds. They're lacking the confidence to spend the funds that they have. Real wage growth has been a bit north of 3% for the past 2 years. Inflation adjusted. Savings rates, 10.5% in the recent quarter. We are an economy that's afraid.
So just to be clear, you think gilts are a massive buy right now?
I think gilts are probably 20 or 30 basis points too high across the curve. And I think...
In a year's time?
Yeah. As an economist, maybe you don't have...
No. But if you just added up the arithmetic on it, if inflation comes down...
Yes.
You take that component out of the arithmetic you just gave us, then gilts are coming down a long way.
If you have confidence that inflation is coming down, of course, the risk is that you have inflationary policy choices at the current budget. This idea of a moron premium is actually right. What I'm saying to you is, based on fundamentals, UK gilts look too high. If you look at the policy choices that government might make, then the premium might be justified.
Callum, it's great to see you.
It's always good to chat. Thank you so much.
Thanks. Fantastic. Callum Pickering, Chief Economist at Peel Hunt. Thank you very much indeed. Coming up, we'll continue tracking defence stocks after Germany's Chancellor says he sees the war in Ukraine dragging on with no clear end in sight. We'll talk about that and all the other stocks you need to be watching this quiet Monday morning. I'm joking, there's lots going on out there. This is Bloomberg. First of September, good morning. 15 minutes until the opening trade here in Europe. European futures broadly positive this morning, not up by much. You're going to see a light volume session with the US out for the day. It is the misnamed Labor Day holiday coming up a little bit later on in the United States. I guess it's already started. Let's turn to what we're seeing on the tariff narrative, because this is front and centre as well this morning. US trade partners have been left scratching their heads a little after President Trump's global tariffs were found to be illegal by the US Appeals Court Friday. For more on this story, we're joined by our trade czar, Brendan Murray, in London. Good morning. Did this change anything?
It changed the dynamics of the economic impact of these tariffs in a couple of different ways. If you're a company and you were paying these tariffs, you are now left with many more months of uncertainty, trying to figure out, should you restock your inventories? Yep. Should you wait and see, or should you should you rush to refill your inventories? And for the countries that President Trump has been negotiating with, suddenly you've got a few more cards in your hand that you can play against him if, in fact, the court does strike these tariffs down. He has plenty of other mechanisms to use tariffs.
Yep.
It's not going away. The tariffs will still be with us, but there will be different kinds of tariffs. They'll be more targeted than the blanket tariffs that he's imposed through this
because this is about the Liberation Day tariffs, isn't it?
Exactly.
Yeah.
Exactly.
Yes, about Liberation Day tariffs and about some others, it would seem, as well, but a bit unclear as to some of the details to which it would apply to. So, Brendan, do we assume then that if he can't do it this way, if the President can't do it this way, he'll find another way to generate tariff revenue, if at the end of the day that is the goal? Because market response is very muted today. I mean, I know it's a public holiday in the States, so you might expect that, and we don't have bond markets open, so we can't see what's happening there. But, you know, it's possible that the long end of the bond curve could get very nervous about not getting that tariff revenue. But US futures are flat, and there's no sense of panic there.
We've heard the Trump administration say that they have a plan B for this. It's these other tariffs, the 232 tariffs. They've had the 301s in place on China for several years now. They can go very broad with those 232 tariffs, the pharmaceutical tariffs, the chips tariffs, the copper tariffs, the lumber tariffs, all these other sectoral tariffs that they can use, and they can use them very broadly. They can hit all sorts of things with tariffs on semiconductors. Everything every piece of consumer electronic has chips in them, and the same holds true with pharmaceuticals. So they can go pretty broad with these tariffs if these Liberation Day duties do get struck down. They can still generate plenty of revenue, maybe not as much as the $300 or $400 billion a year that they think they're going to get going forward from reciprocal tariffs, but they can definitely pay for some of the tax cuts, the spending that they've implemented with those other more legally tested.
Yeah. So other governments shouldn't assume they're going to get a refund anytime soon.
I wouldn't think that, and the Trump administration has said publicly, our trading partners know that if these other tariffs go away, that we still have some leverage through these other 232 tariffs to hit them with.
Okay, Brendan, thank you very much. Bloomberg's trade czar, Brendan Murray. That's a great title. Let's talk about the markets. Joining us now, Bloomberg's Moena Coniam with the latest on where markets might head from here. And big picture, I suppose, we're kind of in limbo. US futures are pretty flat. European futures look kind of mixed. But Asia's been weak as a result of selling of tech stocks, apart from Alibaba. There's a lot of mixed signals going into today's European session, I suppose, Moena.
Yeah, well, we are definitely seeing a bit of a rout there coming over from Friday with the AI stocks leading in the US, and we're seeing that coming through in Asia this morning as well. I think one of the things I've been looking at is that I think that's going to be quite good for the FTSE 100 because we saw them actually have a pretty rough week actually last week, but it's they outperformed European stocks they dropped 1.4%. That was their worst week since April, but it wasn't nearly as bad as what we saw in Europe and in the US. And actually, with this sort of flight from risk that we're seeing spread around with the uncertainty, the UK's kind of consumer-heavy, defensive-heavy stocks are likely to benefit more, as well as there's a big rise in gold. And a lot of that uncertainty that we're seeing, particularly from the US Fed, what's happening with these tariff policies, helping precious metals, which again helps some of those FTSE 100 listed precious metal miners. So, after a difficult week this week, I think things have really aligned for it to perhaps do a little bit better this week and perhaps return to that ascent we'd seen to consecutive record highs earlier.
We're just waiting for payrolls. Is that what we're doing all week?
There is certainly that uncertainty and that overhang, and actually things are also quite stagnant, I think. I think when you're looking at the fixed income market in particular, we've seen yields, particularly long-dated yields, really rising across the board. And so, one of the things we've been talking about is France, elevated political uncertainty there. But we're also seeing it in the gilt market because there's a lot of uncertainty about what's coming up in autumn's budget, but that's quite a way away. So there's generally a sense that a lot of these catalysts are a little further out. And of course, as you say, with the US, we're waiting for payrolls. There's so much uncertainty about what's happening with the Federal Reserve and, also with tariff policies that I think everybody's kind of in wait-and-see mode. But at the same time, nothing's really alleviating that elevated risk profile.
Moana, we were just talking about how it's a long time to wait until the budget. It's a good 2 months, isn't it? Now, it might be roughly until we don't know the date exactly, I think. So we got 2 months of waiting to find out whether we get tax rises in the UK. It feels like the narrative can't just be that for 2 months.
No, absolutely. I think one of the things we'll be watching closely, though, is actually what the Bank of England does this month. The prospects of them cutting rates has been significantly reduced, actually. They sounded a bit more hawkish in their last meeting. Markets are now pricing in less than a 30% chance of a rate cut. But whatever is going to help that bond market heightened risk, could only really come from the Bank of England, because I think there's so much uncertainty with regards to what's in this budget. And actually, even though usually talks of tax cuts would be beneficial, perhaps, and reassure the bond market, I think when they seem so kind of wide-ranging, that's actually creating more anxiety just about the economic state that's faced by the government.
Moana, great stuff. Thank you very much indeed. Bloomberg's Moana Conningham joining us. Remember, you can follow all the thoughts of the whole team. MLIV Go is the function on your Bloomberg. Let's turn to the stocks that we're going to be watching this Monday session. Defence stocks firmly in focus. Chloe Melly has the details.
Good morning, guys. So, let's keep an eye on the defence stocks today, and that is after German Chancellor Friedrich Merz said that he expects kind of no end in sight for the war in Ukraine at this point, and he expects it to drag on. So this could potentially lift the shares of some of those key defence names. Obviously, Rheinmetall, which has been having a fantastic last 12 months, with shares up more than 200%, but also Italy's Leonardo, France's Thales, and the UK's BAE Systems. An additional boost for BAE is that Norway picked the UK as a supplier of warships, and that is a £10 billion deal. So we could see an additional boost there for BAE, and that obviously deepens the cooperation between Norway and the UK. Moving on to AstraZeneca in the pharmaceutical space. So AstraZeneca said that its hypertension pill reduces blood pressure by more than twice as much as standard treatment. And this particular drug is particularly important because it could potentially deliver $5 billion a year in sales. And we have already seen AstraZeneca outperform its peers GSK and Roche. It's outperformed. It started outperforming around this summer. We can see it there. So this could potentially widen the gap a little bit further for Astra. Staying in the UK and moving on to Tesco, we've got a new price target, a raised price target from JP Morgan for Tesco. It placed it on positive catalyst watch. It said that the momentum looks really solid, the growth outlook looks good. So we could see an extension of that good performance that we've seen over the last year, with shares up almost 19%. And overall, analysts are quite positive about Tesco. We have got 11 buys, just 2 sells, so definitely a stock to watch.
Chloe, thank you. Our equities reporter, Chloe Melly, with the stocks that she is watching this morning. It's 7:53 here in London, so we've got a few minutes then until the start of the European equity trading session. And I guess other things we are watching, along with the things that we were just hearing about there from Chloe, the mining stocks, we put those in focus all morning, haven't we, with the weakness we're seeing in iron ore and steel prices coming through the Asia session. Interesting posit, and a lot of that to do with stockpiles, apparently, and some of the data looking conflicted out of China. But then on the other side, copper is actually trading higher, so we'll watch to see how the miners deal with that.
Gold as well. Gold and silver stocks could be in focus as well this morning. Looks like we're going to have a fresh run at record. Silver's through 40. Gold looks like it's going to target that as well. The defence sector is in focus as well. The other kind of element that we just didn't talk about with the defence sector is VDL. Ursula von der Leyen's got some fairly precise plans, according to the FT, in terms of troop deployments into Ukraine, and that's being seen as a positive for European defence stocks. As the plans advance and it becomes clearer what could happen, you start to get an idea of how you would maybe price some of this stuff.
Yeah, some of the defence stocks retreated quite a bit, didn't they, on expectations that we were going to get closer to peace in Ukraine, and that has remained elusive, and we haven't got any sign of a meeting between Presidents Putin and Zelensky, and so we wait and backtrack some of those earlier moves.
Do you see tech stocks continuing to sell off? Some of that would have been captured Friday here in Europe. So names like ASML would have captured some of the weakness we saw back into the session Friday in the US. Does that continue, therefore, into Monday? We've certainly seen it in Asia, but I don't think the effect is going to be as dramatic maybe this Monday morning here in Europe. So that's how we are setting up for this Monday session. Remember, the United States is out. It is a Labor Day holiday over in the United States. We've got 5 minutes to the opening trade. It's likely to be, therefore, a quiet one from a volume point of view. There's going to be interesting stock stories, though, to focus on. Anyway, the open is next. This is Bloomberg. Monday, the 1st of September, good morning. European markets are about to open. They won't be opening with US markets. They're closed for the day. It's the Labor Day holiday over in the United States. Expect light volume as a result. Let's talk about Friday, though, because Friday was interesting, and it is going to see some carry through, maybe a little bit into the Monday session. This was the sell-off first thing. The blue line here is the sell-off we saw in the United States. Tech leading that. Asia's responded to that this morning, but Europe had largely already priced some of that in. We saw it before the end of the session, so some of that is already in the price this morning. So think about, therefore, the effect being a little bit more muted into names like ASML. Keep an eye on the defence stocks. We're going to talk about those in just a moment. This is how it's all shaping out into futures. It's going to be interesting to see kind of that defence stock story maybe coming through. Not seeing much of it in the London market this morning. Miners are going to be in focus there. You're not seeing much of it in Euro Stoxx 50 futures either. Where you are seeing an interesting trade, though, this morning is in CAC futures, rising a little bit, but not by much. And again, this is going to be a week in which we're going to see political turmoil over in France, once again dominating the agenda. Does it move markets? Remains to be seen.
Yeah, absolutely. Plenty of political volatility, whether that's translated into market volatility. Let's have a look at where we are then on some of the sectors and stocks that we're watching this morning, Guy. As you mentioned, defence is on the list, but let's start with pharma. We've had some interesting readouts from various drugs that are being tested right now. Novartis' Leqivo and Astra's hypertension pill yielding positive results. On the other hand, Bayer's Verigat failing to hit primary goals. So we'll keep all of those in focus. Defence stocks, as you mentioned, watching for Europe's plans with regards to Ukraine, watching BAE and other UK defence names on the back of that Norway news, and also Ørsted, Equinor pledging to take up its rights in that rights issue from the wind turbine maker. Guy.
OK, here we go. Time for Monday's session. September session is underway. Here we go. Let's give you some numbers. Time for the opening trade. This is what the picture looks like this Monday morning. FTSE 100 out of the gate, flat as a pancake. Nothing to be seen here. We'll wait and see whether or not we get a little bit of traction. But so far, not much traction to be had. Keep an eye on what is happening in the pharma space, the defence space. Keep an eye on what is happening with some of these tech names as well this morning. Broadly, the mining sector could be of interest too, though maybe a little bit more divergent in terms of the miners in the gold sector, silver sector, and maybe in the iron ore sector, going different ways. The IBEX is up by 0.2%. The CAC, as expected, outperforming initially, but actually you can see the FTSE 100 climbing now, so actually not outperforming. So we're up by circa 0.3% on both of those two markets. We'll wait for the DAX to get going in just a moment, the SMI as well. In the meantime, Anna's going to break it down from a sector point of view.
Yeah, absolutely. And I'm pleased that one of our colleagues decided to focus in on pharma this morning, because that does seem to be one of the areas that we're seeing some strength. So healthcare stocks stocks up by 0.5% this morning. And we talked about some of the positive results that we were seeing from various trials. So we see AstraZeneca, for example, up by 0.9%. So that's in the mix. We also see the grocery story, and I know Chloe was talking about Tesco, and we see that stock up by 2.7%. So there's some positivity around the grocery businesses, boosted at the price target for Tesco, boosted at JP Morgan. So that's something we are watching with regards to that sector. The banking sector not doing too badly. Technology pretty muted, and you were right, Guy, to suggest that this was largely in the price from Friday, because some of those big tech names in Europe were down by more than 2%. So it's interesting in itself that we're not seeing a bounce back from any of that selling. We're sort of living with those levels, but we're pretty flat now on technology, feeling that we may have priced in the negativity around Nvidia that we saw on Friday, during Friday's session over in the United States. Now, Basic Resources, another one that we discussed earlier on in the programme. Yep. Guy, we see Rio Tinto down around 1%, Anglo-American also weaker. Not everything is down, and some of the copper mining businesses are doing well, but that iron ore price weighing on some in the sector.
So Rio, in theory, when you think about Rio, you think about a copper producer, but it is down. In fact, the biggest points drag when it comes to the mining sector this morning, it's down 1%. So the story when it comes to what is going on with the iron ore, clearly a drag there. It's interesting, some of the luxury names are also fairly soft this morning. I wonder whether that's a read across again into what we're seeing in terms of the Chinese PMI data. So LVMH is down by 0.3%, Richemont is down by 0.2%. Now, those aren't big percentage moves, but in terms of the points drag, they're fairly high into the stock 600 this morning. So that's where you're certainly seeing some losses coming through. So it's interesting. Tech is actually, in terms of points, still quite a drag. ASML is still the biggest points drag this morning, down by circa 1%.
And you mentioned precious metals earlier. We see some positivity coming through there. We're up by actually 2% on the silver price overnight, and that is having an impact on some of the miners. So we've got these two different stories, or at least three different stories. Yeah. Fresnillo, which operates silver and gold mines, that's one business that's going higher. That's up by 2.7% today.
I wonder if that's... I don't know. Maybe I'm stretching here. I wonder whether that's having an effect on LVMH this morning and Richemont in terms of maybe the hard jewellery side of the business, hard luxury side of the business, whether there's an effect there as these prices go higher, whether or not that's something they can pass through to their customers. I don't know. I'm stretching a little bit. But defence names certainly are well bid. BAE Systems, Rolls, Rheinmetall, all trading strongly this week.
Yeah, and most sectors in positive territory, even if we haven't got much volume, probably because it is a US public holiday. Let us bring into the conversation Ando, portfolio manager at Julius Baer. Very nice to have you with us. Thank you for coming in. Let's start with the big picture then around these markets at this point. We're moving into September, which is usually, historically, a pretty tough month for stocks. Are you expecting it to be a tough month for stocks? We might get a rate cut in the mix.
Yeah, good morning, Anna. Good morning, Guy. And good morning, everyone. September tends to be, a volatile month for the market, seasonally speaking. That said, you take a step back. The backdrop for stocks have been very good. So in terms of the macroeconomy, we've avoided the worst case scenarios in terms of the fallout from the tariffs. In terms of the policy environment, we are seeing more rate cuts coming out of the US, that Federal Reserve pivot. So that backdrop for the stock market is very positive. We just came on the back of the earnings season. That's also been quite positive for the largest weight in the stock market in the US as well.
Do you expect volatility then in these markets? Because actually VIX has not been above, I think it's above, rarely spotted above 20 over the past 3 months. We seem to not be assuming that we're going to see much volatility in these markets. Is that a safe assumption going into September, do you think?
Yeah, there is a sense of complacency, I guess, in terms of that volatility figure that you just mentioned. In terms of positioning, we're still quite risk-on. So we are overweight equities. We added in June and July on the back of that changing backdrop that we're seeing, just the economy improving, the soft data improving, as well as the earnings season signaling still quite strong momentum so far.
Payrolls are coming up on Friday. If you get how important is a rate cut at this point for equity markets to keep moving to the upside? Because I'm struggling to see where the next catalyst obviously comes from, and maybe rate cuts are it. If you get a big payroll number, say you get 150k coming through on the payroll number, where's the number that takes September to zero in terms of expectations? Where's the number? If you get north of 100, do I take it down from being 25 to maybe 15 basis points being priced? How strong does that number need to be to disabuse us of the idea that the Fed should be cutting interest rates? And if so, how big a reaction do you get in equities if that were to be taken away? All of this is hypothetical, but it's a Monday morning and Friday feels like a long way away.
The idea of the rate cut is pretty well entrenched at this point. I think it will take a lot for the market to give up on hopes of rate cuts. This year we expect 3 more rate cuts. I think that's pretty close to consensus. So if we do get that pricing out of the dovish Fed, I think the market would not take it very well. But at the same time, I think it will take a lot. And if you think of the Federal Reserve and the committee, they are very sensitive to any changes in the labor market. It's not just the unemployment rate, it's the hiring intentions. They're looking at the broad set of indices.
Do you like US markets at these kinds of multiples? I was pretty shocked the first thing this morning. It's Labor Day in the States, but the Journal, the first thing I read online this morning, US markets hit dot-com era multiples. Are these kinds of headlines okay? Can we live with these kinds of headlines? Are we okay with these kinds of multiples? I know it's very concentrated, and I know earnings are holding up at the moment, but are we okay with these multiples?
There's definitely a sense of this wall of worry, the valuation debate coming back for the market in the US especially. I guess if you look at the top heaviness of the index and where the multiples are for those big stocks and the rest of the indices, you have extreme valuations more so in the rest of the indices, so in the S&P 493 if you like. So you have to be more careful in terms of your selection here, because in the top 7 stocks, in the largest stocks, the growth is still there, the quality, the story, the long-term secular story is still there. So you want to pick and choose and where you want to take more of a valuation risk and for longer-term growth.
We ask how important rate cuts are to stocks. We could also ask how important are rate cuts to precious metals and the gains they've been making of late, because we were used to talking about them in a geopolitical context and depending on the metal and industrial context. But now there seems to be a lot of people tying this to the Fed and talking about the gold and silver going higher as a result of our expectations of rate cuts. You're overweight gold, I think. Is that a trade you're happy to stick with?
We're still overweight gold. Gold has defied expectations because it's only recently that we're hearing more about these rate cuts. Rates have been quite high year to date, but yet gold has still worked on the back of the backdrop of uncertainty, the backdrop of tariffs. So I think there are multiple elements that could still play in favor for gold. That story around de-dollarization, that story of diversification away from U.S. assets and U.S.-denominated assets into real assets like gold and precious metals. I think that story still has legs, and therefore we still overweight the precious metals.
So that's the precious metals narrative. I mean, everything we've talked about seems quite calm. Is that right? Should we be going into the rest of the year thinking about a calm market backdrop? I think news can come at us fast. We know this.
Volatility has been low, but if you look at the market narrative, you've had periods of scare here and there. The labor report was a source of fear for the market. NVIDIA earnings last week was a source of fear for the market. So you have periods of scare, although it's a wall of worry. And I think the strong backdrop around the economy, the strong backdrop of the policy pivot, I think could be interesting for markets still.
Do I look elsewhere? Chinese markets are absolutely on a tear at the moment. The AI story is beginning to gain traction. Like Barba's just had an amazing session. Do I look elsewhere?
Outside of the US?
Yeah. Where are you looking right now? Where am I going to get my alpha? Is the outperformance going to come in the States, or is it going to come from different markets?
I think we've been diversifying portfolios away from that US stronghold of secular themes that we like. We've added to China early this year on the back of that pivot in fiscal policy, more of a stimulative stance from the government, more friendliness to the private sector. So that's earlier this year. More recently, we've also added to India. That secular story of growing demographic, a very strong domestic economy, less reliance on external factors, which means they're more insulated from tariffs, relatively speaking. So outside of the US, there are opportunities.
Are you adding? Sorry, are you adding more to those positions? Do you still like those trends? I guess China. Do you want to play in this recent bout of enthusiasm, particularly from domestic investors in China?
At the point of adding to China, it was still at quite low valuations. So we think it's a trading market. We think of the Chinese market now similar to Japan in the late 1980s, trading in a range. So every bounce and rallies, we need to understand the momentum and the underlying drivers.
Thanks very much. Anto, Portfolio Manager at Julius Baer. Thank you for joining us as we work our way, Guy, towards payrolls. That's going to be the big event of the week, of course. But in the meantime, it's a quiet day in terms of the volumes, no doubt, because we don't have the United States. how's the core six doing?
There's things to talk about. I'm not going to completely dismiss today. I appreciate that there are markets that are closed elsewhere around the world, but there's some interesting things happening. Core 6 looks like this. Rheinmetall is one of the names that stands out. ASML, there is still some weakness there, and that is, just from a points point of view, adding a little bit to the downside around Europe this morning. But as Anna says, it is a fairly quiet session. Pharma's looking good. Defence is looking good. Tech is looking less good. Let's dig into the details of all of that with Chloe Mellet.
Good morning, guys. So, yeah, as you said, quite positive movements in defence today. That's on the back of German Chancellor Friedrich Merz saying that he sees at the moment no end in sight to the war in Ukraine, but then also von der Leyen laying out precise plans, according to the EFT, for potential military deployments in Ukraine. All of that is feeding into quite positive story for that space this morning. BAE is also up the most out of all of those four, and that is also because it's benefiting from that, from Norway picking the UK as a supplier of warships, and that is a £10 billion deal. So it's also benefiting from that as well. Moving on to the mining sector, and there it is down a little bit. We are seeing a little bit of weakness for Rio Tinto and Anglo American. Fresnel is doing a bit better. This is on the back of iron ore falling. The inventories of steel are accumulating in China. Some of the economic data out of China is not doing too well, and that is dragging down the shares of those miners this morning. Moving on to Tesco. Tesco is up. It is up almost 2%, and that is on the back of JP Morgan raising its price target for Tesco on the back of a good growth outlook. So that is quite a positive morning for the retailer this morning. And finally, let's end on TeamViewer. TeamViewer is a software company out in Germany, and it got raised to a buy rating by Bank of America, and that is really driving the shares this morning. We're up almost 8% for TeamViewer.
Chloe, thank you. Chloe Melly from our equities team with a look at some of those stocks on the move. We are going to talk about some of these sectors in focus next. Certainly the pharma sector in focus for us today. We're also going to be thinking about the wind generation sector with a rights issue at Ørsted. All of that in conversation next. This is Bloomberg. Welcome back to the opening trade. 16 minutes into Monday's session, the 1st of September, the first trading day of a new month. And we have European equity markets actually on the front foot, so trying to brush off some of that negativity around the technology sector on Friday. There is still some of that in there, but finding other reasons to go higher this morning. And so across the board, we seem to be up by around 0.3%, certainly on the major markets this morning. Let's focus in on the wind generation, electricity generation sector. Norwegian energy company Equinor says it intends to subscribe for new shares in the wind developer Ørsted, the first major investor after the Danish government to back the sale. Joining us now is Bloomberg's Sanna Vass with details of this. And I suppose Equinor's participation here is important because it is, I think, the second largest shareholder in Ørsted, Sanna. So to tell us the significance of this news.
Yes, this is very good news for us today. As you say, Equinor is the second largest shareholder after the Danish state, which has already been out saying that it wanted to support the rights issues. But of course, there's been a lot of uncertainty as to what extent other shareholders would want to participate, given all the headwinds that Ørsted is facing. So a big vote of confidence. Equinor holds 10%. Of Ørsted, and they will continue after as well. Very good news for Ørsted.
Sanna, the team, the investor relations team, the management team, has been speaking to investors in London the other day, trying to reassure everybody that actually the situation has stabilised. Do we have any read on how effective that effort has been? What are investors asking, and do we know whether or not they've been satisfied with the answers they're getting?
I think, I guess Equinor's move today indicates that Ørsted have had some success in convincing investors that this is a rights issuance that they should be supporting. Of course, we still don't know how the rest of the shareholders feel about this, but they may gain a bit more confidence also from now seeing Equinor's move today. Now, on Friday, Ørsted would hold an extraordinary general meeting, and there the shareholders will vote as to whether Ørsted can go ahead with the rights issuance, and then we'll know more details, and we'll find out really how shareholders, the rest of the shareholders, feel about this.
And I mean, thinking about the bigger picture headwinds, if that's the right phrase to use when it comes to this sector, Sana, I mean, President Trump does not like wind farms. We know this. And that's really the big problem for the sector and the big problem for Ørsted. But there's still been quite a lot of volatility based on whether the latest reading is slightly more or less negative than had previously been expected. So what is the base case sort of situation over in the US?
I think certainly there's still a lot of uncertainties for Ørsted and a lot of headwinds in the US, in the UK, and whether or not they will manage those headwinds is still probably too early to say. But I'd say from the news this morning, Equinor, certainly big Norwegian energy company, they have shown, or they have communicated that they believe in the green transition. They believe in Ørsted, and that Ørsted will be able to come out on top, and so that's certainly a big move today.
Sana, thanks very much indeed for the reporting. Sana Vass, we'll look forward to that meeting coming up towards the back end of the week, get a better read on what is happening with the investor relations story. Sana Vass, on what is happening with Ørsted and Equinor. I'm still stunned that Ørsted announced the rights issue and then left this enormous period of time between announcing it and executing upon it. And they've just left themselves wide open for the kind of volatility that Trump can create and the problems that he can generate. And you've seen that writ large.
Yeah.
Why that decision seems so mistimed now? Announce it, get it done quickly, seems to have been the message here.
Right, and in the meantime, as you point out, President Trump has been active, has been cancelling wind farms, or his team has been cancelling wind farms in various locations, as we've talked about over the last couple of months. It is still interesting, though, how very negative expectations around this sector at the time of the election and inauguration. Everybody knew how President Trump was very anti the sector, and yet we still managed to create quite a lot of volatility in the share prices within it, based on some of the latest reporting. Whether some of these fields get a stay of execution turns out to be a positive.
And you just left yourself so vulnerable to that with the kind of timing. So just does seem as if it's been a very strange decision. Let's talk about one area that we are certainly more positive on this morning. AstraZeneca shares rising after the drug maker said its experimental hypertension drug, its next generation one, is reducing blood pressure in patients by more than twice as much as standard treatments. This is a large, late-stage study that has been conducted here. Bloomberg healthcare reporter Sonia Vint joining us now. Can you just tell us a little bit more about this? This seems like a very big step forward in the treatment of hypertension, i.e. high blood pressure. When can we be potentially seeing this drug coming through, and what could it mean in terms of the scale of sales that we're talking about?
Yes. So AstraZeneca really just cleared a pivotal trial for this drug. It aims to file by the end of the year. So that means that the drug could launch in the market in 2026 if all goes well. And what the drug does is that it blocks certain hormones that allows it to lower the blood pressure in patients. And what's really significant here is that it also works in patients who are usually resistant to drugs. So 1 in 10 patients are drug resistant for hypertension. So this drug works there, which is a huge win for AstraZeneca. And it also helps it to expand beyond its oncology pipeline and push into the market for cardiovascular drugs and bulk up its portfolio there.
Yeah, blood pressure medication, clearly a really big market, of course, Sonia, but also a very competitive market, a crowded field, perhaps. Roche in this space, other US pharma companies also developing blood pressure shots. Is there room for all of them?
Well, so you mentioned the one from Roche, and that one would be a twice-a-year shot. So that would be a huge advantage because the main important thing for drugs is that patients actually take them in order for them to work. And many patients struggle with taking pills on a daily basis. So the shot from Roche could be a really interesting medicine, but the trial is really huge. So it's more than 10,000 people, and it will go until 2030. So it's really early days for that medicine there, and we need to wait for that data to come out. So AstraZeneca could move way earlier, it could launch the market 2026, as I mentioned before. So that would be an advantage. And when we look at the similar medicine from Minerales, which works similarly to the one from AstraZeneca, there they have a similar risk-benefit profile. So that's something that analysts mention. And so they think that investors really want to wait until next year when the drug is launched on the market to see if the expectations really live up to the performance on the market.
How does this fit into the wider cardiovascular story that Astra is generating at the moment? Is this something that is going to work in conjunction with other therapies? This is an area that the company clearly has been focusing on.
Yes, exactly. Yeah, so AstraZeneca, it has a really good footprint in the oncology space. So this drug is a key part of its efforts to bulk up its portfolio of drugs in the cardiovascular space. And hypertension is a really common issue, and it's a risk factor, like the leading risk factor for death from heart disease. So there's really a big market potential here, and to treat also a wide group of patients.
Sonia, thank you very much. Thanks for joining us. Sonia Vind with the latest on the pharma sector. And actually, the pharma sector is doing really well today, Guy. It's the best performing sector on the stock 600. But at the other end of the spectrum, we've got weakness coming through in the mining stocks. But it's a host of different reasons really driving that mining story. So on the one hand, you've got iron ore prices, which are weaker. So iron ore is down by 2%. Mixed signals coming out of China, perhaps. We had the official PMI and the private sector PMI telling us different things about where we are versus expectations there in China. So that's part of the narrative. But then on the more positive side of things, we've got the likes of Fresnillo trading really strongly. That's more precious metals related. And we've got gold prices, silver prices, in particular silver prices, in fact, going higher, because the more we expect the Fed to cut rates, the lower is the opportunity cost of holding other things such as precious metals. Yeah,
we'll wait for the data Friday to see whether or not the Fed does cut rates. Obviously, the expectation is that it will be in September. I want to go back to the top end of the FTSE 100, actually. Astra's doing very well, but BAE Systems is also doing very well. The reason for it is there's a multiple number of reasons, one of which is the fact that we've got this big Norwegian defence order coming through for ships. They're going to be buying frigates out of the UK. You've also had Ursula von der Leyen talking about fairly concrete plans about troop deployments in Ukraine. That seems to be helping the situation out as well. So names like Rolls-Royce are doing very well today. BAE Systems is doing well elsewhere on the continent. You've got names like Rheinmetall also trading strongly as well. So the defence story front and centre this morning, along with some of these pharma names that are doing well as well.
Coming up on the programme, we'll talk global geopolitics. We'll be joined by Bronwyn Maddox, Chief Executive of Chatham House. China's Xi and India's Modi rebuild ties. We've seen Modi also meeting with President Putin of Russia. We'll put all of that in focus. Is it as simple a story as this new alliance builds in the face of threats from President Trump's administration, or is there more complexity behind the scenes? We'll talk about that next. This is Bloomberg. This is the opening trade. It's September, everybody. 30 minutes into today's session, 30 minutes into trading in September. And so far, so good. I've read a lot of stories about how negative September can be for stocks. Historically, it has been so. But today, so far, only half an hour in, it's not negative at all. We're up by 0.5% on the DAX, on the CAC 40. The Stocks Europe 600 up by 0.4%. We are without the United States, of course. They are on their Labour Day holiday, so volumes no doubt are a little lighter than usual. And we've got some big data points, Sky, coming up at the end of the week. No doubt payrolls will be front and centre. And if we take the first half of September, we also include in that time frame a rate decision by the Federal Reserve, which will no doubt be pivotal. So there's a lot at stake during September.
Weirdly, actually volume isn't as bad as I thought it would be, in as much as volume's been pretty terrible over the last few weeks. That continues today. We're down by, let's call it a third in terms of where we should be versus the 100-day average. But actually, I've seen worse numbers than this over the last few days. So maybe the 1st of September, the Labour Day holiday, not having that big an effect. In terms of the internals, the market's definitely higher, 444 up, 133 down. So that's definitely front foot territory when it comes to equity markets. In terms of the 52-week highs, if you want to play the gold and silver story, well, there's a number of ways you can do it. One of which is you can buy lumps of the stuff. Obviously, a lot of people have been doing that, but you can also buy some of the assets that surround it, and one of the miners that digs the stuff out of the ground is Fresnillo, and it has been on quite the tear of late. As you can see, this is a stock on a one-year basis that is up by 235%. Today, it has hit a fresh 52-week high, and there's talk of fresh highs in silver. Silver's through 40. We've also got gold potentially getting kind of pulled along with that trade and potentially hitting fresh record highs as well. And one of the ways of playing it thus far has been with Fresnillo. And as I say, Anna, that stock at a 52-week high today.
Yeah, certainly a multi-dimensional trade around basic resources this morning, isn't it? Let's take stock of some of the other news headlines that you need to know about this morning. US trade partners have been left perhaps confused after President Trump's global tariffs were found to be illegal by a US appeals court on Friday. The 7-4 decision by a panel of judges in Washington was a major setback for President Trump, but the ruling leaves the levies intact for now while the case proceeds. The French Prime Minister François Bayrou is striking a combative tone in his effort to gain support for next Monday's confidence vote. He told French TV that, quote, compromise is a beautiful thing, but I'm not sure it's possible. The remarks follow comments by several opposition leaders over the weekend that appeared to sweep aside any chance of their support. Chinese President Xi Jinping says the Shanghai Cooperation Organization is taking on greater responsibility in driving shared development as global uncertainty continues to rise. Xi made the remarks as he welcomed international leaders, including India's Narendra Modi and Russia's Vladimir Putin, to the summit in Tianjin. And it is this summit, Guy, that is on our minds as we take stock of the geopolitical shifting tectonic plates this morning.
Absolutely. Let's continue with our coverage of the summit that is taking place in Tianjin. President Xi talking about seeking, quote, commonality as he looks to build bridges with neighbours across countries in Asia.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
Min Lo in Tianjin for us to cover this event. We've obviously seen some fairly significant meetings taking place over the last few hours as the day has progressed in China. What else is on the schedule? What else are we looking for to come out of this event?
Yeah, first of all, we had President Xi speaking this morning, talking about opposing this Cold War mentality. He didn't name drop the U.S., but it was clearly a veiled swipe at the U.S. But what we're watching most closely today is the Modi-Putin meeting. It just ended. We don't have the readout yet, but we have the opening statements from Modi. He said that Russia and India had a very special, privileged relationship that has withstood the test of difficult times. And so far, it seems, India remains very defiant in the face of those additional 25% tariffs that U.S. has imposed on India in punishment for its purchases of Russian oil. India's largest state-owned oil company saying today that it will continue to buy every drop of Russian oil available as long as it remains economical. India's oil minister as well hitting back against Peter Navarro's criticism that India is this laundromat for the Kremlin, saying that its buying of Russian oil so far has been within international rules. It's in line with, or it's at least below that price cap that has been imposed by the G7 to limit Russian oil revenue. And so it looks like we have to thank President Trump for providing this diplomatic opening for India to continue to tilt towards other partners in the region, Xi and Putin. And one of the more iconic images that have come out of this summit so far is that image of Putin, Xi and Modi laughing together, Modi and Putin as well embracing each other. They took the same car to the venue of the bilateral meeting, really giving them a bit of private time to speak together with each other without a lot of aides around.
Yes, I mean, President Trump's presence at the meeting, even though he is not physically there, clearly an interesting one to think about, Min Min. Now, over the weekend, we also saw that meeting, a bilateral meeting between President Xi and the Indian Prime Minister Narendra Modi. These two nations have been far apart for some years diplomatically, but again, we're seeing a coming together, perhaps.
Yes, President Modi announcing that the two sides will be resuming direct flights with each other at some point. But again, bear in mind, this is something the two sides had pledged since the start of this year, since January. But progress has been slow. But there are signs of this normalization of relations, and the tone suddenly has improved very markedly from 2020 when the two sides were engaging in deadly border clashes along the Himalayan border. And the tone, the rhetoric from the Chinese Foreign Ministry, one of the most common metaphors they're using now is to to describe the relation as this dragon and the elephant tangoing together. So a very positive tone here. China certainly has been the one to court India amid this backdrop of their mutual mission to counter the tariff impact. But Modi is walking a very fine balancing act because he is one of the few leaders present at the SEO meeting that will be notably absent from the military parade happening a couple of days from now. So he will not be standing on the days above the portrait of Mao Zedong alongside President Putin, Kim Jong-un and President Xi. Think about that optics. It's not going to look good for Modi given India prides itself as one of the world's largest democracy for him to be standing alongside some of these autocratic leaders. So he's hedging his risk against that souring relations with the US, but not exactly diving into the embrace of China as well.
Min Min, thank you very much. Bloomberg's Min Min Lo joining us there from Tianjin. Let's stick with this theme of global geopolitics and bring in Bronwyn Maddox, Director and Chief Executive at Chatham House. Bronwyn, nice to have you and your perspective on the programme today. So we're watching closely the developments of this Shanghai Cooperation Summit and clearly all of the attention on big superpowers coming closer together as they all face a shifting policy environment, to put it politely, from the United States and challenges and threats perhaps from the United States. Is that too simplistic an interpretation, or are we really seeing, yes, these powers being pushed together by a rivalry with the US?
It's not too simplistic. It may be too polite. I think it is one of the most self-destructive things that the US has done under the Trump administration of putting these tariffs on India while having as a policy combating China's rise and military rise in its own region. Because what it has done very abruptly, and we've just heard a description of how the relationship between China and India has suddenly warmed up. That is in response, I think, to the chill that India is feeling from Washington. And so India, which has always tried to stay non-aligned, that has been its policy, but is looking for other friends and alliances, and has made a point of going to China, of having these top-level conversations. A few wrinkles in that. India's Modi has said he's not going to go on the Victory Day parade, so there's some things still keeping his distance, and there are a lot of things that India and China still do not agree about. But what the Trump administration with its tariffs has done is create a lot more warmth between India and China that were rivals until very recently.
Yeah, I mean, what are the limits to how warm that relationship can become, though, Bronwyn? Because as you point out, they don't see eye to eye on everything.
They really don't, including on the borders, where they've managed to talk themselves down from the friction that was there a few years ago over border clashes, but it still is a kind of running sore. You also have the commercial unease, India really trying very actively until all these tariffs came in to persuade companies to move out of China because of the risk there, move into India. Apple was one of the big ones, but obviously its card isn't as strong as it was if suddenly it's going to be hit with tariffs as well. But it has been a rival of China in that respect. And then India is alert to and not comfortable with China's increasing military power in the region and in the seas around there. So there are lots of points of potential tension. I don't think they're going to become warm friends, but they may become quite calculating allies.
OK, calculating allies. How does that actually translate into policy and action, Bronwyn? Because this feels a lot to me like optics. There's some nice pictures being taken. Clearly some handshakes are being made. It all looks great. But in reality, as you say, it's much more difficult to translate this into something concrete. So what actually, does anything come out of what we are watching in Tianjin at the moment?
Well, I think it does. And the practical thing, the first practical thing is India continuing to buy Russian oil in great quantities and so siding itself pretty firmly, not just with China, but with Russia over that. And then we'll have to see what happens on weapons and other trade deals. You're absolutely right about the optics, but optics are not nothing. China has been reaching, whether through the BRICS or now the Shanghai Cooperation Organization, to find congenial clubs of countries which, even if it doesn't say its manifesto is anti-NATO or anti-the West, that is what it is reaching for. So I think we have to see, but it's not nothing.
What's the object? OK, so they're reaching for this greater group. They want to have warmer relationships with some of these countries. What is the objective of that? What does China want out of this in terms of furthering its cause?
That is a very, very good question. And I think it is hard to define beyond saying more influence, more ability to tilt the world its way. It has railed for a long time against the rules-based international order, very much crafted by the US, particularly after the Second World War. And it has been delighted in a way to see the US stepping back from that, and has been making rhetorical hay with that, saying, well, look, we'll have a different rules-based order. But it hasn't yet been as emphatic as it might in actually trying to shape that its way. It seems to be doing it through alliances rather than trying to hammer out new rules. So I think we have to see what comes. But it has found good use of those alliances in the past to extend its own trade, its own military influence.
OK, so we'll watch how China tries to increase and extend that influence. In the meantime, how should Europe respond? I'm thinking here about the European Union and what it's witnessing and how it thinks about its own interests, but also the UK and the wider European family.
I think Europe needs to keep up its ties with India. This is a complex world we're in, and the fact that one country has moved away from the US doesn't mean it has to move away from Europe at this point. Europe needs those trading ties, particularly the UK, which has just done a trade deal with India. So I think that will continue. You do have the thorny question of Russian oil in there, but of course Europe still takes some Russian gas. But that does have an impact on the Ukraine war. But I think Europe can also send a message to Washington of be careful with this relationship, because it is really can destabilize a lot of things if India more decisively moves in the Chinese direction.
Bronwyn, always great to catch up and get your insight. Thank you very much indeed for bringing it to us. Bronwyn Maddox, Director and Chief Executive of Chatham House. Thank you very much indeed. Coming up, we're going to stay with the political theme. The French Prime Minister admits he may fail to reach a compromise ahead of a confidence vote later this week. The latest on efforts to save his government from being ousted. That's next. This is Bloomberg.
Welcome back to the opening trade, 8:47 in London, and it is the 1st of September, and we have green on the screen. So far, so good for what is typically a volatile and negative month for stocks. So we've got European stocks on the front foot, up by around 0.4%. Will it last? We've seen pressure on French stocks as a result of political turmoil in recent days. So let's go to that story next. The French Prime Minister, François Bayrou, has told reporters he wasn't sure that a compromise would be possible in talks with opposition parties this week. Those remarks coming a week before legislators hold a confidence vote in the government that he is currently running, of course. For more, let's bring in Bloomberg's Paris Bureau Chief, Alan Katz. And still the Prime Minister, Alan, good morning to you. Still the Prime Minister says he can see a way through this. He can see a way that he can get support. Most other commentators and investors tell us they can't see a way that the Prime Minister can survive. What are you hearing in Paris?
Well, I think Bayrou is certainly being more optimistic than just about anybody else who is looking at this. Now, that said, it's politics, so you never say never. Things have been known to change, and as he points out, a week is a long time in politics. So I suppose the answer is you never know, but it really does look quite likely that he will be forced to resign a week from today when he holds this confidence vote. The other parties, particularly both the Socialist Party and the far-right National Rally Party, over the weekend said they absolutely would not support him, that they would vote against his confidence motion. And without either one of those parties changing around and at least be willing to abstain, it seems that he would have very little chance of surviving that motion.
So who's next? What's next?
Well, that's the million-dollar question. I mean, sort of formally that's easy to answer, but in terms of actually figuring out who the people are or how it would be structured, that's much harder. So the way it works is that if he loses the confidence motion, then Bayrou will be forced to offer his resignation to President Emmanuel Macron. Macron can then either name a new prime minister, and that person could even include François Bayrou, though that seems unlikely. But he can name any person he wants as prime minister. But again, that person sort of in the longer term over the course of the next several months would need to be able to sort of couple together enough support to be able to pass the one really must-pass bill in France, which is the budget. And that's really not obvious who that person would be. The other alternative, or there's actually a couple of other alternatives that Macron has, he could dissolve Parliament like he did in June 2024 and call new elections. Now, that went pretty badly for his party and its allies a year ago, so would he really want to do that again? It appears unlikely, but you never know. The last possibility is that Macron could, of course, resign himself and force presidential elections. Now, he absolutely categorically ruled that out just on Friday. So that appears to be off the table. So it would really be the first two options, and the most likely appears to be naming a new prime minister. But again, finding that person is really quite difficult.
Yeah, will they have any better chance than the current Prime Minister, of course, is the question. And so in amongst all of that, it seems that France is now, or the Prime Minister, François Bayrou, is upset with Italy about poaching of high net worth individuals and other policies that he deems to be fiscal dumping. Take us behind this one then, Alan.
So that was a funny little moment, actually. In this interview last night, there were four reporters, TV reporters, interviewing Bayrou at the same time, and there were actually the question was about the way that the wealthy were fleeing the UK in the wake of the UK getting rid of the non-dom status and raising taxes on them, and then Bayrou said, "Oh, actually, the UK is not really the issue; it's really Italy." Or it's other countries that are engaged in fiscal optimization or fiscal dumping, as he said, and then he used Italy as an example of that. But it really was, in many ways, it was a throw.
Alan, I think we've lost Alan, which is very unfortunate. He was in full flow. And it's got an interesting little aside to an interview that we've just had with the leadership in France and just trying to get an idea of exactly kind of who people are pointing fingers at. Anyway, Alan Katz, our Paris bureau chief. He will return at some point. He's going to be a busier man over the next few days and weeks. Let's stay with Europe and kind of stick with what we've been talking about. Suzanne Lynch is our Brussels bureau chief and joins us now to talk about the broader European picture and why Europe is struggling at this point, particularly when it comes to responding, of course, to President Trump. And we've been debating this a great deal, Suzanne, recently and trying to understand kind of where we go next. And the question we keep asking is Europe playing this correctly? Do we have enlightened sort of policy here, i.e. play up to Trump's weaknesses, effectively his desire to be flattered in order to get deals done? Or are we just basically bending at the knee of the new kind of, the new king of Washington?
Yeah, it's an interesting one. I think there is definitely a sense here that the Mark Rutte approach, people may remember his cozying up to Donald Trump at the NATO summit at the end of June and his daddy comments. Well, in some ways, this did work. The NATO summit went very well with Trump, European allies committed to the 5% of GDP spending on defence, and Donald Trump committed to keeping the United States committed to NATO. So that was a good result. We saw it too over the last couple of weeks when the Europeans got that last-minute meeting in the White House with President Zelensky and Trump. Now, we're still waiting to hear what comes from that ultimately, but it was a good coup for the Europeans in the sense that 2 days earlier, Donald Trump had been meeting with Vladimir Putin on his own in Alaska, and the Europeans were nowhere at the table. So that kind of flattery did work in that the Europeans got back at the table. But you're right in the sense that I think, you know, it's very much back to school here today, September the 1st, here in Brussels, and all the European officials are back at their desk. And it's been something of a bruising few months for Europe. They have had to accept this trade deal with a ceiling of tariffs of 15% from the US. A lot of countries saying that's not good enough. And on Ukraine, they've had to push themselves into the conversation. They have not naturally been at the table. So I do think that there is a bit of soul searching now as this new term begins here.
Suzanne, yes, and with that in mind, as policy initiatives from the US administration come fast at Europe, they might want to respond quickly, and as foreign policy priorities keep shifting and the world moves quickly, they might want to act more quickly when it comes to foreign policy. And I know that our reporting is suggesting that that's going to be something that Europe can do. What have we learned?
Yeah, we had some reports over the weekend. European foreign ministers were meeting in Copenhagen for a kind of informal meeting. But the issue is that the way the EU works, because it's a collection of 27 countries, it's sometimes hard to move forward with decisions. And some very significant decisions when it comes to foreign policy, for example, tax is another example, you need the unanimous agreement of all 27 countries, and that can stop a decision being made. So there was a proposal that we reported on from the Danish presidency. They're in the rotating chair of the EU Council at the moment, and they're talking about making changes to the system that in some cases this requirement for unanimity is abolished. So I think what everyone is thinking here is Hungary. The Hungarian government have been blocking different measures, particularly on Ukraine, for a year or two now. For example, they've talked about blocking Ukraine's bid to join the EU ultimately. So this is becoming a problem when it comes to everything from sanctions policy to a kind of joined up thinking of defence. So I think the European policymakers and officials are trying to look at ways around this issue.
Suzanne, just very briefly, we're all excited about this new newsletter that's going to be coming from Brussels. Talk to me about what we're getting.
Yeah, this is our Brussels edition newsletter, so people may be familiar with it, but we're relaunching it today. So each weekday afternoon for European readers, this will be in your inbox, and it's just really bringing you the latest news from Europe. As we've just been speaking about there, Brussels is increasingly significant when it comes to geopolitics, economics, finance. So this newsletter, anchored by myself, will be giving you a snapshot every day of what's happening in Brussels, as well as pointing readers to some of the latest news from across Europe and here in Brussels, as well as interviews across our platforms, but very much trying to present and give that snapshot into what's happening here in Brussels each day.
Suzanne, thank you very much. Suzanne Lynch, our Brussels Bureau Chief, helping us take stock of where Brussels is on foreign policy, on its relationship with the United States and beyond. And we'll look for that newsletter. And, Guy, we're just getting some confirmation, really, of the PMI picture for manufacturing around Europe. The German number stands out as a little bit weaker than had been anticipated. The French PMI number actually coming in expansion territory, better than had been anticipated. The euro up 0.3% on a weak dollar day.
Yes, it was up pretty much already. Anyway, that wraps things up with some interesting data. The Pulse is coming up next. Plenty of great coverage coming up, and we'll continue the coverage throughout the day, despite the Americans being out for the session. This is Bloomberg.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with new trade uncertainty. A federal appeals court ruled on Friday that President Trump exceeded his authority by imposing global tariffs through an emergency law, but that court is allowing the levies to stay in place while the case proceeds. The court says the statute President Trump used does not explicitly include power to impose tariffs, duties, or taxes, and that Congress did not delegate tariff power to the president. Bloomberg News contributor Rick Davis says the decision extends the suspense over whether the tariffs will ultimately stand.
He likes to show force, right? And the emergency powers gave him that. But he does have other mechanisms to implement some portion of those tariffs. He might not be able to do all of them with every country that he had under a tariff regime.
Yes, right.
But programs like, Section 301 and others give him the ability alone, the power of the executive branch to implement some of those tariffs.
Speaking with Bloomberg's Joe Matthew, Bloomberg News contributor Rick Davis says the Trump administration could potentially turn to the Supreme Court for a final ruling or let the Court of International Trade revisit the matter.
Even after this ruling, Nathan, President Trump said India has offered to eliminate all its tariffs in response to new U.S. trade penalties. Neither the White House nor Indian officials have confirmed any new trade discussions. But this comes days after the White House imposed 50% levies on Indian goods as punishment for its purchases of Russian oil. President Trump's trade advisor, Peter Navarro, is once again attacking Indian Prime Minister Narendra Modi.
It was a shame to see Modi getting in bed as the leader of the biggest democracy in the world with the two biggest authoritarian dictators in the world, in Putin and Xi Jinping. That doesn't make any sense.
White House trade advisor Peter Navarro spoke as Modi declared that India and Russia have a special relationship at the start of a bilateral meeting with Russian President Vladimir Putin in China.
Well, meanwhile, Karen, Bloomberg News has learned Brazil's president, Luiz Inácio Lula da Silva, plans to convene a virtual meeting of BRICS leaders next week to discuss President Trump's trade policy. Sources tell us Lula is aiming to rally support for multilateralism among fellow emerging market nations. The U.S. has imposed varying tariff rates across the BRICS. Lula reportedly does not want the meeting to turn into an anti-U.S. summit.
Meanwhile, Nathan, back in Washington, Congress is coming back from its summer recess, and the Senate is likely to meet its target to fast-track Stephen Miron's confirmation to the Federal Reserve before its next rate-setting meeting in just over 2 weeks. Bloomberg's Amy Morris has more from Washington.
President Trump appointed Miron to fill the last few months of a term that was unexpectedly vacated by Fed Governor Adriana Kugler. Miron can expect a grilling over Trump's economic policies and efforts to influence the Fed, and could face questions from both Democrats and Republicans. Now, Democrats privately acknowledge they can't block Miron's confirmation on their own, and under the rules, they can only hold it up briefly in the committee, maybe for a few days on the Senate floor. Miron's confirmation hearing is set for Thursday. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thanks. And before the hearing, current Fed Governor Lisa Cook is still fighting President Trump's bid to oust her. A federal judge spent about 2 hours on Friday questioning lawyers for Cook and the Trump administration on whether the president has cause to fire Cook over allegations of mortgage fraud. The judge ended the hearing without a ruling. Cook's attorneys are expected to file another legal brief today addressing her questions and the administration's arguments.
Well, also happening in D.C., Nathan, Treasury Secretary Scott Bessent said the Trump administration may declare a national housing emergency this fall. In an interview with the Washington Examiner, Bessent said that housing affordability will be a critical leg of Republicans' 2026 midterm election platform. He declined to list any specific actions the president may take, but suggests the administration is studying ways to standardize local building and zoning codes and decrease closing costs.
Well, let's turn to markets now, Karen. Gold is trading at a record high, driven by expectations of Fed rate cuts and concerns over central bank independence. Gold topped $3,500 an ounce as investors loaded up. The latest run comes after Fed Chair Jay Powell cautiously opened the door to a reduction in his Jackson Hole comments due to a weakening jobs market.
Meanwhile, Nathan, futures are trading lower with the record-breaking stock rally facing its next test later this week with the August jobs report that's due out Friday morning. Former Kansas City Fed President Esther George says a weak number raises the chances of a September rate cut.
The economy looks to be performing pretty good. The decision is, do they see something ahead that suggests the economy will slow in a way, the job market will be damaged in a way that requires them to ease policy at a time when inflation is holding in there pretty strong?
Former Kansas City Fed President Esther George appeared on Bloomberg television ahead of this Friday's jobs report. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Bill Belichick's college coaching debut did not go well as North Carolina Tar Heels scored a touchdown 4 minutes in. By the time they scored again, TCU was ahead 41-7. The Horned Frogs won in Chapel Hill 48-14. U.S. Open, Coco Gauff lost to the fourth round to Naomi Osaka, four-time Grand Slam champion. This will be her first quarterfinal since 2021. Quarterfinals begin today. Novak Djokovic plays Taylor Fritz tonight. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
The forces shaping markets and the economy are often hiding behind a blur of numbers.
So that's why we created The Big Take from Bloomberg Podcasts, to give you the context you need to make sense of it all.
Every day, in just 15 minutes, we dive into one global business story that matters.
You'll hear from Bloomberg journalists like Matt Levine.
A lot of this meme stock stuff is, I think, embarrassing to the SEC.
Amanda Mull, who writes our Business Week buying power column.
Very few companies who go viral are totally prepared for what that means.
And Zoe Tillman, senior legal reporter.
Courts are not supposed to decide elections. Courts are not really supposed to play a big role in choosing our elected leaders. It's for the voters to decide.
Follow the Big Take podcast on the iHeartRadio app, Apple Podcasts, or wherever you listen.
Are you looking for a new podcast about stuff related to money?
Well, today's your lucky day.
I'm Matt Levine.
And I'm Katie Greifeld.
And we are the hosts of Money Stuff, the podcast. Every Friday, we dive into the top stories about Wall Street, finance, and other stuff.
We have fun, we get weird, and we want you to join us.
You can listen to Money Stuff, the podcast on Apple Podcasts, Spotify, or wherever you get your podcasts.
On the road. So that is where we call it zoo steepening, because it's a bull market at the front and a bear market at the back. Lots of animals involved. And that's one of the things you typically see in countries where there's a concern about a loss of central bank independence.
You also say your clients seem to be at least tactically accepting this stagflationary light environment. So what do you do in that type of environment?
Stagflationary light just means that we're not seeing a recession, but we're seeing growth fall from at trend to below trend, and we're seeing inflation rise from too high to much too high. And in that trend, I think people remember 2022. They're traumatized by the dual losses in stocks and bonds, and especially risk-adjusted bonds did much worse that year. So people are avoiding duration. They're asking us questions, why would I want to get into the equity market at all-time highs, very high valuations? And we're seeing more conversations just about how to manage cash. How can you get some yield at the front end? And the good news is, unlike the 2010s, where you were basically accepting zero, you can at least get 3, 3.5, sometimes 4 and above, depending on how much credit risk you're willing to take. And people will seem to be okay with that because the outlook for the equity market from here, for a lot of our clients, is not really that robust.
So are a lot of people actually hanging out still in cash? I mean, when I talk to asset managers on my program, Bloomberg Open Interest, every day from 9 a.m. to 11 a.m.
Oh, please.
Asset managers, wealth managers are saying they do have trouble pulling people out of cash still, even, I guess, because of the fact that we're at all-time highs.
Where there's a concern about a loss of central bank independence.
You also say your clients seem to be at least tactically accepting this stagflationary light environment. So what do you do in that type of environment?
Stagflationary just means that we're not seeing a recession, but we're seeing growth fall from at trend to below trend, and we're seeing inflation rise from too high to much too high. And in that trend, I think people remember 2022. They're traumatized by the dual losses in stocks and bonds, and especially risk-adjusted bonds did much worse that year. So people are avoiding duration. They're asking us questions, why would I want to get into the equity market at all-time highs, very high valuations? And we're seeing more conversations just about how to manage cash. How can you get some yield at the front end? And the good news is, unlike the 2010s, where you were basically accepting zero, you can at least get 3.5, sometimes 4 and above, depending on how much credit risk you're willing to take. And people will seem to be okay with that because the outlook for the equity market from here, for a lot of our clients, is not really that robust.
So are a lot of people actually hanging out still in cash? When I talk to asset managers on my program, Bloomberg Open Interest, every day from 9 a.m. to 11 a.m.
Oh, please.
Asset managers, wealth managers are saying they do have trouble pulling people out of cash still, even, I guess, because of the fact that we're at all-time highs.
I would say that most of the cash we're seeing in client accounts right now is actually coming out of fixed income. Their fixed income allocations are not as robust. It's been a tough year for municipal markets, so if you're a high net worth investor, you have tax sensitivity. Munis have had a tough year because there's been so much issuance. So they're saying, well, instead of taking that risk, why don't I just hold that part in cash? I can deploy it later. We are seeing a willingness to take on equity risk both in the public and private markets. I don't think there's a loss of appetite there yet, but it's the incremental dollars that are not maybe going into that fully invested portfolio because we have seen everything have such a good run this year.
By the way, how much room do we really have to run higher on equities? Valuations are historically at a fairly high level, right? 6,500 on the S&P 500 is an all-time high, even when NVIDIA's forecast or outlook, in a sense, was tepid, disappointed many. It doesn't look like they're going to sell a ton into China, at least if the Communist Party has anything to say about it, right? And CapEx is, maybe priced too high for the actual return that you're going to get on the AI investment.
Yeah, so the S&P 500 is usually close to all-time highs. About 50% of the time we're at all-time highs or within 5% of it. So it's a normal kind of state of being for the market.
It just goes up and to the right.
It tends to go up and to the right. And even when it's coming down quickly, the recoveries in the last couple of years especially have been very robust. That said, our long-term outlook for the equity market is that the returns are going to be lower than they have been over the prior 5 or 10 years. So investors who are used to 12 or 15% returns on the S&P 500, fueled by things like the secular AI story, we're looking at more like 6 to 8% as a realistic target. That's really where the valuation comes in. It's not going to tell you over the balance of the year, are we going to get a correction? It's going to tell you over the next 5, 7, 10 years, what kind of returns can you expect? And that's where we're getting cautious and where we think there's other places in the portfolio where people should be adding money.
Where else?
International is always a very tough conversation. We've had a better year this year. I think there's going to be more investors who are receptive to it after the year we've had.
Why is it so hard? Just because we're American?
Well, because of the underperformance. Why, put me in
historic
underperformance.
Yeah.
So you're telling me to put some money in something that's underperformed almost every year. You have to go back to 2017 before this year, where you had a year where it outperformed. But I think we're also talking about alternatives. There's other ways: private infrastructure, private equity. Private credit still looks like it has some room to run, and people who value income are going to get more bang for their buck in that kind of environment. But the large cap U.S. market itself has been the place to be, and that's very hard to kind of get people to pull money out of that and to diversify.
When you say international, do you mean Europe or Asia or just all of it?
So this year, China's been a huge part of the story, especially more recently in the summer. Earlier in the year, it was Europe and European banks, which is not a place that was a very popular investment destination. So we're diversified. We kind of look at it all as kind of one big pot, but it is an area where instead of looking just at the indexes, there are areas where people can outperform by, say, tactical asset allocation, country allocation. So there's more room for active management, we think, in international than there is in S&P 500.
Europe's already run pretty fast. The DAX up 20% year to date. The IBEX 35 up 28%.
And with the dollar, it's up even more.
Exactly. So, and that's my question. Does the dollar continue to come down? Because so much has been made about this 10% drop from the highs. But if you look at it historically, it is still incredibly strong.
It is still incredibly strong. To get incremental weakness in the dollar from here, I think you need to see more interest rate cuts from the Fed than what's priced in, and probably better economic performance and fewer rate cuts than what's priced in the UK, Europe, and some of the other central banks that have been cutting. That could mean that the dollar, in an environment where the U.S. macro picture is weakening, also gets weaker, which is not typical. Usually when growth is weaker, the dollar tends to be the sort of safe haven and we get a little bit of an increase. That could be one of the sort of special privilege aspects, the fact that the dollar tends to be negatively correlated to interest rates in the economy. That is one of the things that we could be seeing get lost.
Well, what if President Trump really is threatening Fed independence, which I doubt anyone, disagrees with? What if he starts to fire statisticians because he doesn't like the numbers, What if we start to run up massive deficits, like 6-7%, and then have debt climb $3, $4, $5 trillion over the next 10 years? Does that weaken the dollar?
It has weakened the dollar. So that's certainly one of the reasons you saw the dollar in the first part of the year. The U.S. sort of became this loss of a safe haven, less of an attractive investment destination, and so people are pulling their money out. I think you're making the point that all these things have happened and the dollar is still quite strong. I'd say that the incremental news for the Fed, whether Lisa Cook retains her spot in the FOMC or not, is that there's going to be a rate cut in September. Even the Fed leadership that's been sort of in opposition to Trump, or at least Trump's been in opposition to the Fed leadership, has kind of acquiesced to that. So in the near term, it doesn't change the path of monetary policy. There is this tail risk now, though, that we get a lot more rate cuts next year if you start to see that independence eroded, and other central banks that have lost that independence.
By the way, rates rate cuts and still a rising long end, right? So like we saw in 2024, the Fed funds rate goes down and the long end yield continues to rise.
So I'd say where we're definitely seeing this is the long end is higher than it would be without all of these other risks, right? If you took away tariffs, you took away concerns about Fed independence, BLS independence, I think you would see, and you've seen that the term premium has been rising, the 10-year would be closer to like 3.5%. Wouldn't be that low like it was in 2021, but we're probably paying 75 to 100 basis points right now for general risk around the long-term fiscal monetary outlook in the United States.
And what is so ironic is actually that's where the Treasury Secretary and the President want to see. They would love to see a 10-year under 4%.
And the concern is that loss of Fed independence doesn't just mean you're cutting rates at the short end. It means you could be monetizing the debt. Other central banks that have done this, the central bank has gone out and actively bought. And the U.S. did this during World War II. We were buying all of the Treasury issuance during this period where we had a huge expansion in debt. And that kept the 10-year Treasury at 2.5% throughout that entire period. And only as the Fed kind of pulled back from that practice did you see your interest rates rise in the 50s and 60s.
Really smart. Thank you so much, Brian, for joining us this morning. Brian Nick of New Edge Wealth. We thank him. Let's get you an update on stories elsewhere we're watching. Here's your Bloomberg Brief with Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. I'll pick up where you left off with Brian there. Fed Governor Lisa Cook heading to court this morning to try and keep her job. Cook says that President Trump's using a phony pretext that doesn't amount to sufficient cause to fire her. Cook's lawyers suggested an unintentional clerical error may have been behind the mortgage dispute at the centre of the clash between her and the president. Elsewhere, Russian President Vladimir Putin and Indian Prime Minister Narendra Modi are set to meet in China with President Xi Jinping on Sunday. The two-day summit will focus on the ongoing wars in Gaza and Ukraine. The meeting coming as US-India relations are in flux after President Trump imposed 50% tariffs on New Delhi over its continued buying of Russian oil. And Pop Mart's new mini Labubu dolls have sold out across China. The new dolls went on sale at 10 p.m. local time and all available inventory was gone before some people could even load the page fully. The dolls are expected to be in stock at Pop Mart's brick and mortar stores on Friday, and I'm sure Jonathan will be front of the queue. That's your Bloomberg Brief. Anne-Marie.
Thanks so much, Lizzie. Jonathan, no, but something new I just learned this morning. Matt Miller is a Labubu fan.
Well, I mean, my kids... Edna loves these Labubus, and when we were in Italy last month, she saw one at one of those trinket stores. I bought it right away and then figured out that it was a fake. So, but it was only like 20 euros.
Okay, all right. Well, sounds like a lot, though, for a fake still. All right, up next in the program, back to some serious news. Trump versus Cook.
You had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. We'll continue to fight this battle.
Ed Mills of Raymond James joins us next. You're watching Bloomberg Surveillance.
For over 147 years, Bgrim has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
Good morning. Futures this morning a little bit softer, but of course this is after the S&P 500 yesterday closed at a fresh all-time high. So we're going into this PCE report, the Fed's preferred inflation gauge, with futures just a little bit softer. Your 10-year yield this morning up almost 2 basis points, 4.22%. Under surveillance this morning, Trump versus Cook.
Mr. Pulte has deferred those allegations over to the Department of Justice to investigate them. What I will say is that you had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. He laid it out in the letter that he provided to her and to the public as well. And so we'll continue to fight this battle.
Here's the latest. A hearing is set for 10 a.m. Eastern this morning on Fed Governor Lisa Cook's bid to keep her job while her fight with President Trump plays out. Cook's lawyers say an unintentional, quote, clerical error may be to blame for the mortgage dispute over which Trump wants her fired. Bloomberg's Tyler Kendall joins us now. Good morning, Tyler. What's the latest?
Yeah, hey, Anne-Marie, good morning. Well, as you mentioned, Lisa Cook officially filed this lawsuit challenging President Trump's attempts to oust her as a Federal Reserve governor. And as part of this, she also filed what's known as a temporary restraining order. And that's what we're going to be really focused on today. This would allow Cook to keep her seat, potentially even vote in that September meeting, while the broader issue of her firing plays out in court. That hearing is set for today at 10 a.m. Eastern. And Cook's broader lawsuit, though, argues that President Trump violated a federal law that does allow him to remove a Fed governor, but only for cause. That's Section 10 of the Federal Reserve Act of 1913. And Cook says that this does not constitute cause. The problem with cause, and we're going to be talking a lot about this over the next few days, is that it's not explicitly defined, though historically has meant to mean malfeasance or a neglect of duties related to the job. And if you ask the Trump administration, they point to these allegations of mortgage fraud. You had the White House press secretary yesterday, both to reporters and also in a written statement, to double down on this idea that President Trump was within his lawful authority. However, Cook's lawyers say that this does not rise to that level of cause. And we should also say that at this point, these are only allegations. No criminal charges have been brought. As you mentioned at the top there, we got perhaps a preview of the defense that we could expect from Cook's lawyers. They say these allegations are not true, but that if there were any errors, perhaps this could be related to a clerical error, and that Cook had no intent to deceive anyone, and that also there was no harm done. That is a legal standard known as materiality. And Anne-Marie and Matt, I bring that up because we are expecting intent and also harm to be two of those factors that the judge weighs in this case.
Tyler, thanks so much for that. Bloomberg's Tyler Kendall in Washington. Let's continue this conversation with Raymond James, Washington policy analyst, Ed Mills. Ed, thanks so much for joining us this morning. I want to pick up on one point Tyler talked about, for cause. If this goes up to the Supreme Court, how do you think they will look to define that term?
It's a great question, and I think that there is the question about the for cause and also the question about, is the Federal Reserve somewhat separate, something of a distinct entity? Justice Roberts has already said that it is. I also think when we're looking at this for cause, because there has not yet been an indictment, there has not necessarily been a finding of the courts. When is it up to the president to be the judge and jury in the case? And when is it up to the traditional legal system to be judge and jury in this case? I do think that there are major questions that are being raised about Dr. Lisa Cook, but it is a due process that is afforded to her before I think a lot of those issues are settled here, Anne-Marie. So I think that President Trump has had a number of wins in the courts removing individuals. I think he just has a much higher bar here because it is the governor of a Federal Reserve System that the Supreme Court has already said is different in their eyes.
I wonder about the timing here, Ed, because I don't doubt that she can get an injunction to keep her in her seat by the time September 17th comes around, and she probably would vote for a cut anyway, so that's not going to bother the Trump administration as she leans dovish. But February is a much more important date because the governors are going to have to confirm the regional presidents. And that's when the Trump administration would probably like to have a stacked board. Do you think the Supreme Court can give the president what he wants before then?
Yeah, Matt, you're making some really important points here because it is, when I look at the judge that this court has, this case has been assigned to, it is someone that Biden put on the D.C. federal court here. She has already struck down previous executive actions by President Trump. It's fairly reasonable to assume that this temporary restraining order probably goes in favor of Dr. Cook because of that. But, as you mentioned, I think it is also important to highlight that the monetary policy tilt of Dr. Cook versus what President Trump wants are more aligned than what you would think. So you're asking yourself, what is this about? Is it because he wants to have a 5-2 majority once Jay Powell steps down? Does he want that 4-3 majority as soon as kind of later this year, assuming that Mirren is confirmed? He already has Waller and Bowman from his first term. This here is that majority. The Federal Reserve on years that end in 1 or 6 have to kind of codify what goes on in the regional Fed system. And so does he want to fundamentally alter kind of the way in which the Federal Reserve works with the regional Fed presidents and how the FOMC is constituted? If that's really the question here, Matt, that's a bigger question. And I think that's where the market so far hasn't really been disrupted by this event, but could get really disrupted if they think that the Federal Reserve is fundamentally being altered in the way in which they set monetary policy.
Ed, I wonder if Republicans care at all. I mean, when you talk to people on the Hill, when you talk to Republicans on the Hill, are they concerned about Fed independence? Because any economist will tell you that a country with an independent monetary policy will do better over the long run than a country without one.
Yeah, so I think they are, but I don't know if they want to have a fight with Donald Trump. One thing that I've highlighted for clients at Raymond James for years now is that the Federal Reserve, well, we're not under the illusion that they're completely independent. We're not under the illusion that they're not influenced by politics, but it is the one area when you go back to Trump 1.0, when you look at what happened during Biden, where their own party has said no to some of the selections of the president. During Trump's first term, there was a number of governors that he has supported that did not get confirmed. You go to Biden, Sarah Bloom Raskin, she was put up as vice chair for supervision. She was not confirmed. There has been a belief in Congress, and especially in the Senate, that the Fed is kind of the whole ballgame. If we lose confidence in the Fed, that's a destructive influence on our economy and our markets. And so they haven't been willing to go there. But because there is this kind of question about, did Dr. Cook do something wrong? President Trump has been putting up most of his nominees that have gotten confirmed. They haven't necessarily been willing to step back and push back against him. But if there was a major market reaction related to this, they would. If not, and if it's a traditional nominee that would replace her and there's a court decision, they would go along with that replacement.
Ed, what about Steve Myron? We have the Senate coming back next week. Do you think he will be expeditiously confirmed to then be at the Fed meeting in September?
Yeah, Anne-Marie, in D.C., we have two modes. It's glacial or overnight. So we're going to go into the overnight mode with Myron's confirmation. The Senate Banking Committee has already set the nomination hearing for next week. I'd expect probably a week after that he is on the board. This is a nomination that only goes until January 31st of next year. He's already gone through the Senate confirmation process. I think that's part of the reason why he was selected. So all the paperwork has been done. Every Republican senator has already voted in favor of him. This is as quick as you get for those factors. They want him in, and he will be in by that September rate decision.
Ed, thanks so much for your time this morning. Have a lovely Labor Day weekend. Ed Mills of Raymond James. I know that speed especially. It's really, really slow in Washington, D.C. until it happens almost immediately overnight. They stay up till 3, 4 o'clock in the morning because they have to get something done.
Yeah, I mean, they definitely put in the work when they need to. And they go home and do their campaigning when they need to. They do what needs to be done. There's this feeling that they do nothing, right? Because we have things like government shutdowns. But when that happens, they want that to happen.
That's actually something, it's a good point you bring up, because that's actually something there's going to be a huge fight in the next few weeks. We actually might have a government shutdown, likely potentially a continuing resolution will keep them aboard. All right, coming up on the program, Heath Terry of Citi Research on why the market may be underestimating AI, plus Lizzie Burden with your morning movers as Ulta raises its full year forecast, up more than 3% this morning. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. John and Lisa are off today. I'm Anne-Marie Hordern alongside Matt Miller. We are off a fresh all-time high. Yesterday on the close, we were north of 6,500 on the S&P. This morning, Matt, we're just pulling back slightly. Probably the market is just treading water ahead of all-important PCE data. Of course, that is the inflation gauge the Fed looks at 8:30 Eastern. And then at 10 a.m. Eastern, potentially another risk for the market. This court is going to be hearing this potential injunction when it comes to Lisa Cook. 10-year yield, not really caring about that drama.
I was going to say, that's not a risk because this market has shown it does not care about Fed independence for now. And I think everyone expects Lisa Cook to get an injunction and then the Supreme Court later to allow the president to fire her. But to me, the interesting thing is that NVIDIA was down yesterday and still we climbed to a new record high. So for one thing, you're seeing continued rotation, right? If you do RRG on the S&P on the Bloomberg, you can see that rotation. The other thing that's interesting is Jonathan Levin wrote a Bloomberg opinion piece yesterday pointing out that stocks like Walmart and Costco have incredibly high valuations, and they may be a bigger risk than NVIDIA. If you look at Costco's forward PE, it's more than 50, and NVIDIA's forward PE is only 40. So it's really interesting that the market's willing to give these premiums to some of these traditional businesses.
Yep, certainly a lot of premiums all baked in at the moment, and we haven't even gotten that Fed rate cut, which the market continuously just bakes in. Chris Waller overnight, once again, calling for the Fed to cut 25 basis points, Matt, and then saying basically if the labor report is so bad, he even consider a jumbo rate cut.
Yeah, he said to him, inflation is right around 2%, even though it's at 3%, right, which is 50% higher, and that he is back on team transitory. That's a direct quote, right, which was so widely mocked during the pandemic.
Air quotes. Right. Team transitory. Well, basically he's just saying is you don't consider sales tax. We don't consider sales tax at the Fed to be inflationary. We're not going to consider this what he believes is a one-time price adjustment when it comes to tariffs to be an inflationary spiral.
Right. But if sales tax had previously been 2% and then we quadrupled it or quintupled it, that might be, or sextupled it, right? From 2% to 15, like that's a big jump for the American consumer to handle.
Right, and we're seeing that in some of the individual movers today, like Caterpillar. Let's get more on those individual morning movers before the market open. Lizzie Burden has those for you. Hey, Lizzie.
Hey, Anne-Marie. Let's start with the winners, shall we? We kick off in San Diego with Petco, and those shares are currently up 15% in the pre-market, more than that, after it issued third quarter guidance that beat expectations and it nudged up its 2026 outlook. The company, of course, as you know, in the middle of a turnaround under the CEO Joel Anderson. The efforts focused on revamping stores and closing underperforming locations, and you got the shares down around 15% so far this year. Compare that with the 24% rise for its rival Chewy, so nice to get a bit of upside for the stock this morning. Next up, we turn to Ulta Beauty, the beauty store chain, of course, up almost 4% in the pre-market. It's also issued a raise and a beat, even as it's warned about a potential pullback from consumers. Interesting, given the demand for cosmetics has held up so far this year, despite the economic uncertainty, the lipstick effect, perhaps. And finally, to the losers, Marvell down nearly 15% in the pre-market. Its results, nothing to marvel at. Data center revenue missing estimates and the revenue outlook below expectations. Our analysts pointing out, Anne-Marie, just how disappointing that is, given the strength of AI demand, given the capex spend from the hyperscalers, and actually a downgrade now from B of A. Anne-Marie, back to you.
Thanks so much, Lizzie Burden. On our radar this morning, a federal judge in Washington is set to hear Fed Governor Lisa Cook's lawsuit against President Trump later this morning. The suit would block Trump from firing her. The legal battle is seen as likely to end up being decided by the Supreme Court. And Matt, this is where I think things will get interesting. First off, unprecedented. So the Supreme Court decision is going to be incredibly important. They're going to be the ones that have to really define what for cause means. I keep going back to what the Supreme Court said in May in one opinion, which is the fact that, like the Fed, institutions like the Fed are quasi-private entities. Will they do that this time around, or are they going to give the president more leeway in really defining what for cause means?
I thought Yesterday, you had a great guest on from Wolf Research who pointed out that this Supreme Court is going to be loath to try and tell the president what they think for cause means because they want him to be able to interpret that. They've given him at least 2/3, maybe 3/4 of the cases that have come before them so far this year, and they're likely to give him this as well. But it does look like Lisa Cook is going to get an injunction because this judge seems to be more friendly.
And you brought up a great point. That means if she gets an injunction, she will likely be able to continue her job, and she'll show up at the Fed meeting in September. And as you point out, she's a dove, and she's likely going to line up on doing something the president has been calling for since he became president in the second term.
By the way, we have a great function on the Bloomberg terminal. FDSP Go will show you, it's a Fed spectrometer, and it'll show you where each voting member and non-voting members fall on the scale of hawk to dove.
Awesome. Elsewhere this morning, German Chancellor Friedrich Merz saying a meeting between Vladimir Putin and Volodymyr Zelensky is unlikely to happen. This update contradicts earlier statements from the U.S. that the two leaders had agreed to meet. This story just continues to grind. I was in the cabinet meeting this week with the president and his cabinet ministers, and he was questioned about this because Sergei Lavrov, the Russian foreign minister, also said there's really no plans right now. And the president's kind of just saying they'll meet. He keeps saying they'll meet, but he's giving Vladimir Putin a lot of time here. So I think you have to start thinking about if he cannot get these two to the table, is he going to double down on the things like sanctions?
It doesn't seem likely. He hasn't historically challenged Vladimir Putin too much. Now, I think he's right when he voices concern that Putin is stringing him along. It does look like that's happening, but no one knows better than you. You've spent time with Vladimir Putin. You've spent time with the president. You've spent time covering the oil market, and I think that is really what this is about more than almost anything else.
I think what's interesting is that the Europeans are considering secondary sanctions on other countries that are importing goods. We saw the president do that when it comes to India. The 50% tariff rate on India went into effect this week. Speaking of tariffs, Matt, as of today, the U.S. has closed a tariff exemption that dates back to the 1930s that allowed for duty-free imports of goods valued at $800 or less. The change is expected to result in more than $23 billion in additional customs revenues and fees over a decade. So this is the so-called de minimis. And basically, they're closing this loophole. So you can no longer just accept a $100 T-shirt, a $15 T-shirt from Shein or Temu. And you're going to have to pay the tariffs on this.
Yeah. I mean, I wouldn't want to participate in the fast fashion industry because, I mean, it's horrible for the labor that makes those things. But I've ordered a couple of Arai helmets, one from Japan and one from the UK, that are $600 or $700 a piece. And I'm afraid I'm going to get hit with that tax when they come in.
I believe it depends on when they were shipped. So you potentially might not get hit with that tax. But when it comes to those fast fashion retailers, this is why when it comes to closing the de minimis loophole, there's actually bipartisan support. We actually saw work happening towards this during the Biden administration because this is really this gateway for some of these Chinese companies to just inject cheap goods into the U.S. market.
Yeah, I don't disagree.
All right, we're going to turn to tech now. Heath Terry, head of technology and communications at Citi Research, says, quote, first, AI analyst on Wall Street believes AI revenue will surge to $780 billion in 2030 from $43 billion this year. Heath joins us now for more. Heath, that's a massive jump. And if you think that's where it's going to go, is this market underpriced?
Look, that's the way we look at it. I mean, we are in the very early stages of this AI cycle, and really we think sort of posed for an inflection ahead of us. A lot of things that sort of matter to driving growth are about to clear in growth's favor. The bottlenecks that we've seen in capacity constraint, the model development advances that we're seeing, particularly around agentic AI. And then, of course, the biggest of those being what we think could be called AI squared, the idea that AI on its own can start programming AI.
So, I wonder, Heath, your take on what happens in China, because NVIDIA at first didn't give us a forecast for the third quarter. They had nothing in the second quarter. And then the CFO came out and said maybe $2 to $5 billion, but she's not really sure about the president's deal to get a 15% take of everything they sell there. And to me, it just seems like the Chinese Communist Party is willing to do a whole lot to make sure its companies don't buy our chips anyway. So what's your take on that whole story?
Look, I think you're seeing that kind of mindset from every country. China, certainly the countries in the Middle East, major countries in Europe and the U.S., of course. Everyone feels like AI is an important enough technology that you cannot just secede it to sort of the global winners, which in other cycles have always been American. And I think, the mistakes of the internet era for a lot of companies on a country basis, or a lot of countries on a company basis, of allowing the U.S. companies to come in and sort of be their own local champions is something that no one really wants to make in AI. Now, that's a really hard thing to actually enforce for most countries. China can obviously do it. They actually did it very successfully in the internet era. I mean, there are no bigger internet companies outside of the U.S. than those that are in China, and I think they want to make sure that they do the same thing when it comes to AI.
I noticed also yesterday that an analyst from eMarketer said, we have to see returns on these investments, and soon. And the threat is that these big hyperscalers who are spending 40% of NVIDIA's revenue, and forgive me that I'm heavy on NVIDIA, but they just came out with earnings, so it's occupying my mind, that these big hyperscalers may pull back on the margin in terms of CapEx if they don't start to see returns soon on the applications, on the AI applications that they're powering. What do you think about that?
Look, I don't think there's any chance of that, right? I mean, we go back a year ago, and you had the CEOs of Alphabet, Meta, Microsoft all get on their earnings calls and say some version of the risk of overinvesting is far less than the risk of underinvesting in this space. And then we fast forward a year later, and they've all said, you know what? Even though we believed that, we actually underinvested, and capacity constraints are still there. Microsoft in particular called that out on their most recent earnings. And so you don't see that kind of demand outstripping supply if the returns aren't there. And there have been a range of studies. MIT had theirs, which I think most people sort of misunderstood or didn't get past the headline. IDC has had one that said that CFO or CIOs are getting 3.7x for every dollar they put into AI. So there's a lot of work being done around this. We obviously did a lot of work around this in the 120-page report that we published earlier this week. And the returns, and admittedly, they're early returns, but the early returns show that this stuff is working at the enterprise level.
Heath, something that Jonathan has been bringing up a lot when it comes to the AI story, I'd love to get your take on is, do we have the power, the electricity needed to run this industry, and especially given the outlook you have in your research?
Yeah, look, this is something we cover a lot. The team at Citi that covers the industrial space and the energy space has spent a lot of time on this. And look, there are going to be bottlenecks. But here's the, for lack of a better term, kind of the sad reality of this is that when there are shortages, when there are bottlenecks, capacity and supply moves to the highest value usage. They move to the highest bidder, for lack of a better term, and that's going to be AI. And so, yeah, there are going to be shortages, there are going to be bottlenecks. But if you're in AI and you're building a $20 billion data center, you're far more likely to get the equipment you need, the power you need, than the person who's next further down that line on that list. And so, there will be bottlenecks, but I don't think you're going to see them in AI, and I don't think that they're going to be the things that sort of slow development here.
Heath, thanks so much for your time this morning. Heath Terry of Citi Research. Want to get you an update now on stories we're watching elsewhere. Here's your Bloomberg Brief with Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. European leaders have referred Iran to the UN to re-up sanctions against the country after Iran failed to comply with demands over international inspections of its nuclear program. Iran has threatened to leave the Nuclear Non-Proliferation Treaty if UN sanctions are resumed. Elsewhere, Caterpillar shares are trading lower in the pre-market after the firm warned that the US tariffs will squeeze margins more than expected. The company now sees a hit of up to $600 million this quarter and as much as $1.8 billion next year. Caterpillar said that its full-year profit margin will land near the bottom of its target range. And the CDC has a new acting director after President Trump fired longtime government scientist Susan Manares. She'll be replaced by Robert F. Kennedy Jr.'s current deputy, Jim O'Neill. The move comes as a key advisory committee is expected to issue new recommendations on immunizations. Kennedy recently reshaped that committee, adding several vaccine skeptics. And that should be my brief. Anne-Marie.
Lizzie, thanks so much. Up next, new duties taking effect.
The de minimis rules, just as a bit of a reminder, $800 is what the U.S. has said, but you don't have to previously have to go through customs duties. But that accounts for about 4 million packages each day.
Former NEC Deputy Director Everett Eisenstadt joins us next. You're watching Bloomberg Surveillance. Good. Good morning. Equity futures this Friday morning, a little bit softer as we head into the all-important PCE inflation data coming out at 8:30 Eastern time. We'll have full coverage of that right here on Bloomberg Surveillance. But of course, all of this with a grain of salt because yesterday the S&P 500 had a fresh all-time high. Under surveillance this morning, new duties taking effect today.
The de minimis rules, just as a bit of a reminder, $800 is what the U.S. has said, but you don't have to previously have to go through customs duties. But that accounts for about 4 million packages each day. So a lot of these businesses will never have had to go through a customs process. So it is likely to introduce quite a bit of friction. Any sort of change in both the friction in terms of the time of processing, but also the additional cost can really mean the success or really pivoting of those businesses going forward.
Here's the latest. President Trump is bringing an end to the de minimis exemption, which allowed merchandise shipped to the United States valued at $800 or less to be tariff-free. Everett Eisenstadt, the former NEC deputy director, writing, a number of countries, including Mexico and the European Union, are suspending postal package shipments to the United States. This is a significant change for online shoppers and retailers. Everett joins us now. Everett, thank you so much for joining us this morning. I feel like politically this was a long time coming, having covered the Biden administration and the Trump administration. But how big of a deal is this going to be when it comes to trade with the United States?
Well, this is going to be a big deal. As you noted, this has been coming for a long time. There's been some concern over the use of de minimis and that it had been used to circumvent U.S. customs laws and to bring in illicit products. There's all kinds of debate around this. There was all kinds of debate about how to manage the program. Ultimately, President Trump said, look, we're not going to do that. We're just going to stop this program, and we're going to put in place to collect these duties. A lot of companies and consumers have become reliant upon this process, have been able to order products from overseas, bring them in with very little duties and fairly rapidly. And that's going to end today. And I think you're going to see a lot of households are going to be surprised at both the costs and the complexity involved in getting their products from overseas.
Well, we have one of those individuals sitting around the table this morning. Matt was just telling us how he has 2 helmets coming from Japan, I think one from the European Union, that he might get hit with this tax because they were just under $800. Given that's the case, do you think there's going to be a lot of pushback and potentially we could see this administration, I'm not trying to be cute here, but taco?
No, I don't think so. Not on this one. This one, there was bipartisan support for revising de minimis for many, many years. And I actually had the honor of working on this statute when I was on Capitol Hill as the chief trade counsel. So I recall why we made the modifications at that time. The idea was to relieve, the Customs Service of the burden of enforcing small packages, bring them up to do some more complex enforcement mechanisms. And there was a trade-off, right? And to do that, the shippers had to meet certain criteria. The packages had to meet certain criteria. It was doing very, very well. As you noted, many, many packages have come in. But the frustration over the program has been long brewing and bipartisan, particularly as it related to China, which has been terminated quite some time ago. But now it is global. And there's a lot of companies and customers and even foreign postal services out there struggling with, well, how are we going to implement this? What does this mean? Who's going to collect the duties? What is the duty going to be? And the helmet analogy you made is just one example of many, many stories I suspect we're going to be hearing over the next several weeks.
Well, we've been talking about the fast fashion industry, which is notoriously bad for the environment and horrible for the labor, that creates those products. That's why this has, I think, bipartisan support, as Anne-Marie was saying earlier. But are you worried that postal systems are going to be experiencing real disruption here? Are we going to see some trade issues in terms of shipping because of this?
No doubt. I'm quite confident of that. I mean, when you make a change of this magnitude, It's global. It's going to take some time to sift it out. It's going to take shifting resources around the world to come into compliance with these new requirements. So, yeah, it's going to be burdensome. It's going to take some time. That doesn't mean it won't work, but it's going to take time. You can't make a change like this overnight and expect everything to continue to move just as smoothly as it is. And your example on these fashion shipments is exactly one of the cases in point, where you have an industry that was built up around this concept that really I'm not even sure will be able to resolve itself and survive as it did in this new environment. So it's a pretty important change, and one that's going to filter through pocketbooks and companies for quite some time.
Everett, I want to transition to autos here because you have a fantastic resume for that. You worked for President Trump at the NEC, and then you worked for General Motors, which makes some of my favorite gas engines, a 6.2-liter naturally aspirated V8, as well as some of the best EVs out there. The EV Sierra is an incredible truck. What do you think about the cancellation of EV tax credits from the big, beautiful bill? Because clearly these automakers have had to invest billions in making EVs, and electric is going to be the powertrain of the future. So what happens when we turn off that incentive?
It's so huge. And, that's just one part of that greater complexity when it comes to electric vehicles. It's not just a tax incentive. It's what are the emission standards? What are the fleet requirements? There's all kinds of different reasons that a company will choose to produce an EV over, say, an ICE or an internal combustible engine. So the tax credit's meaningful. It's important. It's not determinative, but some of the other elements are. And so the president's also modifying the mile per gallon emission rates. He's looking at changing some other things. So it's really giving mixed signals to the industry. And for industries that thrive on long-term predictability, massive capital investments, looking at timeframes, 3, 5, 6, 7 years out, this is really, really difficult to plan in this environment. And you made a really good point. The EVs around the world are surging. They're primarily because China is subsidizing the industry and pushing out a lot of product that they cannot get into the United States. But the EV is going to become the dominant vehicle in the future, and the United States has got some work to do to catch up to that.
We also have Everett problems when it comes to tariffs because we're giving a 15% flat rate to Toyota and Honda out of Japan and General Motors and Hyundai in South Korea, but Ford has to pay big taxes on aluminum, big taxes on imported parts, big taxes on Chinese magnets, to the point where it costs more to produce those vehicles in Dearborn than it does in Seoul. Does that make sense to you? How do they solve that?
That's an anomaly. We're going to have to see how that's resolved. But I doubt there was anybody who planned that out and said that's exactly how we want this to land. I think some of these pieces are moving at different paces at different times, and sometimes bringing them all together into kind of a coherent package is very, very difficult. It is going to be tough to produce in the United States, but at the same time, the U.S. market is really the only market around the world where car companies can sell their vehicles profitably. There's a lot of things we can do to make the system here more efficient. There's a lot of things we can do to help our domestic manufacturers. But we need to take those into account.
Former NEC Deputy Director Everett Eisenstadt. Matt, I was waiting for you to bring up cars. Took you 50 minutes into the 6 a.m. We're back with another Bloomberg Surveillance next.
Inflation is very, very important to the market.
The inflationary backdrop for the US right now is anywhere near as egregious as some commentators would say.
I am more worried that the rise in inflation caused by the pass-through of the tariffs, it could end up being more persistent.
I expect a Fed that will be constantly data-driven and may have to pause to recalibrate where the economy is moving.
Ultimately, we are going to have to see the data. It's going to be very data-dependent.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
From New York City for Audience Worldwide, good morning. This is Bloomberg Surveillance. Today, I'm Amber Hodern alongside Matt Miller. John and Lisa are off. You can get a sense it is a summer Friday, especially a Friday before the Labor Day long weekend. Doesn't mean we don't have an important Friday ahead of you. 8:30 Eastern, that's where we're going to get the all-important PCE inflation gauge. Of course, this is what the Fed looks at. And then at 10 o'clock, Matt, we're going to get this hearing on Governor Lisa Cook. So when it comes to what is going on between data and also personnel and policy, it is all happening today in terms of Washington, D.C. First up, though, when it comes to the inflation gauge at 8:30, do we even need to care? Governor Chris Waller yesterday basically said that he's on team, and he put in air quotes, transitory when it comes to the tariff impact on inflation.
Right, because we're expecting to get PCE, core PCE at 2.9%. Now, to him, that's 2. Because he sees it as transitory, right? And he is already invested in cuts. He may even see a need for a jumbo cut, depending on what happens with the labor market. But I think the University of Michigan data could be interesting in that we get inflation expectations that people on the Fed really consider important. I know it's the U of M.
Important? It was Governor Waller who basically felt like wrote Powell's speech at Jackson Hole, who sat around this table and said that survey, because it is highly politicized.
Yeah, but they break it down so you can see what Republican expectations are and Democratic expectations are. And for a long time, they were going in opposite directions, but now they've started to come back to. You see what I'm doing here? You seen top here?
Let's go into what Governor Waller said, because I think you brought up a good point, opening the door potentially for a jumbo rate cut. I don't believe that a cut of larger than 25 basis points is needed in September. That view, of course, could change if the employment report for August, which is due out a week from today, points to a substantially weakening economy and inflation remains well contained. If we get a big downside on the labor market report, do you think that puts 50 on the table?
Well, I'm not sure about that because we're not yet pricing in a full cut. Right now, I think if you look at the WIRP function on the Bloomberg, it's only about 85%. And even when we did get those downward revisions, which are horrible and showed over the last 3 months, only 35,000 jobs were added each month on average, we still didn't get up to a full 50, but it definitely pushes us in that direction.
Let's take a look where markets are this morning. No drama, as Jonathan would say. We are a little bit softer on futures, but of course this comes as yesterday a fresh all-time high, 6,500 yesterday on the S&P 500. 10-year yield up almost 2 basis points, 4.22%. Matt, you've been bringing us back to this point, which I think is really important. If individuals in the market are really concerned about Fed independence, wouldn't this yield be much higher? And that story is going to come into focus today at 10 o'clock.
Yeah, I think there must be some technical answer to why we haven't seen yields rise higher. You guys had Gita Gopinath on yesterday, and she was saying, well, everyone must have faith in Fed independence. That must be what it is. But I'm not sure everyone does have faith. So maybe it's a liquidity story?
I think people are just waiting for the courts to decide. And that's going to be a process. Coming up on this program, Katie Kaminsky of Alpha Simplex, a stock slip ahead of key inflation data. Krishna Guha of Evercore with the future of Fed independence hanging in the balance. And Gene Munster of Deepwater Asset Management on the AI race. We begin this hour with stocks drifting lower ahead of core PCE data. Katie Kaminsky of Alpha Simplex Group writing, quote, equity market sentiment has been drifting more positive as we seem to have passed peak tariff uncertainty. The potential for Fed rate cuts has also boosted equity market trends. And Katie joins us now. Katie, it feels like there's a lot of risk potentially still in this market, but markets keep grinding higher. Another fresh all-time high yesterday. Why? What's behind this?
Well, I think the truth is the markets have been steady as you go this month. And as I noted, that the uncertainty is just not moving the markets around as much as we saw before. In general, things have been drifting more positive. I think the rate cut possibility has really boosted the market this month. And you're also seeing positive moves across a much broader set of equities, which is also encouraging. We also see good news out of Asia and some positive news that kind of continues to be a good drift into the end of the summer, I would say.
Katie, I want to ask you about AI, about NVIDIA, about chips, because you studied electrical engineering, because you have your PhD in operations research at MIT. What do you think about NVIDIA, especially in light of the fact that the Chinese Communist Party seems to want its companies to buy no more chips from the U.S. producer. And considering their earnings report yesterday, the outlook didn't seem that great.
This is a good point. I was actually kind of surprised because the market seemed to shrug off some of the not as good news for NVIDIA. I think some of it may be sort of overall optimism for the space, but you are right. There are headwinds against NVIDIA, particularly China, which is such a big part of that marketplace. So I think, truthfully, we don't know enough yet to understand really how those dynamics will play out. And trade wars have also made that much more complicated, much more unclear. But it's true that there's a buzz and the direction for AI has been continually strong. So I think, the market still thinks that we'll sort this out and that, these are sort of the stocks that we need to hold going forward. I think the broadening of the market this month helped a little bit because if you think about how concentrated we are in that theme, it is a risk factor for most investors.
I was lying in bed last night thinking about the all-time high that we hit on the S&P and the fact that NVIDIA was down, right? A $4.3 trillion company that's worth like 10% of the index is down. And so I got up and I logged onto Bloomberg and put in the RRG function, relative rotation graph on the S&P, and I see that consumer discretionary is coming up. And you are seeing a rotation out of like these Mag 7 or Great 8 companies into the rest of the 493. Does that continue?
I think so. I mean, a lot of that narrative really comes from the rate cut expectations. And I think that is really where that's a sector, anything outside of the top 7 has really struggled for quite some time. I think the biggest data point for me is taking a look at how well the Russell 2000 has done this month versus the NASDAQ. And that's quite a spread, possibly up to 5%. So you're really seeing, this pivot and rotation, and that's a positive sentiment for U.S. domestic equities. So I think that could be something that could provide some breadth when we have a lot of focus on AI and a lot of focus on tech.
Are you surprised about that rotation, given the fact that we now, for the most part, have final tariff rates, and that's going to hit some of these companies in a big way?
Yeah, that is actually the thing that I'm the most concerned about. And I think the de minimis news today and sort of thinking about that, a lot of factors are inflationary right now. So eventually this is going to hit a large number of companies. We have seen some indications in the fixed income markets where, you're seeing short pressure on long-term bonds and really kind of weak signals. So to me, that's one of the first places you'll start to see some potential, putting your view in the market. If you think inflation is a problem, then you stay away from long-term bonds. So I think that's the market I'm following first as a potential indicator for where that eventual stress may come.
Do you think long-term bonds are concerned about inflationary pressures or about Fed independence?
I think both. That's a good question because Fed independence definitely affects the inflation narrative as well, because with a less independent Fed, maybe long-term implications are less in focus. And frankly, with lots of different aspects of the trade policy being inflationary in nature, you're eventually going to see that in long-term cash flows. And I think we'll continue to follow those long-term yields. They have actually gone up more this year than short-term yields. And I think that's a place where people naturally go to, express their view on inflation. So I think we'll have to watch those and see how they develop, especially if we get a big rate cut at some point later this year. That could really spur a potential trend.
You have noted that September is bad. Another great function on the Bloomberg terminal, SEAG Go. If you look at seasonality over the last 30 years, September is the absolute worst month for stocks. Do you think traders and investors take this into consideration when they're trading stocks?
I mean, I think they definitely do. I think one of the challenges is, and we see that in our space, August tends to be a tricky month for trends, for example, and that hasn't been the case. So I think there's always exceptions. I think this year is particularly notable because we've had the quiet period. We're coming out of the recent Jackson Hole summit. And basically, September is a time where I think people reassess the data and they say, wait a minute, how do we put this together to get into the end of the year? So it is possible we could see some correction of this very positive risk sentiment that we've seen.
When they reassess the data and we look towards September, Do you even paying attention to the CPI print, given what Governor Waller said last night?
I would definitely say I'm still paying a lot of attention to it because a shock in that will still matter a lot. But I do think we're seeing more and more evidence that the Fed is shifting towards lower rates. What I'm more concerned about is how extreme that is. And if it's much more aggressive, that's what could actually spawn a much bigger spike in inflation. So I do think that you still watch it, but obviously this narrative has made that particular number much more difficult to read and understand what that means, how that's gonna move the markets.
Katie, thanks so much for your time this morning, and happy Labor Day weekend to you. Hope you enjoy the long weekend. Katie Kaminsky of Alpha Simplex Group. We're going into, Matt, it's a long Labor Day weekend, but there's a lot of data that you have to get through today, as well as this overhang of what is going on between this fight between Governor Lisa Cook and the White House.
Yeah, and you probably don't want to be holding risk assets into this long weekend, especially as we're coming up to September. When we were talking to Nick at the very top of the show, he pointed out that equity markets typically rise, right? Up and to the right is the trend. And if you look at the seasonality, only 3 months over the last 30 years have averaged losses, and September is the worst one, down 0.8%.
I'm looking at it right now. Thanks so much for sending me that function. Matt Miller with the functions this morning. We're getting you an update on stories elsewhere. Here's your Bloomberg Brief with Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. Federal Housing Finance Agency Director Bill Pulte has filed a second criminal referral against Fed Governor Lisa Cook. The new referral relates to a property in Massachusetts following a complaint alleging that Cook fraudulently listed homes in Michigan and Georgia as her primary residence when she obtained mortgages in 2021. Elsewhere, Brazilian President Lula plans to hit back on Trump's 50% tariffs. Sources telling us here at Bloomberg that Brazil is starting the process to retaliate against the tariffs. Brazil's government has 30 days to assess a potential response. And Jannik Sinner has continued his strong start at the US Open with another straight set win. Women's number 2 seed Iga Swiatek struggled a bit but battled back to advance to round 3. And the singles title hopeful American Coco Gauff won in the second round, setting up a potential showdown with Naomi Osaka. And that's your Bloomberg Brief. Anne-Marie.
Lizzie, thank you so much. US Open fever right now in New York. You actually missed last night to come join me this morning.
My boys, my dogs invited me, and they had actually front row seats, but I said no.
You're committed to
I'm
Bloomberg.
doing surveillance with Anne-Marie Porter. Yeah.
All right, well, hopefully you can get to go before the US Open ends. Up next in the program, a battle over sufficient cause.
You had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. We'll continue to fight this battle.
What does for cause mean? Krishna Guha of Evercore joins us next. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. We are waiting for, of course, this morning, that all-important PCE report, the Fed's preferred inflation gauge. Forecast to show excluding food and energy rose 2.9% in July from a year ago, fastest pace in 5 months. But guess what? Governor Christopher Waller says he thinks inflation right now, or the tariff impact on inflation, is, quote, transitory. So you have to ask, does a hotter than expected PCE take a rate cut really off the table when it comes to September? Under surveillance this morning, we'll be debating that all morning. But under surveillance this morning, another debate, a battle over, quote, sufficient cause.
Mr. Pulte has deferred those allegations over to the Department of Justice to investigate them. What I will say is that you had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. He laid it out in the letter that he provided to her and to the public as well. And so we'll continue to fight this battle.
Here's the latest. A hearing is scheduled for 10 a.m. Eastern this morning on Fed Governor Lisa Cook's bid to keep serving while her battle with President Trump plays out. Cook and her lawyers argue an unintentional clerical error may be to blame for the mortgage dispute at the center of her dispute with the President of the United States. Bloomberg's Tyler Kendall joins us now. Good morning, Tyler. So what should we expect at 10 a.m.?
Yeah, hey, Anne-Marie. Well, there is a lot to dig into, but the first matter of business is going to be the fact that Cook is seeking something known as a temporary restraining order. That would allow her to be reinstated into her seat, potentially vote at that September meeting, while the broader issue of her firing plays out in court. And Cook's lawyers argue that if she's not able to be reinstated during this time, it would cause irreparable harm, not just to Cook, but to the Federal Reserve as an institution as they head into their next rate cut meeting. Now, importantly here, Cook's lawyers are arguing that President Trump violated Section 10 of the Federal Reserve Act, which allows him to fire a Fed official if there is sufficient cause. And I bring up cause because this is going to be this one issue item that we pay very close attention to as this plays out in the coming days. Cook's lawyers say that there is not sufficient cause here, but as you mentioned, they did offer a potential defense yesterday when they filed these court documents, saying that these allegations of mortgage fraud are not true. But if there are any errors, perhaps it was a clerical error and that Cook did not intend to deceive anyone and that she did not cause any harm. I bring up intent and harm because those are two factors that the judge is expected to weigh. Anne-Marie and Matt, if you ask the White House, they are doubling down on their pressure campaign against Lisa Cook, saying that this is well within President Trump's right to fire her.
Tyler, thank you so much. And of course, you'll be there the entire morning outside the court. That expected to happen at 10 a.m. Let's continue the conversation. Krishna Guha, Evercore ISI Vice Chair and Head of Central Bank Strategy, joins us now for more. Krishna, thanks so much for joining us this morning. Do you have an understanding of how the court will define for cause in this case?
So I'm not an attorney. I'm an economist, and so I certainly don't want to mislead your viewers by offering legal expertise here that I don't have. What I will say, of course, is that the for cause protection and the idea that this establishes a high standard before a president can consider removing a Fed official is central to our understanding of how central bank independence operates in the U.S. So there's a lot at stake in this litigation.
Krishna, you're head of central bank strategy at Evercore ISI as well as vice chairman. And then I wonder what you think about inflation. We're looking for PCE to come in at 2.9%. We had core CPI at 3.1%. We had core PPI at 3.7%. And yet, Chris Waller says it's close enough to 2. Do you agree?
I think what's important here is that the inflation that we really care about is the second round inflation. It's the risk of inflation persistence. And no one, as a matter of theory or practice, thinks that the central bank should be directly responding to the first round effect of tariffs like a tax mechanically on prices. The issue is what pressure does that, if any, impart to underlying inflation dynamics? That's the second round question. And so I'm less focused on the individual month's inflation pass-through from tariffs. That's the first round mechanical stuff. Than I am in trying to assess what the risks are of inflation persistence and balancing those against the risks to the labor market. I actually think the conditions likely have been met for an initial cautious step down towards a more neutral rate. But I also think that the Fed should be very careful about signaling what follows from here and making it clear that it'll take the time it needs to assess the incoming data and judge whether, for instance, by December, the case for another cut has or hasn't been met.
Well, what if the Fed didn't, Krishna, take the time it needs? What if the Fed wasn't as thorough? What if the Fed was stacked with Trump appointees who just wanted to do the president's bidding? Would you buy then 10-year treasuries? I mean, does 420 make sense to you?
So I am concerned about the outlook for central bank independence, and I'm concerned about the Cook affair in that context. Obviously, if the president is able to push Governor Cook out, then that accelerates the time frame over which his nominees may acquire a majority on the Fed board. And that's, as you know, that then raises questions as to whether we might see an unprecedented effort to deny certain Reserve Bank presidents renewal, again, without cause. But also that the move against Cook based on allegations that have not yet been charged or proven in court or established by any kind of quasi-judicial process essentially weakens the protections that future Fed governors, by the way, including the people who President Trump puts in place, will have in the event that they have to make decisions in the future that this or a future president doesn't like. So this does absolutely all bear then on how you think about the outlook for policy and what may happen to bond yields. I personally feel that the market is likely underpriced for the risk that we could see a more of a break in Fed institutional practice and potentially the conduct of monetary policy over the next year or so as the Fed board transitions and as the administration attempts to acquire more authority over who gets to determine when for-cause conditions have been met.
Bill Dudley and Lael Brainerd agree with you. We spoke to both of them this week in terms of the market reaction. What kind of, I guess, yield should we see, say, on the 10-year if the market was really taking into account that this could be more of an erosion of Fed independence?
So I think what you see at the moment is that the bond market is not really quite sure how to interpret, first of all, the actions relating to Cook. And secondly, that the market is wary of shorting bonds aggressively in an environment in which, per Governor Waller yesterday, we could discover soon that the last 3 payroll months were negative, right? Once all the revisions are in. These are not necessarily the macroeconomic conditions in which you would want to ramp yields. But I would say that if, and we're still dealing in a probabilistic and uncertain environment, but if we were to get further confirmation over time that the Fed is losing independence, and if this resulted, as historically generally it has, in a central bank becoming more structurally dovish, then I do think at some point you would likely see a substantial response in the bond market. The issue, of course, is when and under what circumstances would that happen. I think it's hard to predict and certainly hard to say with any confidence that adverse bond market reaction would come immediately.
Krishna, really smart stuff. Thank you so much for joining us this morning. Krishna Guha of Evercore ISI. And he brings up a good point, Matt. There's really 2 different things the market has to focus on. One is these allegations, and that needs to play out in its own due process. And then, of course, this question of whether or not the Oval Office is exerting way too much pressure on the Fed.
Right. Well, I think the Supreme Court is going to say that the president, because he was elected to run the country, is going to be allowed to decide what cause means. In terms of the allegations, I mean, is that really going to play out?
Well, it likely, potentially will. If there's an investigation, that's something we're going to have to watch.
I wonder what the penalty
and
is
cover
for that kind of
clerical
error.
The intent is going to be very important. Coming up on the program, Margit Brandt of Premier Estate Properties on concerns of a wealth flight from New York City. Plus, Lizzie Burden with your morning movers, including Caterpillar. Look at the stock this morning, warning of a larger than expected tariff hit, down 3%. You're watching Bloomberg Surveillance. Good morning. Welcome back to Bloomberg Surveillance. It definitely is a Friday morning with Matt Miller and myself, with John and Lisa off today. Markets this morning, very much just softer a touch because yesterday, Matt, we had, of course, an all-time high, 6,500 on the S&P 500. Bond market, really, as you've been saying, shrugging off any concern there is in terms of Fed independence. We're looking at a 4.22% on the 10-year yield.
Yeah, also interesting you don't see more weakness in the euro considering what's going on in France right now. I thought the market would be more concerned, but I guess the dollar weakening at the same time puts them in the same situation.
2 hours away from the cash open, we want to get you some morning movers this morning with Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. Let's start with the losers this time, shall we? We go to Caterpillar. Those shares down about 3% in the pre-market. This after the company warned that it's expecting a tariff impact of up to $1.8 billion this year, higher than it had guided earlier this month. And of course, it's important because this is one of the world's biggest makers of machinery for mining and construction, so it could have knock-on effects for those industries. Next up, we turn to Ulta Beauty, up more than 3% in the pre-market. The beauty store chain issuing a raise and a beat, even as it's warned of a potential pullback from customers. And that's interesting given that the demand for cosmetics has really held up so far this year, despite the economic uncertainty. So maybe the cracks starting to show there. Finally, Alibaba, its US listed shares up nearly 3%, more than 3% now in the pre-market. The Hong Kong listing, though, had dropped into the red, but American traders focused on its reported surge in revenue from China's AI boom, even if it saw a drop in profit because of its aggressive competition with the likes of JD in the e-commerce space. But also interesting to note, Anne-Marie, the Wall Street Journal writing that it's planning to create its own AI chip to try to help China fill the Nvidia void. So we'll keep an eye on that. Anne-Marie, back to you.
Thanks so much, Lizzie. That last story, Matt, incredibly important. Front page of the Wall Street Journal this morning. Alibaba creating this AI chip to fill the Nvidia void.
Yeah.
This comes back to the question that even if the U.S. government is going to allow even the highest level chips into the Chinese market, will China want their firms to keep buying Nvidia, or do they want them to get addicted to their own hometown heroes and their own technology?
Yeah, I think the Chinese Communist Party has, on a couple of different occasions, given a signal that it does not want companies in China buying NVIDIA's H20 chips. And the interesting thing is, historically, China has had no problem just stealing IP from other manufacturers, international manufacturers, and making clones of that technology. And I don't see why they wouldn't do it this time. It's going to be expensive. It's going to take a lot of a lead time, but it's definitely going to happen.
Well, that's been the whole concern on why they've put export controls on a number of these NVIDIA chips. On our radar this morning, so what else we're watching? A federal judge set to hear Fed Governor Lisa Cook's bid to temporarily block President Trump's from firing her. Cook's lawyers are suggesting a, quote, clerical error is behind the mortgage dispute that has Trump pushing for her dismissal. So this is going to happen at 10 a.m. time. Likely, many people expect there to be an injunction. Likely, that means she can continue working. And Matt, to your point, that means she will get a vote in September at the Fed meeting.
Right. And I think her vote is going to please the president. So it's in a sense, it's ironic, if I'm using that term correctly, that the president is going after a dove. Right. I mean, right. And also, if they decide to stack the board of governors and take out some presidents, they'll go after Goolsbee first, and he's a dove as well. So.
Yeah, so it's looking very dovish, at least for 2026. I guess that's the take. What really is going to be the question for this case is what constitutes for cause. I keep going back to what the Supreme Court said in May. The Fed is a private, semi-private, quasi-private entity. They're inoculated from any political pressure. Does that stand? Because and you look at what the Federal Reserve Act, it doesn't really define what for cause means.
Right. And no, and it's completely unprecedented. And this is why I think after watching Bloomberg surveillance every morning, that the Supreme Court is going to defer to President Trump on this issue. They have done that in so many cases this year, and I can't imagine why they wouldn't in this case as well. Say that the president is the one who gets to decide what for cause means, and he knows a thing or two about falsifying business records.
And mortgages. He's a debt guy. Elsewhere in Washington, D.C., the CDC has a new acting director after President Trump fired former head Susan Monterez. She'll be replaced by Robert F. Kennedy Jr.'s current deputy, Jim O'Neill. The White House saying Monterez was fired because she was not aligned with Trump's agenda. And around the world, Russian leader Vladimir Putin and Indian Prime Minister Narendra Modi are set to meet in China with President Xi Jinping Sunday. The summit comes as U.S.-India relations are in flux after President Trump imposed 50% tariffs over New Delhi's buying of Russian oil. And this has really sparked a huge debate, especially in India. Recently, we had on Bloomberg TV Peter Navarro, and he actually called the war in Ukraine, quote, Modi's war, because of how much crude India has made off of this war. They're bringing in Russian cheap crude, they're refining it and basically selling it back to places Russia used to sell to, like the European Union. And what we've seen, though, with this trade fight is Modi leaning in more to the BRICS And even Xi Jinping sending a secretive letter to Modi saying maybe we should start relaunching of bilateral ties. So I think this summit's going to be really interesting.
I mean, this is your wheelhouse, right? The oil patch, Putin, and I mean, I might call it Merkel's war. I think it's so fascinating that the EU has financed Moscow to such an extent and did nothing when Putin moved to annex Crimea and continues to buy refined oil products from countries like India, despite the sanctions that they put on.
Not only that, I mean, China, of course, is the biggest player here when it comes to imports of Russian crude. But Europe is also still directly buying from Russia. It's interesting you say that about Angela Merkel, because that was Trump's big fight in 1.0. He was vehemently against Nord Stream 2. And his whole point of NATO, why are we paying into something if you are going to continue the purchase of Russian crude?
No, I was in Berlin, and his energy secretary, Dan Brouillette, made a number of trips to try and convince the Germans to buy LNG from the U.S. instead of funneling money directly to Moscow, and they refused time and time again.
Trump won. They called it freedom molecules. That was the branding of trying to get more LNG into Europe. All right, we're going to take a different turn today, turning to real estate. Political uncertainty in New York is pushing a number of wealthy New Yorkers to Florida. New York Governor Kathy Hochul even saying, quote, I don't want to lose any more people to Palm Beach. We've lost enough, when she was asked about raising taxes. The migration driving up demand for homes in West Palm Beach. Joining us now is someone that knows a lot about that is Margaret Brandt, real estate advisor of Premier Estate Properties. Thank you so much for joining us. You're in New York.
Yes.
So this is exciting. You have seen this financial migration. Can you explain to us what's different now? Because we really saw a lot of this under COVID.
Of course. First of all, thanks for having me. I'm a New Yorker. I grew up here. And I think what's different this time is we're seeing a lot of organic momentum. First it was with the 2017, tax implications in New York, followed by COVID. And then after COVID, we sort of saw this change where people were opening their businesses in Palm Beach. And it was sort of like, Wall Street South from 2022 to 2024. And now in 2025, Mamdani kind of seems as, the likely, winner of the New York City mayoral race, kind of seems to be spurring further interest, specifically in the summer, which is typically a slower time for us, in July and August. But we're seeing some tailwinds.
Most Palm Beachers are coming up here.
Of course, yeah. But just, we're definitely seeing some tailwinds from this New York City mayoral race.
So when it comes to Palm Beach specifically, and those New Yorkers coming down, are they still keeping a foothold in New York, or are people really selling everything in New York and fully relocating to Florida?
So what's different now, as opposed to even like 5 or 6 years ago, is, there's been billions of dollars. I mean, Steve Ross, the king of New York, is now, throwing billions of dollars into schools, into condos. And so we sort of have the infrastructure into schools. We have the infrastructure now to accommodate full-time moves. So to answer your question, what I'm seeing is that a lot of the big hedge funds are moving their businesses to Palm Beach. They're establishing residency. They're establishing Florida for tax purposes as well. And they're moving their people there because it's really sort of become this mini Miami in downtown West Palm. So it's a place of productivity and not a place where people go to retire. We have a very good friend and client who runs a major hedge fund, and he polled his people, and 30% of them were open to a move to Palm Beach or Miami. So I think that's an interesting statistic that 30% were open to making the move to Florida.
It's interesting you bring up West Palm because I feel like through the years, I've seen just every time I go down there, there is a new construction site.
Yes.
Big time businesses. So are prices going up? Are people being priced out?
I think that's false. But what I will say is that I look at Palm Beach as either a lifeboat or a hedge, right? And in terms of a lifeboat, you don't want to wait till the ship is sinking until you come and reach out for help. And then in terms of a hedge, I mean, you guys, it's not rocket science. You follow stocks all day here, right? And everyone always says, the prices couldn't go up further, or there will be a crash. There will be something where the prices stop. But if you look from 2017, to COVID, to the, businesses moving down there, this Mamdani thing is just another spur. So I think that the proof is kind of in the pudding and where the prices have been going. And the pricing remains strong because we're a small island. If you look at Palm Beach Island and Manalapan, it's a very small piece. We're not Miami. Miami is big and spread out, but Palm Beach specifically is very small, which keeps the prices strong.
I kind of wonder about the social aspect. Last time I was down there was President Trump, so it was just like the Breakers and the Bath and Tennis Club. But
yes,
now that all of my friends from the Upper East Side have moved down, like Bill Bouquet is open up down there,
yes.
Lou is open up down there, so you've got all these sort of Manhattan social staples that have moved to Palm Beach. What else do you see down there?
I mean, Palm Beach is really happening. I mean, all the New York City stuff, all of the, exercise classes, Sweet Green, like downtown West Palm is kind of what Tribeca was 10 years ago. You know what I mean? So it's very similar. And I think we're seeing Hotel Venetas, they're opening up. So they're the same owners of Hotel du Cap. We're seeing a lot of fun restaurants, and it's a scene. It's a scene, and it's a lot of fun. It's no longer your retirement place, I'll tell you that.
Well, Matt brought up the president. I went down there one weekend and with him, part of the press pool. And I will say, Palm Beach residents definitely get annoyed by the road closures that happen with President Trump. But it does feel like at the same time, he's almost like the hometown hero. Mm-hmm. Do you find Palm Beach to be Republican, or is it a bipartisan city? Is it this place that only the GOP folks?
Are there any Democrats?
Are there any?
Good question.
I mean, here's what I think. I think that because there's such a New York City connection to Palm Beach specifically, it is mixed. I wouldn't say that it's exclusively red because there's a lot of New Yorkers, and New York is mixed, right? So there's blue and there's red. However, President Trump is most certainly, I would say, like an influencer. He's probably the biggest influencer. And there are a lot of people that want to be close to him, whether it's personal family, friends, whether it's people that admire him politically. Before the election, we saw sort of a Trump bump in the estate section, which is that area surrounding Mar-a-Lago. Before the election, there was probably 6 properties that had sat on the market for 6 months or more. Right after the election, all 6 of them went within a short period of time. We were involved in all of them, I think.
Proximity to power, meaning
proximity to power. So, I mean, we base our, you have to look at facts, and what actually happened is he did create kind of a boom, and that's trickled in even past the election. And now we're sitting here in August, and there's definitely, it probably leans red, but there is blue.
Good to know.
Yeah.
Margit Brandt, thank you so much for sharing some of that insight with us this morning. Margit Brandt of Premier Estate Properties. Let's get you an update on stories elsewhere we're watching this morning. Here's your Bloomberg Brief with Lizzie Burden.
Hey, Anne-Marie. Federal Reserve Governor Christopher Waller expects the central bank to cut rates by a quarter point at its meeting next month. Waller said that with underlying inflation close to 2%, market-based measures of longer-term inflation expectations firmly anchored, and the chances of an undesirable weakening the labour market, he anticipates additional cuts over the next 3 to 6 months. And elsewhere, Nike is planning another round of layoffs as part of its efforts to get back to growth. According to an internal memo seen by Bloomberg, Nike said, quote, "The moves we're making are about setting ourselves up to win and create the next great chapter for Nike. The cuts will impact less than 1% of Nike's corporate staff." And finally, former MLB All-Star Mark Teixeira is running for the U.S. Congress. The 3-time All-Star who won the 2009 World Series with the New York Yankees announced that he's going to seek the Republican nomination in Texas's 21st congressional district. The 45-year-old is aiming to succeed Representative Chip Roy, who's running for Texas Attorney General. And that's your Bloomberg Brief. Anne-Marie.
What do you think of that, Matt? Baseball player.
Wait, is Texas Attorney General, is that Ken Paxton?
Ken Paxton, yeah.
So he did mortgage fraud too? Is that the allegation?
The reports are that he has 3 homes listed as his primary residence, and he's also renting some out that are not supposed to be rented. But I'm asking you about the baseball player that might go to Washington.
I have tried to care about baseball. From years of watching Tom Keene, I've been motivated to go and watch the Yankees, the dreaded New York Yankees, to go even to Citi Field and watch the Mets. But it's just way too boring.
Dreaded New York Yankees, that's where we cut it off. Up next in the program, the AI boom.
The godfather of AI, Jensen and NVIDIA, continue to dominate. And I think this is just a further validation tech stocks go higher. The boom's just starting. This just shows the next stage of adoption is actually just starting.
Gene Munster of Deepwater Asset Management joins us next. You're watching Bloomberg Surveillance.
Silence isn't empty. It's full of proof. When a silent gesture orchestrates masterpieces, we're not just one step ahead, we're in a league of our own. From 50 years ago to today to tomorrow, CIB has always been here. Growth, innovation, and setting the standard for half a century. Progress driven by quiet mastery.
Good morning. Welcome to Bloomberg Surveillance. I'm Amber Herdern alongside Matt Miller. We are counting you down to the all-important 8:30 data print of PCE, then 10 o'clock in Washington, D.C., potentially some fireworks when it comes to what is going on with Governor Lisa Cook. Will she get this injunction to be able to sit on the Fed board, continue to do her job, and maybe even vote for an interest rate cut in September? Futures this morning are softer. We're on the red, down 0.3% on S&P 500 futures. But, of course, we hit a fresh all-time high yesterday. Under surveillance this morning, the AI boom.
The godfather of AI, Jensen NVIDIA, continue to dominate. And I think this is just a further validation tech stocks go higher. The boom's just starting. I mean, if you look at these numbers, especially when you factor in what China is going to be, I mean, Jensen talked about 50 billion, 50% type growth number. This just shows the next stage of adoption is actually just starting.
Here's the latest. The Nasdaq sitting just below all-time highs, propelled by Wall Street's big bets on AI despite lackluster results from NVIDIA. Gene Munster, managing partner at Deepwater Asset Management, is pushing past sell-side noise, writing, "The bottom line is we're still early in the AI build-out, and growth next year will be higher than most expect." Gene joins us now for more. So, Gene, you're pretty comfortable, it sounds like, with what's going on in NVIDIA's growth, even though it is slower than what we've seen in the past. Are you concerned, though, about where policy is going in regarding NVIDIA's access to China?
The simple answer is not concerned about policy. I think that's going to kind of right itself in the next few weeks. Within their January quarter, they're going to see a big return in their China business that's, of course, not factored into the street estimates. My concern around China is more structural long-term, is that the Wall Street Journal this morning is reporting that Alibaba now is coming out with a new inference chip. Of course, we've heard Chinese leadership cautioning not to buy some of the H20s after what have been perceived as some insulting comments from the White House in terms of the types and the caliber of chips that they're being allowed to buy. All this in the background of what is clearly the most important topic for nations is where their position is within AI. And so when I think about the China opportunity, I believe that it's a huge opportunity for NVIDIA over the next year, 2 years. But I think that it's going to be increasingly competitive with the likes of Huawei, with the likes of Alibaba. Interestingly, that new Alibaba chip is reportedly able to work with a CUDA, which is the essentially the operating system around NVIDIA's chips. That's kind of part of the fabric that holds that very intense tech economy together for NVIDIA. And so the simple answer is this, is that it's going to get a lot better for NVIDIA related to China. I think if you take the perspective of 5 years from now, China doesn't want to be held accountable to owning U.S. chips, and Chinese leadership is making big investments. So it's going to get more competitive there longer term. Doesn't change how I feel about the AI trade. If anything, it actually makes me more confident about it. But I think that's the kind of the scope and the trajectory around China.
When it comes to China and U.S. policy, the CFO had this to say regarding that 15% that the U.S. government says that NVIDIA has to give back to the government for the export license. I don't have to do this 15% until I see something that is a true regulatory document. So is it your understanding that basically the H20s can go to China right now and NVIDIA doesn't have to legally give the U.S. government the 15% the president said he had a handshake deal on?
It's my understanding that the licenses actually haven't been issued. Jensen made a comment about the timing of when those licenses are going to be issued. I think that separately, they still don't have clarity from the White House around the 15%. Why that matters for NVIDIA investors is it's still unclear about how that they're going to account for that 15% revenue share, and separately how they're going to think about potential price increases to offset that. And so that piece, as you are appropriately pointing out, kind of an important vector. And I think when you kind of put this whole mix together, I just want to take a step forward into what is going on with NVIDIA here. The stock is trading off after a very favorable quarter and what, in my estimation, was a better than expected guide. And I think part of that is related to some of the uncertainties that you talked about, timing of these licenses, timing of the revenue share. There's another piece that kind of vectors into this, which is NVIDIA's businesses, because China is getting a little bit smaller, is increasingly dominated by several companies. The top two account for just under 40% of revenue. I estimate the top six are 60%. And so there's this China and customer concentration that is a derivative of the China conversation. And so it gets quite complicated. And I just take the approach, at Deepwater, we take the approach of what's actually happening, what's the bigger picture, what's going on. And ultimately, we still think we are very early, second inning in AI.
क्रूड ऑयल में यहाँ पर देखो एक प्रॉफिट बुक कर लेना, यहाँ पर सपोर्ट तो है, बट इशू ये आ रहा है यहाँ पर नेचुरल गैस में, सॉरी क्रूड ऑयल में ना सपोर्ट ऑलरेडी सपोर्ट क्या है, रीटेस्ट जोन है एक्चुअली, टेस्ट कर चुका है यहाँ से, एंड इसके नीचे एक और लेवल है, वहाँ पर भी सपोर्ट है। ये दोनों ही लेवल 5690 वाला और नीचे 5630 वाला, ये दोनों ही सपोर्ट जोन है, बट बहुत पास बन गए और ये दोनों ही टेस्ट हो चुके हैं। बट स्टिल आई एम एक्सपेक्टिंग कि अगर ये थोड़ा सा नीचे वाले लेवल पे आ जाए ना तो ज़्यादा बेटर रहेगा बाइंग करने के लिए, सेफ रहेगा वहाँ बाई करना। दिस नीचे और भी सपोर्ट है, बट एक चीज़ यहाँ पर रोक रही है कि ऐसा है कि डायरेक्ट सेलिंग आई है, तो थोड़ा बहुत हो सकता है रुके यहाँ पर, प्राइस वापस ऊपर जाएगा, सेलिंग ऊपर से वापस आ ही जाएगी अब, बट दिस लेवल इज समवट बाइंग जोन कह सकते हो। थोड़ी बहुत यहाँ पर प्राइस रुकेगा जरूर, तो वैसे सेलिंग में जो लोग हैं निकलना चाहें निकल जाओ, अगर ट्रेल करोगे तो फिर एक ही सेकंड टारगेट और रख सकते हो। मैं यहाँ पर बाइंग का प्रेफर करूँगा कि यहाँ पर बाइंग करना नीचे वाले लेवल पे, इवन तो यहाँ से भी बाइंग आ सकती है, बट यहाँ पर कॉन्फिडेंस नहीं आ रहा है। बेस्ट के सिनेरियो क्या है कि ऐसे जाए, थोड़ा बहुत पुल बैक दे और फिर ब्रेक डाउन करके इस लेवल पे आ जाए, तब यहाँ से एक बाइंग आए वापस। प्योर बाइंग आ गई यहाँ से बड़ी वाली और फिर यहाँ से सेलिंग आती है, तो फिर ये लेवल होल्ड नहीं कर पाएगा, तो ज़्यादा बाइंग नहीं आनी चाहिए यहाँ से। ठीक है, तो थोड़ा सा यहाँ पर एक बाइंग का बुक कर लो, ट्रेल कर रहे हो तो आपकी मर्जी, थोड़ा टारगेट और मिल जाएगा, नहीं तो इतना ही है टारगेट। बाइंग थोड़ा सा यहाँ से प्लान करेंगे 5630 वाले लेवल से, वापस ऊपर जाता है तो वापस सेल कर सकते हैं इसी एरिया से 5800 के अराउंड। बाकी नेचुरल गैस में भी एक ट्रेड लगा रखा है, लेट्स सी, कल से बेरिश ही है, मॉर्निंग पे थोड़ा बहुत ये फर्स्ट टारगेट ही दिया, सेकंड टारगेट तक गया नहीं, फिर ये ब्रेक डाउन हुआ है एंड देन इट इज़ अ एरिया ऑफ इंटरेस्ट, जहाँ पर एक एक्सपेक्ट है थोड़ी बहुत बाइंग। ओवरऑल बहुत ज़्यादा बेरिश हो रखा है, नेचुरल गैस जितना ऊपर गया था उतना ही वापस नीचे आने की कोशिश में, एक ऊपर से छोटा सा हेड एंड शोल्डर पैटर्न भी बन गया, उसका ब्रेक डाउन भी हो गया यहाँ पर 260 पे। तो अब ऊपर भी जाना है तो मार्केट को एक रिवर्सल पैटर्न ही बनाना पड़ेगा, विदाउट उसके ऊपर ज़्यादा बाइंग आएगी भी नहीं। बाकी अगर यहाँ वापस आ जाए इस लेवल पे तो यहाँ वापस सेल कर देंगे। बाकी 7 PM यूएस मार्केट की ओपनिंग है, 7:30 पे ध्यान रखना, मैन्युफैक्चरिंग PMI और मैन्युफैक्चरिंग प्राइस इंडेक्स का डेटा है, वो गोल्ड और सिल्वर को इम्पैक्ट करता है दोनों ही। क्रूड ऑयल में सेलिंग की वजह रेजिस्टेंस था वहाँ पर, क्रूड ऑयल में बहुत देर से एक्सपेक्ट कर रहा था मैं सेलिंग आएगी, बहुत देर लगा दी, लेकिन इट इज़ ऑन रेजिस्टेंस। बाकी तो और कोई ऐसी न्यूज़ दिखी नहीं मुझे। लाइक भी करते रहो, 7 PM 7:30 पे देखते हैं हम डेटा।
And he said you can basically look through any tariff impacts when it comes, Matt, to inflation.
Yeah, and I want to point out also that we did hit all-time highs on the S&P 500
I was going to get to
yesterday. We are looking at a real seasonality issue because September is historically the worst month for stocks out of all 12. And right now, valuations are starting to look stretched again, right? In terms of the S&P 500, PE is at 25. So that's very high considering the average is around 17.
Yeah. And basically, everyone is still buying into this equity market because the Fed's going to cut rates.
Right. Well, exactly. You had Christopher Waller saying, 3% is near enough to 2 for him because he's back in team transitory. He literally said that.
With air quotes. I think it's important we have to say I'm back on team transitory with air quotes.
Right. Nonetheless, he used those words, which I find fascinating. Of course, a lot of economists will look through, as you mentioned, tariff caused inflation the same way they would look through maybe sales tax caused inflation. But sales tax doesn't go up 5, 6, 7x in one month.
Coming up on the program, Matt, another hour, Michael Purvis of Talbacking Capital Advisors as stocks pull back from the record highs we had yesterday. Ryan Wang of HSBC reacting to today's key inflation data. And Zachary Griffiths of Credit Sites expecting a 50 basis point cut at the Fed's next meeting. We begin this hour with stocks pulling back ahead of key inflation data, as we've been talking about. That's coming out now in 30 minutes as the Fed also has a battle of independence, and that is ramping up. 10 o'clock today, that'll be key. Michael Purvis of Talbacking Capital Advisors writing, the more Trump pushes the Fed away from independence, the greater the upside risk becomes to back-end yield. Michael joins us now. Michael, thank you so much for joining Matt and I this morning, especially ahead of the all-important PCE report. When it comes to this question of Fed independence, you think that there is a Fed-Trump put at this moment?
Well, I think the question people have to get into is if Trump really does, get his team in there and really sort of has a firm, leaves a firm imprint on monetary policy, which basically is going to come down to what I think you could describe as sort of unnaturally lower rates, right? Given the context of historical Fed response functions, right? Then you have to really question, well, what's going to then happen, right? And I think you're going to start seeing is a more exaggerated sense of what we have been seeing this summer, which is, look, we have seen the September rate cut locked. It started getting locked after the bad jobs report. It got locked again after Jackson Hole last Friday. And yet the 10-year has only bid marginally, right? Typically, as you get into a new cutting cycle, all the rates travel lower, right? You saw that a year ago. You saw that back in the 2018 into 2019 cutting cycle. There where the 10-year yield went down is basically as much as the 2-year yield did, as the Fed did that pivot, right? So the Fed is pivoting to some degree here. But if you look at the 30-year yield, that's actually higher. Those yields are higher now than they were before the bad jobs number. If you look at the Fed's calculation of term premium, the ACM term premium, that has been persistently, stubbornly high.
But Michael, can I just jump in here?
Yeah.
Is it that high if you're that concerned with Fed independence? Is 4.9% in a 30-year really that high if people are really concerned about not having an independent central bank?
Well, no, exactly. I mean, I think that's the point here. I think the question is that if he is successful in getting Cook out of the Fed and he's successful at really putting in sort of an uber dovish Fed, I think that you have to again get to the next question: is what is he going to do with that? Because if take a theoretical scenario where we get 200 basis points of cuts in the next 6 months, right? On a Trump-defined Fed, right? What's going to happen to the 10 and 30 year? They're going to go higher. Inflation expectations in the long run are, in my view, going to go a lot higher. And I think there's broader questions about, term premium, and then you're layering on hot monetary policy on top of a tax bill that is fiscal stimulus, on top of relatively low unemployment, right? So that's a recipe for all sorts of reasons to be, expect higher term premium, higher back-end yields. We know Bassett
Michael, can I ask, why aren't any of the president's advisors telling him how this works? Surely Scott Bessent knows that when you attack Fed independence, the term premium is going to get higher. So the Fed can cut rates, but the 10-year is going to be higher. The 30-year is going to be higher in terms of yields. And the president wants rates down, at least in part, so that he can pay less on the outstanding debt. But he's going to end up paying more on the outstanding debt when he goes after doves like Lisa Cook.
Not to mention the fact that the stock market cares a lot more about the 10-year than it does about the 2-year. Real estate assets care a lot more about the 10 and 30-year than they do about the front end. Right, all that. Right, the economy cares more about the 10-year. Right, so this is where I'm going with this whole. Where I think the plan is best, and it's been very clear early in his term that he wants. He's really trying to get the president focused on the back end. So play this out, right? If rate cuts, particularly if they're quote unquote unnatural rate cuts, are not the answer to lower back end yields, then I think it's got to be. He's going to rebuild the plan may well be to rebuild the balance sheet. Right. We've done that after the GFC. We've done that after COVID. We did it during World War II. Well, we didn't do exactly balance sheet build, but we did do a form of yield control during World War II. Right. So there is precedent. And I don't know how else they're going to get 10-year yields lower if they get a very, very dovish group of individuals running the Fed in there. Right.
What are you looking for on PCE today, Michael? Because Waller seems to think 3 is 2, but it's 50% more, obviously, and inflation is headed in the wrong direction. So it seems to me odd that the Fed would cut, especially that they would cut 50 basis points as inflation turns around and goes higher.
Yeah, look. The news we got from the July, since the end of July was that. The NFP was, 35,000 a month. There was weak ISMs. There, a lot of subcomponents of the services ISMs were really particularly weak there, right? And so there was sort of a rationale for after the July data hit to sort of think about a September cut. I actually think Powell would be inclined to do a cut regardless of whether Trump were president or not, just based on the data. Would he do? Would it be a very hawkish cut? Quite possibly.
Everyone is talking about this hawkish cut, Michael. So basically what you're saying is one and done.
Well, I'm saying one and a lot of conditionality. We don't know what the fall is going to be, but I think there's a really ugly scenario that could be unfolding where if these trends of, to Matt's question about the PCE, look, the boogeyman of the inflation is really not the tariff. It's just really about that super core print we got in July was not pretty, right? And that's something that has a little bit of inertia away from all this tariff news, and that could be really much more troubling. Everyone's been so focused on the tariff-related inflation, and I think there's a very understandable debate about how long that is and what it really means. But the services stuff is something that's been, sort of lurking in the background for some time, and particularly on Supercore. So if that comes in, if Supercore comes in this morning and in the next CPI as being sort of unfriendly, I think we're going to see a really, really interesting fall.
How difficult, though, is a hawkish cut for Powell to talk about in the press conference when this is what Waller had to say last night? As I stand here today, I anticipate additional cuts over the next 3 to 6 months, and the pace of rate cuts will be driven by the incoming data. He is squarely looking at the labor market.
Yeah, I think he's also squarely looking at a job interview too. But
he's running.
but look, I mean, he's look. I think the jobs data has definitely, based on the July numbers and the revisions, right, was clearly weaker. I think the question we have to also recognize is that there is a lot of volatility up and down in some of this data, right? And I think there's a lot of understandable questions about labor force contraction and all that kind of stuff, right? I mean, if the immigration policies are constricting labor slack, right? I mean, I think that is one of those pro-inflationary dynamics that we're going to, the Fed's going to have to contend with there. But look, I think there's a wide range of scenarios that can play out after the September meeting. which may cause Powell to really reverse and pivot again, right? Again, I'm putting political noise to the side here, right? But what if we get strong inflation, in September and October after that cut? And the jobs data is sort of okay. What is Powell then going to do, as we approach the meetings at the end of the year? Is he going to do no cuts? Is he going to even maybe signal a hike back to where he was? This job is hard without having the president of the United States, be pushing on you every day, right? So there's a lot of strange currents in the data, and I think Powell's just kind of reading them as they come, right? There, but I think he's going to have to navigate that. And Waller's thing aside, he's being pretty clear about his views there. But again, people were very clear a year ago that the economy was definitely going to weaken. They had to get in front of the neutral rate as fast as possible. They gave us 50 cuts last September. 50 basis points of cuts, and that marks the lows across the curve of interest rates over the last 12 months. So, it's a very, very resilient economy, but there's a lot of complexities in the inflation data and also now the employment data.
Michael, thanks so much for joining us this morning. Michael Purvis of Talbacken Capital. Let's get you an update on stories we're watching elsewhere this morning. Here's Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. President Donald Trump has revoked former Vice President Kamala Harris's Secret Service protection. Vice presidents normally receive 6 months of protection after leaving office, but according to CNN, Harris's protection was extended for an additional year by President Biden. Trump's directive to cancel Harris's protection goes into effect on September 1st. Elsewhere, the TSA is taking a heel turn on some long-standing practices at airport security checkpoints. For the first time in almost 20 years, passengers no longer have to remove their shoes and run them through X-ray machines. Officials are also now signalling that they intend to ease the rule limiting containers of carry-on liquids to just over 3 ounces. And over to sports, the Phillies' Kyle Schwarber joined an exclusive club last night, becoming just the 21st player ever to hit 4 home runs in a single game as the Phillies took down the Atlanta Braves. As for the New York teams, the Mets fell to the Miami Marlins 7-4, and the Yankees won their 5th straight game, defeating the Chicago White Sox's 10-4. And that should be my brief, Anne-Marie.
Lizzie, thank you so much for ending on the Yankees. Matt is here laughing. I promise I didn't do that.
It's just so, God love Lizzie Burden, right? A Scottish lass giving us the baseball scores. You've lived in England. They don't know how baseball works.
No, they're more into cricket.
Yes, I love cricket also. But
you don't like baseball?
Well,
cricket's even longer than baseball.
Yeah, but cricket
That's a weird take,
it's more
Matt.
of a drinking game, right? And baseball is just dead boring.
Baseball is not boring when you're rooting for the right team, which is the New York Yankees. Up next, the morning calls as Wall Street turns bearish on Marvel, plus Dana Telsey of Telsey Advisor Group as the de minimis exemption ends today. That's next. You're watching Bloomberg Surveillance.
The longer end, we've seen rates climb higher and higher and higher because there is this sense that whatever dovishness the Fed is going to undertake now, whether it's just the people on the FOMC becoming more concerned about the labor market or because the Fed is losing independence and is going to become more dovish, but we're going to have to pay for that sometime in the future with higher interest rates down the road. So that is where we call it zoo steepening because it's a bull market at the front and a bear market at the back.
That was Brian Nick of New Edge Wealth this morning. Actually, a viewer just wrote into me saying, you said it's a sleepy Friday for August, but don't jinx it. But that's what we do have this morning. Equities are pulling back just slightly, but we had a fresh all-time high yesterday on the S&P 500. And of course, markets are just over 10 minutes away from getting the important PCE inflation data. And then everyone else potentially can then go enjoy their long weekend. Time now for the morning calls. First up, Bank of America downgrading Marvel to neutral, seeing incrementally higher uncertainty. That stock is getting hit, down more than 14% this morning. Next up, Morgan Stanley raising its price target on Ulta Beauty to $600, seeing room for upside given the industry's minimal tariff risk. That is up more than 2.5%. And finally, JP Morgan raising its price target on Gap to $32, seeing a buying opportunity due to the post-earnings sell-off. And now we're going to stick with retail. Investors digesting a slew of earnings from the sector and their signals about the economy. Dana Telsey, the CEO of Telsey Advisory Group, saying the tariff impacts on EPS and margins are being managed and price increases have not been fully passed on to customers. The bulk are expected to be visible in the third and fourth quarter. And Dana joins us now. Good morning.
Good morning.
Very busy earnings season. When will we see the full impact of the tariffs?
I don't think you're going to see the full impact of tariffs until heading into the fourth quarter. And it's on a select group of merchandise. And frankly, when you think of the newness that's coming in, particularly on the apparel side, perhaps you'll see more of the price increases on the newer products, which you may not even know because they never were issued before. So that's some of the bulk of it. What we've seen as we've gone through earnings season is you haven't heard that it's been the full impact. And keep in mind, we've had a price tracker on 80 items since April. And what we've seen on iconic items, whether Levi's 501, Barbie dolls, we haven't seen big increases across the board. It's very selective with those price increases.
You know, the administration has long argued that this is just like a sales tax, and it's only just a one-time price hike. But the thing is, these tariffs trickle in over months and months and months, and the manufacturers try and hold back price increases when they can. So they take some into margins, they pass some to suppliers. I feel like we're going to see a step up of prices over time.
That's what's expected. The expectation is it will step up. And you're right, it's a third, a third, a third. A third look to diversify their sourcing. A third look to share the cost with manufacturers. And then a third of the headwind is passing the prices on to the consumer, which we not have fully seen yet.
What do you think about Jonathan Levin wrote a column for Bloomberg Opinion yesterday pointing out that we have higher PEs on some of these retailers than we do on NVIDIA. If you look at the forward PE for Costco, it's 52 times earnings, and NVIDIA is only 40. Why are investors willing to ascribe such a value to these retailers?
Frankly, for something like a Costco, you have annuity from continued membership. You don't have a lot of people not renewing their membership. The fact that you still have the opportunity to grow your unit base globally, that it captures such a wide customer. So I've got great value and prices. I've got a sticky customer base that's only growing. And I still have the ability to open more units. And don't forget Kirkland's. They've got private label that's of value that can expand to many more categories.
Fantastic products.
Yep.
I'm always impressed by Kirkland products.
Are you a big Costco shopper?
Yeah, love it.
Do you have a Costco membership?
Of course. I have the executive membership.
Wow, you're definitely a different person than I remember you a few years ago. So who's doing well in this environment? It's the Costco's, it's the Walmarts, because they're big and they're able to really mitigate these tariff concerns.
What about off-price? Look what you just saw at Burlington, a 5% same-store sales increase. Look at Ulta Beauty, very strong. That whole beauty category, there's newness in beauty and it's driving demand. What about the category of denim? And we've seen denim look at Levi's, they talked about denim. On the category side, I mean, Gap did well with denim, both at Old Navy and the Gap brand. And you're seeing in some of the intimates areas, the rebound of Victoria's Secret and the turnaround with the inflection point in intimates. Give consumers something that's new and different, they'll open their wallet.
But no denim intimates, I hope.
There's no denim intimates.
Oh my God. When it comes to, oh man, Matt.
TMI.
You've got to have good jeans, right?
This is the whole American Eagle debate. Is there, or do you see a push in retailers of trying to go to this cultural Americana?
You know what? I think it is cultural. What's part of the conversation? So you look at the Cat's Eye group that basically has the Better Denim campaign for Gap. It's driving up tremendous number of views. You take a look what was just signed by Abercrombie, whether it is the NFL partnerships, whether it's the Dallas Cowboys. How do you remain relevant and expand your audience?
I saw that Brittany Mahomes is now going to be the face of Abercrombie. Travis Kelce, and I think this came out in the day they announced their engagement, is doing
American Eagle.
A partnership with American Eagle. You do have to have a celebrity endorsement tied to your brand?
It's working. I mean, you look at Beyonce and Levi's. And the effectiveness of being able to capture the number of their audience and their clubs, you're part of their club now.
By the way, I was shocked the other day when I looked at a TJ Maxx stock chart over 5 years. They absolutely crushed it. Mm-hmm. And I'm guessing that like a Burlington and a Ross Stores and these discounters are all doing very well. What do you like the best? Like if you could own a couple of retailers, only a couple of retailers, which would they be?
So when you think of best in class in my world, you talked about Costco. Look at TJX. They are best in class. They have category strength. It's very impressive what they've done. You take a look, frankly, what Ulta Beauty is doing in the Beauty Unleashed plan with the new CEO. Well, she's promoted CEO, but it's working, and they're capturing a wider customer base. It's compelling. You look at brand leaders, and brand leaders like a Tapestry, like a Ralph Lauren, a Levi's, they're effective because they capture the consumer. And you think about what can be enhanced. Take a look at Bath and Body Works, watching that very carefully for the speed at which they're transforming their business model.
Bath and Body Works? Is that just like soap bombs or?
It's soaps and sanitizers, but what about 40 million loyalty members? 40 million loyalty members who are going there on a regular basis, that matters. And today, capturing that customer is key.
Here's the key. To me, that sounds like the consumer has too much money.
Well,
not yet.
Well, it depends. Some people like, special bath bombs and things like that.
And also there's a trade down.
Here's the big question, though, in the luxury market, especially makeup. Do you think consumers will buy a $160 lipstick?
Very expensive, more expensive than the Hermes $80 lipstick or Chanel $50 lipstick. Yes, there will be people who buy it because it's the entryway to, instead of getting the $2,000 or $3,000 Never Full bag, you're going to get a $160 lipstick and you'll get a case that says LV.
Wow. You really think that people are going to buy this?
You can't surpass what a brand can generate with a lifestyle offering.
And for Matt, if you don't know, this is Louis Vuitton. They're introducing a new lipstick and it's $160.
I'm surprised you haven't bought that lipstick.
I'm a lip gloss girl.
Okay.
That's what it is. Dana Telsey, thank you. Thank you so much for joining us. Dana Telsey of Telsey Advisory Group. But it's a great point, Matt, when you talk about what's going on with the Walmarts, the Costcos, the TJX. They're still doing well. And a lot of that has to be from the upper level income bracket, almost trading down or being willing to go out there and want to find better price points.
Yeah, I mean, I look at the TJ Maxx total return, 167% over the past 5 years. So they really have rewarded investors that made that bet. I still think, like a Bath and Body Works, if you've got money left over after going to the grocery store, after paying your car payment, after forking over the cash you need to for your GLP-1s, to go to Bath and Body Works, you just have too much money.
Well, we'll see about that. I think a lot of teens like it, and you have daughters. So one day you might be that dad in the mall at Bath & Body Works. We're minutes away now from the all-important core PCE print. Ryan Wang of HSBC joins us to react. Keep it right here on Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. We are just 20 seconds away from the all-important PCE data. And going into that, markets are a little bit softer on S&P 500 futures, treading water into this all-important data. Fed Governor Chris Waller told us yesterday, look through any tariff impact on inflation. He's squarely focused on the labor market. And yesterday, S&P 500 hit an all-time high, fresh record high. For that data that's just crossed, let's get over to Mike McKee. Hey, Mike.
Good morning. Well, the data has not just crossed. It's coming over a little slowly this morning from the Bureau of Economic Analysis, but we're just getting this here. The personal income increased 0.4%. Personal consumption expenditures increased 0.5%, which are exactly what was expected. Now we've got the inflation numbers, and they are as expected. A 0.2 rise in the headline and a 0.3 rise in the core on a year-over-year basis. No change in the headline, 2.6%, and the PCE core index rounds to 2.9%. Now I got a note from Omar Sharif of Inflation Insights just before we got these numbers, and he said at 2.9%, which would be the highest since February, is still not necessarily a sign that inflation is picking up significantly. So we'll keep an eye on that. The other number we got was the advanced goods trade deficit comes in at 103.4, I think, here, and at 103.6. And basically, this is a significant widening because we were at 84.9% in June, 84.9 billion in June. So a 7.1% increase in imports and a 0.1% decrease in exports. So, Anne-Marie, it looks like maybe we went back to the pre-tariff effort to bring in a lot of goods in July before the president put the final tariffs on.
Certainly, it does feel like that pull forward effect was happening when you look at some of these numbers. But when it comes to the PCE, Matt, no surprise here. All bang in line when it comes to the core PCE.
Yeah, all exactly in line. So it's all the more interesting that you see the 2-year yield. It had risen up before this number came out to 364.40, and now it's dropped down to 362.80. I feel like PCE, and Mike, correct me if I'm wrong, PCE is so much easier for economists to predict because you get the CPI and the PPI before that, so you know the inputs in your model can work out pretty seamlessly.
Yeah, a lot of this data comes in other releases, so economists are pretty much able to get it spot on. We don't know the income and spending levels necessarily, but in this case, everybody forecast right. One thing we can tell you is that most of the personal spending came in the autos category. Motor vehicles and parts were up by 34.9 billion. Financial services and insurance were also up. So at this point, it looks like these were some goods in cars, but for the most part, it looks like services, financial services, housing, food, healthcare, and other services. So the spending numbers we'll get at in this report suggest maybe that people did cut back a little bit on spending on goods.
All right, Mike, thank you so much for that. Hopefully you could dig a little bit deeper into what's going into that PCE number. Now we're going to get a reaction from Ryan Wang, the U.S. economist at HSBC. So what do you make of this?
Yeah, well, as Michael said, the numbers are broadly in line with expectations. I still do think it's important that we're seeing that step up in the core PCE inflation rate up to 2.9%. The Fed has been projecting that it will reach at least a little bit above 3% at the end of this year. And that's very key. I mean, if we know that inflation is going to go up, and then we're hoping that inflation eventually begins to cool off after the full effect of tariffs comes through, it's still important to track these numbers every month.
How uncomfortable is it to actually see on your screen 2.9% for core PCE, yet at the same time pretty much knowing the Fed is going to cut interest rates next month?
Well, that's really the tricky part. I mean, inflation admittedly is much slower than it was just a few years ago. We're not getting those types of price increases. But at the end of the day, 3% is still not the Fed's 2% target. And this is why, although we do have some kind of consistency amongst the Fed policymakers, Fed Chair Jerome Powell saying that, yes, okay, tariffs are going to be a one-time effect, even if that one-time effect takes a year or multiple quarters to fully pass through. But still, we need to track the data. And I do think, if the Fed does cut rates by 25 basis points in September, it's still not going to necessarily mean a sequence.
नेचुरल गैस में देखो 7 बजने वाला है यूएस मार्केट इज गोइंग टू ओपन नेचुरल गैस में बुक कर सकते हो क्रूड में देखो मैंने बताया था यहाँ पर भी रुक सकता है थोड़ा बहुत बट बाइंग नीचे से ही करेंगे क्योंकि यहाँ पर थोड़ा सा रिस्क ज़्यादा लग रहा है रिस्क रिवॉर्ड भी ठीक नहीं है तो यहाँ आएगा तो इस लेवल के आसपास कहीं बाइंग का प्लान करना ठीक है बाई की आने को यहाँ से ही बाइंग आ सकती थी बट आई एम नॉट इंटरेस्टेड नेचुरल गैस में बायर्स बुक कर सकते हैं प्रॉफिट अगर कोई ट्रेल करना चाह रहा है तो उसकी मर्जी ठीक है एक सेकेंड टारगेट अगर रखना चाह रहे हो तो 263 का रख लो यहाँ तक दिस इज सेकेंड टारगेट बट मेरे अकॉर्डिंग तो अब यहाँ पर बुक कर लेना चाहिए होल्ड मत करना ठीक है अगर कोई ट्रेल कर रहा है तो वो उसकी मर्जी है मैं उस पर कमेंट नहीं करूँगा बाकी टारगेट जितना है वो हो चुका है इफ़ एनीबॉडी वांट्स टू ट्रेल दैट इज़ योर चॉइस ये फाइनल टारगेट रहेगा बाकी इतना ही टारगेट है फिलहाल के लिए ठीक है ट्रेल करोगे तो सेकंड टारगेट ये रहेगा अब इसमें और कोई नया ट्रेड नहीं है अगर थोड़ा ऊपर आ जाए तो देखते हैं इस एरिया के आसपास एक सेलिंग का प्लान रहेगा वापस दैट इज़ द ओनली एरिया जहाँ पर एक रेजिस्टेंस लिक्विडिटी हो सकती है अदरवाइज लिक्विडिटी मिलना मुश्किल हो जाएगा यहाँ पर अभी ठीक है तो नेचुरल गैस में कोई नया रेजिस्टेंस बन जाए तो बात अलग है इसी एरिया के आसपास कहीं सेल करेंगे लाइक भी करते रहो गाइस डोंट फॉरगेट टू लाइक द स्ट्रीम जिन लोगों ने लाइक नहीं किया है फटाफट से लाइक कर सकते हैं अननेसेसरी रिस्क मत लेना ठीक है, नेचुरल गैस में थोड़ा इस लेवल पे आए और क्रूड ऑयल थोड़ा नीचे आए तभी बाइंग या सेलिंग प्लान होगी। अब एक डेटा भी है, वो नॉर्मली गोल्ड और सिल्वर को इम्पैक्ट करता है, तो उसका ध्यान रखना 7:30 पे। लेट्स सी, इस डेटा को देखते हैं। 7 PM पे यूएस मार्केट ओपन होगा।
The end of next year. And so, again, there's this idea of a one-time effect, but that doesn't mean that one time is a short
By the way,
phenomenon.
they also wanted to average 2%, right?
Yeah.
And considering how high we've been and even how high we are now, we need to go far below 2% and hold there for years, if not decades, to average 2%, wouldn't we?
Well, that's very interesting because the part that was somewhat under the radar at Chair Powell's latest comments at the Jackson Hole Symposium is actually that the Fed is backing away from that average inflation targeting idea.
But they won't say
Isn't
it.
that
They're not
convenient?
explicit about it. It feels like they're targeting a range, but they won't actually say they're targeting a range.
Well, I think this idea that, okay, you have a 2% target and we want to pay a lot of attention to that number, but still there's some allowance, of course, for data noise. I think that is there. But I think we're back in a situation where bygones are bygones. We're not really trying to undershoot after the elevated inflation a few years ago, but we still do want to get back to 2%.
Governor Waller yesterday basically said he's all in on 75 basis points, except his view could change depending on the employment report. This time next week, we'll be looking at that jobs report. What are you and the team expecting?
Yeah, so, we're looking for a number that's around 70,000, right? So that would be pretty close to the July outcome, but it would be a little bit higher than the 3-month average of 35,000, which has attracted a lot of attention. Of course, we remember last month those massive downward revisions to really the May and the June data, right? So the tricky thing here is that we know that a slowdown in net immigration has played a huge role in why these numbers are lower. We know it's a combination of lower labor supply and lower labor demand. Both are playing a role, but we're not really sure which is the bigger factor. I mean, you could explain this slowdown just from slower population growth. Slower population growth probably has taken at least a point off of growth in the past year, both from a job side and also from a GDP perspective.
Ryan, when you look at the curve, when you look at the 10-year holding at 420 and then hear so many important, intelligent people talk about the dangers of attacking Fed independence, how do you reconcile those two things?
Well, I do think clearly this is a story that has evolved even in the last few weeks and months, and it is something that is very likely contributing to the steepness of the yield curve, right? So on the one hand, it's the Fed that has not really acted at all up until this point. And on the other hand, it's these concerns incrementally about what Fed policy will look like, not just for the rest of this year, but into next year.
Ryan, thanks so much for spending your Friday morning with us.
Thanks.
Ryan Wang of HSBC reacting to the latest PCE inflationary data. Zachary Griffiths, head of U.S. IG and macro strategy at Credit Sites, also joins us now. Zachary, I want to get into your bold call for September. Before we get there, just a quick reaction on what we saw in front of the data.
Yeah, thanks, Anne-Marie. It looks like the data is in line with consensus expectations. I think the uptick to 2.9% on the core PCE deflator is a little concerning. It highlights the inflation side of the concern for the Fed's dual mandate. But for us right now, it's all about the labor market in terms of the next adjustment to the policy rate.
When you're seeing these kind of inflation numbers, do you still expect the Fed to cut 50 basis points?
That's our base case. I think we probably need a little bit of help from the non-farm payrolls data next week. I think anything sub 60 will keep that 3-month moving average below 50,000 jobs. And to us, when you think about the Fed's reaction function a year ago and what we're seeing in the data now, it would justify a 50 basis point rate cut. And when we listen to what Fed policymakers are saying now, they are trying to dismiss the inflation concerns to some extent over the next several months, ruling them as transitory. We're a little shocked they're using transitory again at all, but you're hearing it. And what we're hearing from these policymakers, we think sets up for a bigger move in the near term to cut off those risks that we unnecessarily weaken the labor market further.
By the way, in terms of the labor market, it's the supply side that I think is so interesting as we pursue mass deportations and stop any entry at the border, even legal immigration now becoming more difficult. Doesn't that lead to some kind of upward wage pressure?
Typically, you'd think so, Matt. And I think what we're seeing is labor demand fall alongside labor supply, which for now is keeping things in a little bit better balance, but is not necessarily indicative of a very strong economy. And when we talk to our analysts on the consumer side, they are saying that for a while now, the consumer has felt softer than some of this macro data would suggest. And so when we think about the balance of risks of these job gains falling so substantially, we do think it warrants an adjustment to the policy rate. And when we think about going, say, from 4.5% to 4%, I don't think that takes us to neutral. It certainly doesn't take us to accommodative territory. And so if I'm a Fed policymaker thinking about the balance of risk to where policy is today, I think they can take it to the downside, and the renewed focus on the labor market and what we're seeing in the data justify that kind of move.
What will the benefits be or drawbacks from the big, beautiful bill? Anne-Marie was just with the president at his cabinet meeting, and he was, touting the fact that people won't have to pay taxes on Social Security. People won't have to pay taxes on tips. And all I could think about was all that extra money they'll be able to spend in this economy. Isn't that going to be a tailwind?
I think that is a tailwind, Matt. And when you think about all of the cross currents we Fed policymakers, all sorts of policymakers have to deal with right now, it's difficult to come out on the other side with a clear direction. And I think that's a challenge. I do think that the passage of the One Big Beautiful Bill Act is certainly a tailwind, at least all else equal. And I think you're seeing that in market pricing. But in terms of underlying economic growth, the strength of the consumer, what we're seeing from the lower income, lower wealth cohorts, I think there are some challenges there that adjusting the policy rate will at least help at the margin. And I think that's really the focus now. And I think there's going to be more fundamental concerns on the economic growth side. And we see that bleeding into corporate credit as well.
2 quick points there, though. When I was with the president, he said he doesn't want to call it the One Big Beautiful Bill anymore, Matt, because it doesn't really socialize to the American people what it does in terms of what you're talking about, and no tax on tips, no tax on Social Security. But Zachary, can I push back for a second? Besides on the margins, the One Big Beautiful Bill just keeps current policy. No one's really getting a massive tax cut, are they?
No, and if you think about tariffs, they are a tax on the consumer to some extent. We could argue for hours who is paying the tariff. Is it the consumer? Is it the importers? Or are the exporters actually taking a share of it? I do think it's divided perhaps somewhat evenly between the three. And so if you think about those impacts on net, it probably nets out to a certain extent. And I think you make a great point on just extending what had been existing law and avoiding a tax hike in terms of allowing the 2017 Tax Cuts and Jobs Act cuts to kind of roll off. And so to think of it as a big incremental tailwind is probably not the right way, especially when you consider the policy coming out of Washington as a whole.
Hey, you're head of USIG and macro strategy, so we can talk to you about more than just the economy here, Zach. And I wonder about spreads being so tight. Since I'm an equities guy, right, I typically anchor the Bloomberg Open Interest show from 9 a.m. to 11 a.m.
My dad calls you a car guy, actually.
And I'm a car guy. But I can't get my head around why credit spreads are so tight here, considering the fact that we're seeing, for example, a big jump in bankruptcies, considering the fact that you have this worry about consumer softness, considering the fact that we're running up these massive debts, like leverage is out of control. So why are spreads so tight?
That's a great point, Matt. And I think we're a little surprised, to say the least, just how tight spreads have gotten and remain. And I think a point that you've been making throughout the show today is the technicals. There's a lot of cash in the system, and a lot of investors need to put that cash to work. And I think that's really been what's been driving spreads and asset prices across a broad swath of asset classes so far this year. We're a little shocked that with the amount of volatility we have in terms of policy setting, the way the Trump administration has gone about implementing some of its policies, and you think about Fed independence being called into question so directly. If you had lined up all of these factors for me coming into this year and where I think spreads would be, it'd be a lot wider. I don't think we'd have equities at all-time highs, and I certainly don't think the 10-year would be stuck at 420 to 425 with all of this coming out of Washington. So I think it all speaks to the strong technical in the market. It's impacting a variety of asset classes, and while we do expect that to shift over the next 12 months, for now, that seems to be in the driver's seat in terms of what's driving markets.
Zachary, thanks so much for your time this morning. Zachary Griffiths of Credit Sites. He's calling for a bold call, Matt. Fed cuts 50 in September. But all of this really hinges on what happens next week.
Yeah, absolutely. I mean, the labor numbers are so important. And unlike today's PCE number, that really could go either way. It's not going to be bang in line, not quite as easy to figure out.
Yeah, definitely not. Let's get you an update on stories we're watching elsewhere this morning. Lizzie Burden is back with your brief. Hey, Lizzie.
Hey, Anne-Marie. Fed Governor Lisa Cook is heading to court this morning to try and keep her job. Cook says President Trump is using a phony pretext that doesn't amount to sufficient cause to fire her. Cook's lawyers suggested an unintentional clerical error may have been behind the mortgage dispute at the centre of the clash between her and the president. Elsewhere, European leaders have referred Iran to the UN to re-up sanctions against the country after Iran failed to comply with demands over international inspections of its nuclear program. Iran has threatened to leave the Nuclear Non-Proliferation Treaty if UN sanctions are resumed. And Jordan Hudson, the 24-year-old girlfriend of legendary NFL coach Bill Belichick, 49 years her senior, I might add, has filed a trademark application for the phrase gold digger with the stated intention of using it on jewellery and keychains. The application also had other Belichick-related trademarks, including Chapel Bill, the All Belichick Team, and the Belichick Way. Well, Marie, I'm not saying she's a gold digger. That'll be my brief.
Well, here's the thing with this entire story, Matt. And thank you, Lizzie. How do you want to copyright gold digger when it's just been used nonstop in music and in books?
Was there recently a song called Gold Digger?
Yes, with Jamie Foxx and Kanye West. But I do say this is capitalism. This is something people are, saying to her. This is what you are, and she's taking a moment, opportunistic, and saying, actually, I'm going to lean into it.
Hey, and we're in a very transactional moment right now, right? Considering this president, it doesn't, I think, surprise many people. I wonder if those two hang out in Palm Beach a lot.
Not sure about that, but we'll see whether or not she gets that trademark. All right, up next, setting you up for the day ahead. Plus, Tyler Kendall is back as the battle between President Trump and Fed Governor Lisa Cook heads to court. You're watching Bloomberg Surveillance.
The for cause protection and the idea that this establishes a high standard before a president can consider removing a Fed official is central to our understanding of how central bank independence operates in the U.S. So there's a lot at stake in this litigation.
That was Krishna Guha of Evercore ISI. Markets this morning are just a little bit softer, those futures, after PCE came in bang in line. And yesterday, of course, the S&P 500 hitting an all-time high. We're under 40 minutes away from the cash open. Here is your trading diary for the week ahead. 10 a.m. Eastern today, we have Mitch, consumer sentiment, and Lisa Cook, as well as 10 a.m., heading to court for an emergency hearing in her legal battle with the president. Monday, U.S. markets are closed for Labor Day. Tuesday, ISM manufacturing. Wednesday, JOLTS data, plus the Fed's beige book. Thursday, another round of jobless claims. And, of course, Friday, the all-important, the big one. We get the August payrolls report. Turning back, though, quickly to the legal fight between Trump and Governor Lisa Cook. Bloomberg's Tyler Kendall is outside the courthouse in Washington and joins us now. Tyler, what's the latest?
Yeah, hey, Anne-Marie. Well, I'm expecting it to get a lot busier where I am shortly, as this federal judge is expected to start looking into this case brought by Fed Governor Lisa Cook against President Trump over his attempts to oust her from the Federal Reserve. Now, the first matter at hand is that Cook has filed for what's known as a temporary restraining order, which would reinstate her while this works its way through the legal system. But I want to make an important distinction here, which is that a temporary restraining order is just that. It is temporary. And typically, they only last about 2 weeks. That would not cover us until the September FOMC meeting. With that said, a legal expert tells me that it's up to the judge's discretion and that they could actually extend this further. That doesn't necessarily mean that they're going to take into account that policymakers are meeting, but rather it is more likely that a judge extends a TRO until they are able to rule on what's known as a preliminary injunction. That is more long lasting. That would reinstate Cook into her position until this is all done and dusted and the final court case over her firing is decided. Matt and Anne-Marie, I'm taking you through all of these steps basically just to say that we have a long road ahead of us, but today is an important first step.
Right. And while I don't think anyone doubts that she can get an injunction, and also it doesn't really matter if she votes September 17th because she leans dovish and would likely vote for a cut anyway. The important thing, I believe, Tyler, is if she's still there in February, right? Because the concern among people who value Fed independence is that the president is trying to take over the Board of Governors so that he can have a bigger influence on the regional presidents. And that all happens, those confirmations, in February.
Right, exactly. And actually, Matt, it happens once every 5 years, and it just so happens that it is happening this February. And if President Trump is successful in removing Lisa Cook, then he would get that majority. 4 out of 7 of the federal Board of Governors seats would be Trump appointees. Now, our reporting had indicated earlier this week, a person familiar saying that the White House's goal here wouldn't be to make the FOMC more dovish, but rather to provide more scrutiny on the vetting process of these regional bank presidents, which are not Senate confirmed. But of course, this raises questions about the pressure campaign and how potentially this reappointment tool could be used to pressure these officials when it does come to meeting time.
Tyler, thank you so much. Tyler Kendall, we'll be looking forward to Tyler's reporting throughout the day, especially at 10 o'clock. Matt, thank you so much for joining me. I knew it was a sleepy Friday when they said you two could do the show together.
When they allowed this to happen. No, it was a pleasure. And by the way, I will be on air at 10 o'clock when this comes out, and also when we get some more economic data.
Tuesday, John and Lisa will be with you. I'll actually be on assignment. Jay Pulowski of TPW, Matt Hornbach of Morgan Stanley, Julie Bale of Kanye Anderson.
of the SCO that's going to be taking place this year, and then a separate one issuing $1.4 billion in loans to lenders of the group's interbank consortium. Worth noting that amid all this is actually paling in comparison to the $50 billion that CE pledged in financial support to Africa last year, but this is seen as a step up because the SCO so far has been, in terms of support, largely rhetorical. Sherry.
Yeah, we continue to see really other former U.S. partners or really partners that have been isolated from the Trump administration's policies really coalesce together, right? I mean, when it comes to India, for example, President Trump releasing on his social media that India offered to cut their tariffs to nothing. I mean, we have no evidence of that. And he's saying that that's coming a little bit too late, that India should have done that years ago. No clarity on whether or not Washington will be reopening trade talks with India at this point. Remember, U.S. tariffs have doubled the existing 25% duty on Indian exports and hitting more than 55% of Indian goods shipped to the U.S. So we are seeing all of these other leaders on the other side sort of trying to really revive multilateralism as well. Remember, Brazil has also been on the firing line from President Trump, who's threatened 50% tariffs. We have seen those tariffs implemented in some Brazilian goods. We have heard from President Lula now convening this virtual meeting for leaders of BRICS to get together and try to really work together and revive multilateralism. And they want to discuss the U.S. tariffs as well. So we'll continue to watch the latest developments, but it seems that we continue to see this geopolitical fragmentation across really that division line between what President Trump is doing and all of the former partners trying to coalesce and trying to come up with perhaps an alternative global order as well.
And of course, BRICS to some is seen as a way of forming a bulwark against the U.S. Now, you talk about this multilateralism. For more, let's bring in Henry Huiyao Wang, founder and president at the Center for China and Globalization. He was previously a counselor to the State Council of China. Very good to see you, sir. Let's start off with your key takeaways from the SCO. I think one of the meaningful developments includes grants, investments, loans that China is pledging. How significant is that to you?
Yes, thank you, Avi. Absolutely. You see this SCO summit held in Tianjin is really having very big significance because it is the largest SCO gathering in more than 20 years. It's probably one of the highest level that we have 20 over some leaders there, and Indian Prime Minister Modi was there. And also, this SCO it's been well planned and organized. And they issued many statements. For example, they have a 10-year long-term strategy that has been stipulated. As you said, they also going to establish a new SCO bank. But further than that, they're also build up quite a few platform plans. For example, platform on the green industry, on the energy, on the also digital, and also there's a science and technology platform, education platform, or vocational platform. On top of that, China also pledged actual dollars and monies to this development, so that you have something to start with. You have something to catalyze with all those members. So this is really, you have an anchor to really drive that. Plus, you have all those heads of state gathered here to really push forward a kind of a more, in the multipolar world, there's one strong polar here, right here, gathering as well. So they actually propose many new thinking as well, that they're going to maintain multilateralism, stick to UN principle, maintain WTO.
Right.
There's a lot on that. So I think this is really a very important gathering here in
Henry, talk to us about this show of unity between the Indian, Chinese, Russian presidents. What do you see beyond the symbolism as a way to counter U.S. dominance?
Well, I think there's a very strong, displeasure demonstrated on the what U.S. has been pushing for example, unilateralism, back off of the WHO, climate agreement and UNESCO and strengthening WTO and all those, unilateral approach. Certainly, China being the second largest economy and India soon to be the third largest economy, they really want to show to the world and including Russia that they want to maintain the 80 years old global system, want to improve, enlarge, and enhance of this system. They don't want this to be disrupted. So I think there's a lot of messages sent on that. They want to actually keep the global trade and global business as strong as they can, and also SAO become a mediating probably platform. You see both Prime Minister Modi and Pakistan Prime Minister there at the same table. Armenia, Azerbaijan heads of state. China and India actually get together. So I think this shows that, of course, they want to promote in peace. So SAO could be an extra guarantor to maybe BRICS countries like China, India can help settle the Ukraine-Russian war.
How would that differ from all of the other multilateral organizations that we already have in place, like the China-led AIIB, for example?
Yeah. Well, AIIB is an international organization. You have a lot of, largely developed countries, like all the European countries are there, and many Australia, Canada, New Zealand are there. So there's a lot of a great mix of BRICS countries and the developed countries, like India was there as a vice president. India actually received the largest loan from AIIB. But that's purely financial, but there's also a new development bank that established in Shanghai that focuses on the BRICS country development. So this time they have a SAO bank developed. So you can see actually there's more financially, economically interchanges with this all the which is reflect reality. I mean, BRICS countries, SAO countries are already growing economically strong. BRICS country GDP is already larger than G7 now. So I think they reflect that more business.
Geopolitically speaking, though, how sustainable are such partnerships, given, of course, that China has issues with other countries, territorial issues with Southeast Asian countries, not to mention, of course, the China-India relationship also marred and tense a little bit because of the Pakistan relationship as well?
Well, I think this is going to improve. Economic comes first, and then I see the key takeaway is that also they build up some kind of a cordial and friendly atmosphere at this summit, particularly with India. That both Modi and President Xi announced that we're not rivalries. Not that the U.S. and Europe take China as a rivalry. They are saying we're not rivalries. So all those countries are seeking friendly cooperation. So. Further then you can see, they could improve relations, and there's quite a few ASEAN countries, and Laos is added to the member or partner member of SCO as well. And this is really a good way to gather cooperative spirit, particularly this time. You see, SCO is gradually building into a big block of economic cooperation. So it's really interesting. You have AIB, you have RCEP, you have SCO, BRICS. So those are really great shift to more, in addition to security, more economic and business. For example, the trade among the SCO countries amounts to $2.3 billion a year. That's enormous. So I think that's really interesting to see this kind of proliferation or thriving of the economic boom or economic model that be emerging against this, the globally is not functioning so well. So there's a lot of regional practice now.
Henry Hoya Wang, really good to have you with us, founder and president at the Center for China and Globalization. Indonesian Finance Minister Sri Mulyani Indrawati is vowing to strengthen government policies after protesters looted her home over the weekend. Let's bring in Soraya Parmatasari, Bloomberg editor based in Jakarta. Soraya, so what do we know at this point? Are we seeing a little bit more stability on the streets? And what can we expect given such a difficult situation for government officials in really trying to bring back peace?
Yes, thank you. Good morning from Jakarta. Maybe first I'll just tell you a little bit how it began. So it began last Monday at Parliament when hundreds of students and civil groups rallied against rising living costs, massive layoffs, and specifically over a significant pay increase for lawmakers that amount to almost 10 times the minimum wages in the capital. Now, what initially looked like a manageable protest escalated dramatically on Thursday evening when a motorcycle taxi driver who wasn't part of the rally was killed after being run by a speeding armored police vehicle. So the protest turned violent quickly and riots followed. As of Sunday night, despite the president's urge for calm, violent protests have spread to a dozen other cities. And at least 4 people were killed and hundreds injured. Buildings were set ablaze. Even the homes of Finance Minister Sri Mulyani Indrawati and several lawmakers were targeted by looters. And in light of this, TikTok temporarily suspended its live feature on its app.
Soraya,
now,
what is the latest on protests? I mean, have we been seeing it fading a little from the violence that we've seen Friday, Saturday, part of the weekend as well?
Yeah. So after the president, Prabowo Subianto, canceled his trip to China and then held meetings with political leaders, he tried to quell the unrest by, giving strong warning against protesters. But he also announced that Parliament has agreed to drop a controversial housing allowance that was a contentious issue. As now things seem to have come down a bit, although there are still pockets of protests in various parts of the capital and other cities. And even the uni student organization said they have decided not to hold demonstrations for now until this situation becomes more conducive. They cited concerns that the protests could be hijacked by groups with ulterior political motives and, that could lead to chaos. Sri Mulyani has also come up and said, as you mentioned earlier, she apologized and acknowledged the public's demands. She said that she recognized the complexity of her role, but pledged to continue improving. And shortly after the looting incidents, at her home, rumors swirled that the finance minister would resign. However, the speculation was quickly quashed when she posted a photo of herself with Prabowo on Instagram. Hopefully, things will get better from now on.
Soraya, thank you so much. Bloomberg editor Soraya Paramatasari with the latest from Jakarta amid protests that have rocked the capital in the past week. Of course, we are also tracking the fallout in financial markets, and we initially saw an extension of losses both in the stocks as well as in the Indonesian rupiah. But it was interesting following on from Bank Indonesia's efforts to intervene to defend the currency. Then we had government concessions. The government also wanting to make clear that the economic fallout looked pretty limited. That helped to stabilize investor sentiment a little. We saw both stocks and the currency moving off session lows. Sherry.
Several other stories that we're following from around the world. Lawmakers from Thailand's largest opposition party are set to meet on Tuesday. The People's Party is currently being courted by rival groups to form a government. The party earlier said it hasn't decided who to back as the next prime minister after the ouster of Paetongtarn Shinawatra. Despite her removal, S&P Global says it expects little disruption to government operations. U.S. Treasury Secretary Scott Bessent says the Trump administration may declare a national housing emergency later this year. He declined to list any specific actions the president may take. Affordability is said to be a major Republican campaign issue in the 2026 midterm elections. Trump has argued that high interest rates have damaged the housing market. Over 800 people have been killed after a powerful earthquake rocked the eastern region of Afghanistan. At least 2,000 people were left injured when the tremor hit Kunar province, which borders Pakistan. Strong jolts were also felt in various parts of Pakistan, including Islamabad. The quake is the deadliest such disaster in more than 2 years.
Now, coming up on the Asia Trade, we'll be live from the Bank of America's Japan conference to speak with their Global Research Chief Investment Strategist and Head of APAC Global Corporate and Investment Banking. Plus, we'll unpack the outlook for Australia's defense sector with electro-optic systems. Much more ahead. This is Bloomberg. Let's take a look at how U.S. futures are faring. They are sitting a bit lower on the S&P, and this is in early Asian trading as a testing month begins with markets near record highs. A gauge for EMs extending higher after notching its best session in a week. Meantime, prospects for a rate cut by the Fed are giving fresh impetus to the multi-year bull run in precious metals. Let's bring in Bloomberg M-Life strategist Mark Cranfield. So, Mark, what we're seeing in EM seems to be underpinned by Baba delivering on AI revenue. What does this tell us about where the traction is going to be for Chinese tech?
Very much in the big cap stock. It's a theme which people have been talking about on and off for some time, particularly since China started the big stimulus program in the fourth quarter of last year. But now it's real. Investors can see that it's really happening. So if you look what happened yesterday with Alibaba stock in Hong Kong, it rose nearly 20% on huge turnover. That's exactly the kind of thing that will wake up global investors. So they're finally seeing traction in the idea that China can absorb much bigger amounts of portfolio flows. So people have been looking for alternatives from the US for some time. Last year in particular, there were several times when people thought, has the US market gone too far? Can it take any more money? Who are the best alternatives? Would it be Europe? Would it be Asia? Well, finally, China is looking like a real alternative as a place for people to put serious amounts of money. And it's a big enough market to absorb that. And at the same time, you've got the PBOC making sure that the yuan is a strong, stable currency, which is exactly what foreign investors need to see as well. So here you've got some new leaders. You've got a huge company like Alibaba, which can drive the market. It will also spill over to other AI plays as well. You've got a currency in the right place. Central bank generally, policy is supportive of the market, and the government is saying the right things. Plus, they're having these high-profile meetings to show investors that they're serious about supporting their market. It's all finally coming together for people to take the Chinese market seriously. And we've seen before that when the equity market takes off in China, it can go on for some time. It's not just a 1 or 2 day thing. It can last for months. So this may just be the beginning of it.
And perhaps the beginning of more ructions when it comes to global bond markets. I mean, cash trading in treasuries was closed because of the Labor Day holidays, but we saw European bond markets also under pressure because of France's own confidence vote and political issues. And over in Japan, the 10-year JGB auction might be pretty weak as well.
If you want to talk about tail risk for global bonds, you don't have to look any further than today's 10-year JGB auction. And it's just the start of a series of auctions. We've got a 30-year to come this week, and this month is a whole suite of Japanese bond auctions. Any one of them could trigger a global fallout. But today's 10-year especially is going to be extremely tricky. We've got yields near cyclical highs for JGBs. People will be looking at the metrics, especially the bid to cover ratio. If it dips below 3, people will be very concerned that it's weak hands buying into this JGB auction. The chances of it succeeding is not high, especially when you've got a Bank of Japan Deputy Governor Himeno speaking today as well. Last week it was Nakamura speaking, and she was clearly leaning towards the next interest rate hike in Japan, particularly if the Tenkan report in early October is at least in line with expectations. Everything is building up for the Bank of Japan to make its next 25 basis point hike. That's not fully priced into the market. And at the same time, if you look at where Japanese inflation, we just had a reminder last week that inflation is still around the 3% level, and yet 10-year JGB yields are much lower. That negative real yields for JGBs in the 10-year sector is not helpful going into an auction with the whole world is watching. There's a chance here of G10 bonds being upset by the end of the day.
Might see that ripple effect playing out from Japan to global debt again. Mark, thank you so much for running us through all this. MLive strategist Mark Cranfield. We'll have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how commodities are faring. We're seeing oil looking pretty range-bound, though the WTI contract, U.S. crude futures, showing some upside there. What has broken out and been really interesting against the backdrop of concerns about Fed independence and rate cut bets from the U.S. Central Bank? Gold has been doing well, inching towards that 3,500 level, but silver also we saw in the past session breaking past the $40 an ounce level. It has that added benefit of industrial use, so it's actually been doing really well this year. Gains of about 40% already, seeing some downside at the moment. We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're setting up for the Asian market opens. We had seen Nikkei stocks lose ground for the last two sessions. We're seeing futures pointing higher to 0.1%. The Japanese yen really hasn't done much this week, given that, of course, we are headed towards the U.S. jobs report. But today, the important thing in Japan will be the 10-year JGB auction, a key test of investor appetite. We have seen demand at auctions that hasn't been really that great in Japan, and we have the BOJ Deputy Governor Himino also speaking later today. ASX 200 futures not doing much. U.S. futures also not doing much. Remember, we had cash trading closed in U.S. stocks and treasuries for the Labor Day holiday, but usually September, the weakest month for U.S. shares historically. Let's discuss all of this. The 22nd annual Bank of America Japan conference begins in Tokyo today, and joining us now is Michael Hartnett, Chief Investment Strategist at Bank of America Global Research, who's one of the speakers at the event. Michael, really good to have you with us. Should we get started with what to expect out of the U.S.? Because, I mean, we are headed towards the reopen after the holidays, but valuations have been pretty high. I mean, is this a concern?
Yes, it is a concern. It's one of the few concerns, however. I think people are very happy that we've seen a turn in tariffs lower, we're seeing a turn in rates lower, we're seeing taxation lower. And, of course, you've got an incentive now for both the administration to be joined by the Fed in creating good economic conditions in front of the midterms next year. So I think there's still a fair bit of momentum behind the U.S. market. I think the difference in 2025 is that there are other stories around the world. Japan's one of them, China's another one of them. So it's not just a U.S. exclusive bull story, but I think the story in the US is still fairly intact. But you're very right. The valuations are the one thing that longer term investors are looking at in the US and saying, can I really get the upside from the US that I could get perhaps out of China or Japan going forward in the next 12 months?
Does that also apply to the currency space as well? We have seen the dollar now lose ground for the last 5 sessions.
Yeah, look, the dollar's in a bear market. The dollar's down 10% year to date. There are good reasons for that. The bear market will continue. Interest rates are going to come down in the US. You've still got a lot of debt, a lot of deficits you've got to finance. You've got a very radical president pursuing quite radical, unconventional, policies. Some are good, some are bad, but foreign investors have a little worry about that, and I think that bear market will continue. That's why gold's at an all-time high. That's why silver's at an all-time high. A normal US dollar bear market is down 30-40%. Thus far, we're down 10%, and you've still got further to go with the dollar going down. And of course, that's one of the reasons why in 2025, international markets have outperformed the US.
You're positive on Japan as well. What, in terms of stocks, do you like there? What are you perhaps steering clear of?
Well, I think there's interest in Japan. I mean, I'm here at the Bank of America, Tokyo conference, the Japan conference. I think we've got 600 plus global investors here. I think 80% of them are from overseas. I think the number's up 20-25%, from last year. Why are they coming to Japan? Well, A, they're looking for an alternative from the US. B, the currency is cheap. But I think there are Japanese narratives. One is, the content, companies. Another is the defense industry, which is starting to grow because of, US isolationism. And of course, you've got a banking industry in Japan, which, suddenly is doing well, and even though the Japanese banks are up, 200, 300, 400% from their lows 3-4 years ago, they're still, believe it or not, 70% below where they were in the late 80s. And so long as the Bank of Japan is behind the curve, which it is, and so long as the Bank of Japan is going to be forced to raise interest rates, which it will, those bank stocks will do well. So I think banks, content, defense are probably the three big narratives in the Japanese market right now.
What about chips and techs in Japan?
The tech companies in Japan, again, I think that the tech companies globally will continue to do fairly well. I think the big focus right now, however, is China. I think in China, this is the market, the bull market that nobody speaks of. And it's very, arguably what we've learned, this year in 2025, or global investors have learned this year in 2025, driven by that deep-seek moment that we had earlier on in this year, is that you cannot be exclusively in US tech. You need to barbell that, most particularly with Chinese tech companies. But in addition, I think there are Japanese tech companies that can also benefit from that globalization, if you like, of the tech exposure that investors feel that they need right now.
And Michael, China is also a geopolitical story, right? I mean, with the realignment of alliances and partnerships, and of course you have a war going on in Ukraine. How big will the defense sector be? I mean, overnight we saw European defense shares rallying on ideas that potentially we could see really a detailed plan on rearmament. Right now, just a headline on the Bloomberg right now that South Korea is also going to gradually raise defense costs. It seems to be a very global story at the moment.
Absolutely, yeah. I mean, look, I think that, for 20, 30 years, I mean, America has really policed the world in exchange, if you like, for savings around the world coming back to America and buying treasuries and financing the deficit. And I think, the Trump administration, has really been, fairly honest, I think, in saying to the rest of the world, we're no longer going to finance your security. We're no longer going to make you, be your defense industry. You have to stand up on your own 2 feet. And I think we saw that first in Europe. But I think now Asia is the next leg of that defense trade. And as I said earlier, the defense stocks in Japan are doing well. You yourself said that Korea, China are sort of joining that theme. But it is now a multi-year theme. America has debt problems. It has deficit problems. It said we can no longer use American taxpayer money to defend your countries. You have to defend them yourselves. And that is going to mean that there's going to be greater spending on defense across a greater range of companies, to the benefit of those companies within the local stock markets.
Michael, you alluded to some of this earlier, how when it comes to U.S. exceptionalism, we've seen a bit of it creep back in stocks, AI, a key play. Maybe you talk about the valuation risk there.
Yeah.
Bonds have also creeped back in, but dollar, I think that's still the missing piece of the puzzle. And, you're still bearish on the view even into the end of the year. What are you expecting into next year as well?
Well, again, I think the dollar's in a bear market. And again, if the dollar was as exceptional as, everyone thought it was a year ago, the dollar wouldn't be going down. The dollar is going down because the US is less exceptional. It's got less exceptional outperformance, and it's got a less exceptional narrative. And again, that's partly because the rest of the world has reasons to invest there. Europe, defense. Europe, fiscal stimulus, China rebalancing, a weak yen, a weak dollar, which is great for emerging markets. So 25 is very different in that suddenly an equity investor has other places to invest in. It's not just exclusively the NASDAQ. And so that's why I think that the US has lost a little bit of its luster in terms of the exceptionalism story. Of course, it's still got AI, it's still got, you know, a business sector that wants to make money, blah, blah, blah. But I think the dollar is something that will be sacrificed, if you like, by the Trump administration. If you want to make America great again and you want to rebalance the US economy and you want to get manufacturing going in the crucially electorally important states of Pennsylvania, Michigan, and Wisconsin, you really don't want a strong dollar. So I think the dollar is in a bear market. It's just beginning. It will continue. But as I said, if you look at gold, you look at silver, they're telling you that they're very much in the early stages of that dollar bear market.
Yeah, and all this as part of, as you highlighted there, investors looking for alternatives other than the U.S., searching perhaps in Japan. Michael, really good to get your insights on all this. Michael Hartnett is Chief Investment Strategist at BofA. Time for some morning calls ahead of the Asia trading day. Strategists at Evercore ISI believe U.S. stocks can rise another 20% by the end of 2026. While they acknowledged a wide range of outcomes for next year, they argue that excitement around AI will spark a technological revolution that will lift stocks, multiples, and society to new heights. The 2026 target is so far the highest on Wall Street, according to data compiled by Bloomberg. Lotus Asset Management's Hao Hong says Chinese stocks are heading for a meteoric rally that will likely be beyond the imagination of the crowd. He argues that Beijing's pivot in its attitude towards deflation is misunderstood and far from being fully priced in. Hong is known for his track record in making accurate predictions about China's stock market. And some of Wall Street's top strategists also expect European stocks to gain in the coming months. Both Goldman Sachs and JP Morgan point to strong fundamentals, including improving growth prospects and relatively cheaper valuations. JP Morgan says euro area equities will potentially outperform U.S. peers over the next 1 to 2 months. Sherry.
April, Japanese Prime Minister Shigeru Ishiba's ruling Liberal Democratic Party is expected to finalize a report into its recent electoral defeat later on Tuesday. Let's bring in Bloomberg reporter Yoshiaki Nohara in Tokyo. So, Yoshiaki, it's interesting because we actually saw the Prime Minister's approval ratings come up in recent days. Could this report derail his administration? What are we expecting?
Well, you're right, Sherry, that the Prime Minister saw some revamp in public opinion polls for his support. I think the more time it passes after the election, the chances are increasing he can stay on. Because, that there are two reasons why he can stay on. One is the public support that you just mentioned. The other thing is that if the report decides that the election loss was more caused by not just by his leadership, but by bigger issues that the party has faced, especially the political cash funding scandal. So if that's the case, then he can say that it wasn't just my fault, but the party is facing bigger challenges. So I can stay on to improve the situation.
What about what this is all going to mean for Prime Minister Shigeru Ishiba and his leadership team?
Well, what it means is that even if he can stay, as I've just mentioned, that he probably needs to show some kind of action that his leadership team is taking responsibility for the election loss. And one of the possibilities that we're expecting today is that Secretary General Hiroshi Moriyama may step down. So that can create a vacancy for a very high-profile position within his leadership team. So his next job is to find an alternative or replacement. If Moriyama decides to step down, Prime Minister needs to find somebody else that would appeal to voters and also convince people within the party that he's that next person is going to be the right person to move things forward.
Bloomberg Economics and Government reporter Yoshiaki Nohara, great to have you with us. Very busy day over in Japan, of course, with politics, but also we have the 10-year JGB auction, not to mention the deputy governor of the Bank of Japan speaking today. This is Bloomberg. And the latest from the corporate front, ANZ is reportedly considering as many as 5,000 job cuts as part of a wider restructuring. According to Capital Brief, 2,000 of the jobs would likely come out of the retail division, with the rest elsewhere. The lender says it's doing a strategic review and will provide an update next month. ANZ CEO apologized last week after the bank accidentally sent out automated emails about planned job cuts before telling staff. Meanwhile, Westpac is planning to hire hundreds of bankers and lean more on AI as it ramps up business lending. The bank says it already added 135 bankers in the first half of the year and plans to hire another 350 by the 2027 financial year. CEO Anthony Miller is betting on faster deal times through new digital tools like BizEdge. Westpac is targeting regional Australia as a key area of growth. New World Development's controlling shareholder, the billionaire Chang family, is said to be considering injecting capital into the debt-laden builder. The move could take place as early as the end of this year. Sources say Henry Chang is willing to contribute about $1.3 billion and is looking for a partner to provide a similar amount for an equity stake. We're also looking ahead to a potentially pivotal court hearing on Tuesday for liquidators looking to hone in on Evergrande's founder, Hui Ka-yan's undisclosed assets. The move could unlock billions for unpaid investors. Let's bring in Bloomberg China credit reporter Trista Chinyilo. Trista, so I mean, this could be a very monumental hearing. So what are we expecting to come out of it?
Yeah, so Hui so far has been refused to disclose his assets. So we are expecting in today's hearing, liquidator will, try their best to convince the High Court to let him to disclose his asset. Last year, liquidator filed a lawsuit in Hong Kong and tried to claim $6 billion in dividend and remuneration from several defendants, including Hui. So today's hearing is part of the cleaning process. Hui has been the center character of Evergrande. So right now, we really need to see what will happen in today's court hearing.
I suppose that's why the trial against Hui and the court hearing today is so critical. What do you think are some of the potential options for liquidators or for creditors in relation to the trial?
Yeah, I think so far their priorities to convince the High Court to, let Hui to disclose his asset, and later on they can build out the whole trial. Hui has been pocketed $7 billion over the past decade due to the company's generous payout, and he has controlled 60% of Evergrande. Evergrande has been worth over $50 billion at its peak back in 2017. So that's why also, liquidator need to really know Hui's holding. And if liquidator managed to get review his holding, it will help them to claw back maybe at an eighth of the estimated debt load, which is about $45 billion.
And Trista, before we let you go, we're talking about New World and that potential capital injection. What else do we know at this point about the Chang family and what they plan to do?
Yeah, so it's also the first time the Chen family comes out to show their willingness to consider about the capital injection. And it's also, we know that Blackstone and Capital Land are amongst several parties to engage in this kind of discussion. But we really need to, wait and see like how this whole discussion can go. But obviously, investors, including bondholder, are watching closely on this potential capital injection, as this will impact how the company will deal with its dollar bonds. Maybe they will do liability management exercise later on. So, but from yesterday's market, we can see investors are really phrase for this potential capital injunction.
Trista, thank you so much. Bloomberg China credit reporter Trista Singyi Luo for us. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade, and Sherry, we've really been keeping tabs on this AI rally. That's what's driven the share price of Alibaba after it showed that this thing has legs based on its revenue. And then, of course, those developments related to its AI accelerator chips. But what's also interesting is the knock-on effect this has meant for the emerging market gauge, right? The MSCI Emerging Markets Index, and it actually climbed by the most in a week, and following on from these moves in Baba. So really lifting China and Hong Kong tech shares as well. Baba itself rose by the most since March 2022, Sherry.
I mean, it's interesting because you see China outperforming, you see H shares outperforming, but on the other hand, perhaps those people who have bet longs on Japan and Japanese tech stocks may not be doing as well. We're talking about H shares outperforming the Nikkei by 3% as of today. And you can see on that chart how Japan's tech stocks, information tech, has outperformed in the past few months the broader Nikkei, but at the same time, over to the right, you can see that it has struggled to really maintain that momentum. And we're also watching South Korea very closely because retail investors are now flocking to cryptocurrencies, to crypto-related stocks. And this is really as they lose faith in Tesla as well. So we have seen those retail investors. And remember, South Korea is very also momentum-driven. You have these so-called ant investors, very small retail investors that really have led to that surge in Tesla as well. Well, they sold a net $657 million of Tesla stock in the month of August. So investors have instead favored more volatile bets such as Bitmine Immersion Technologies. That drew $253 million of net inflows. So you can see sort of that trade shifting from Tesla to other Bitcoin-related stocks, April.
Yeah, and also makes you wonder whether these retail investors could perhaps turn more positive increasingly as well. And some of these Korean defense names will be keeping an eye on the likes of some of them after Donga Ilbo reported that Seoul and Washington have agreed to gradually raise South Korea's defense spending to 3.5% of GDP. And the report also cites an unidentified U.S. official who says the two sides are also discussing a potential South Korean purchase of U.S. arms worth $25 billion by 2030. And of course, we're also keeping tabs on Mizuho. It may move after the bank announced plans to become Asia's top investment bank by bolstering equity underwriting and M&A advisory. Lots more ahead on the Asia trade. The markets opens are next.
This is the Asia trade. We're counting down to Asia's major market opens and watching out how Asian stocks will trade today. Not a strong lead coming from Wall Street, given that cash trading was closed for U.S. stocks and bonds on Labor Day holidays. But of course, we have seen a little bit of a gain in European stocks around defense shares. We'll see if that trend continues into the Asian session.
Yep, and the South Korean counterparts, one to watch. The other sector that has been doing well this week in the absence of the U.S. share trading is Chinese tech names. Think about Alibaba. So we'll see how this plays out for the rest of the week, particularly among EM, Chinese and Hong Kong shares as well, Sherry.
Yeah, really those Chinese stocks helping emerging markets rally again for its best day in more than 3 weeks. But take a look at how Japan is coming online. We're seeing downside of more than 1%. This is for the previous session because we actually had 2 sessions of losses, and you can see that's coming online to the upside of 0.3%. But it's a big day for the JGB space because we do have a 10-year JGB auction, which will be a key test of investor appetite. Remember, demand at auctions hasn't necessarily been great in Japan, and today we do have the BOJ Deputy Governor Himino speaking later today. So what clues could we get from a potential rate hike will be a key question. Also, on the politics side of things, we are expecting that ruling LDP party to finalize their report on the election, which might give us clues about where the government is going there. Take a look at how South Korea is coming online. We had CPI numbers, contraction of 0.1% month on month, the year-on-year number rising 1.7%. So deceleration from the previous month, also coming in below expectations, and a lot to do with the idea that we were going to see this drop because we had seen communication costs fall. Giant SK Telecom had cut the mobile bill by half in the month of August. So we are seeing the repercussions from that. But we talked about defense a little bit. We have heard from local media talking about how South Korea had agreed with the U.S. to gradually raise defense costs to 3.5% of GDP. So we'll be watching defense shares in today's trading session as well, Avril.
Yeah, and in terms of sectors, take a look at how Australia is faring at the open. You're seeing downside of about 2% at the start of trade, and it is worth noting that the banks, Commonwealth, NAB, those are the counters that are helping to offset some of these declines in Australia's stock benchmark. The Aussie is ticking a little bit higher. We spoke to the chief investment strategist at BofA earlier, talking about how this dollar bearish view still remains. Of course, keeping tabs on the 2 and 10s. In the U.S., you're looking at these treasuries. The long end, of course, Sherry, has been such a key concern of late as we watch out for the spending plans in the U.S. And if what we're getting from the U.S. on these tariff and court losses affects revenues for America overall, does that compound the worries on the longer end of things? Of course, as you just talked about, the JGB auction, 10s and 30s, that is this week as well. For more, let's bring in Garfield Reynolds, who leads Bloomberg's Markets live coverage in Asia. So, Garf, we just kind of highlighted the worries on the long end. Japan, of course, is a key one to watch this week in terms of auctions. What are you watching out for?
Well, those Japanese auctions, we've got one today, and in many ways the most crucial one in that you're talking the 10-year, so that's a benchmark that resonates across major markets. The longer end has been under pressure, but there are some markets that are more exposed to long end than others, but everybody's got 10 years to worry about. So be very interested to see how that goes in this environment where there's a lot of uncertainty regarding debt metrics, regarding, as you say, how revenue is going to work, more importantly, how expenditure is going to work, whether we're going to get too much issuance, whether we're going to get too much inflation. Adding to the mix for the Japanese auction today is that we have a BOJ Deputy Governor Himino speaking earlier before that auction comes along. So anything that he says that could signal how likely or unlikely the BOJ is to hike rates as early as next month, that is going to play into it. In particular, somewhat surprisingly perhaps, no hike might be something that makes things harder for 10 years and further out, because there is this burgeoning concern in Japan that inflation might be starting to get out of control, along with some of what's been going on elsewhere. So a delay in rate hikes is not necessarily good news for the longer end in Japan, just as the prospect of rate cuts in some parts of the developed world, including in the US, is not necessarily good news for the long end, either.
I mean, this week, given that, of course, the U.S. was away on holiday, we didn't have a necessarily strong lead into the Asian session. But with the resumption of trade over in the U.S., what should we be on the watch out for equity markets to move into the rest of the week?
Well, that's the $60 trillion question, as it were. How are investors in the U.S. going to maneuver now that the summer lull is over? There's a lot of key decision makers who aren't really engaged in that July-August period. They're going to come in. They're going to be looking at what went on with earnings. There's been some disappointment about some of the AI names. Nvidia has faded over the last couple of weeks. We had the sell-off in tech at the end of last week, driven by some further concerns about how sustainable the AI boom is. And you've got the uncertainties about what's going on at the Fed, what's going on with the dollar. All of that could just mean that we get a large dip buying move. If investors come back and say, look, the basics are still in place, plus we're likely to get Fed rate cuts, so the recent decline in US stocks simply opens up yet another dip buying opportunity. That seems like the more likely maneuver, considering the way that buying the dip this year has been an outstandingly successful strategy yet again. We are in a market that is conditioned to the idea that there's almost no dip too deep that it can't be bought. In fact, the deeper the dip, the bigger the buying opportunity. So that would seem quite likely, especially, as I say, there's a strong expectation we will get a Fed rate cut. The real danger would be if we get investors looking at some of the reports coming out of China, financial reports, things like Alibaba and Cambricon, who've been doing so very well on the back of China AI that is much cheaper than what's been the basis for the AI boom in the US, and yet seems to be, potentially as effective. So you have that tension. Do we get another DeepSeek-induced, moment of angst when it comes to the AI boom? And in the current climate, that sort of a move would be, a bigger deal than another batch of dip buying.
Garth, thank you so much. Garfield Reynolds, who leads Markets Live coverage in Asia. And Sherry, as Garfield was just outlining there, it's interesting as that case for U.S. exceptionalism to some gets eroded. I mean, you think about the backdrop as well of how the U.S. has stepped back a little from global leadership. And we're seeing how these developments in Tianjin are sort of playing out, right? The Chinese leader hosting his Indian as well as Russian counterparts. And it was interesting how we saw really catching attention was at one point the Indian Prime Minister and the Russian President holding hands, walking towards the Chinese president, and then they were kind of surrounded by their translators. And in terms of deliverables, I think it's worth noting out of this SEO meeting in Tianjin is how China has been pledging more investments, more loans for SEO members. Sherry.
Yeah, what's clear now is that we continue to see this geopolitical realignment, right? And this sort of opposing force to the United States, especially coming after President Trump imposed all of those U.S. tariffs. So we have heard from Brazil's Lula, for example, calling a virtual meeting for BRICS nations. He wants to discuss U.S. tariffs. Of course, Brazil has been the subject of 50% U.S. tariffs on some goods. He wants to talk about reviving multilateralism, which, of course, has been one of the aims for President Xi Jinping as well. And it's really interesting that he's trying to portray portray himself as the leader of an alternative world order. And you can see that happen over in that huge summit in China that you talked about, Avril, with all of these other leaders gathered around him and really coming together, perhaps not blatantly in opposition of the U.S., but with the big U.S. and President Trump's overhang on all of those conversations.
Yeah, Sherry, and as we noted earlier in the week, one leader that was absent at the gathering was the Indonesian leader, Prabowo Subianto, amid the protests rocking the country. We're since hearing from the Finance Minister, Sri Mulyani Indrawati, pledging to strengthen government policies after protesters looted her home over the weekend. Let's bring in Soraya Parmatasari, Bloomberg editor based in Jakarta. Soraya, talk to us about this situation in Indonesia at the moment. Have we seen a cooling or fading of these protests? And what is your sense of the underlying tensions that still remain?
Yes, thank you. Good morning. So there are a number of things that the government has said to try and calm the situation. First, as the protest over rising living costs and a widening income gap worsened last week, President Prabowo canceled his trip to China, and then he held meetings with political leaders and his cabinet ministers. Now, in a televised address afterwards, he gave a strong warning against protesters who act unlawfully and destroy public properties. He ordered the police and the military, who's been asked to help, to take the firmest action response if needed. He also warned against parties that may take advantage of the situation. He even mentioned the risk of treason and even terrorism. But he also announced that Parliament has agreed to drop a controversial housing allowance of 50 million rupiah a month. Now, that's slightly more than $3,000, which was part of the demands by protesters. In addition, shortly after the looting incidents that hit the finance minister's home and those of several lawmakers, rumors swirled that the minister, Sri Mulyani Indrawati, would resign. However, the speculation was quickly eased when she posted a photo of herself with Prabowo on Instagram, which hopefully put the rumors to rest. She also apologized and acknowledged the public's demands and said that she recognized the complexity of her role and pledged to continue to improve policies.
Soraya, what does this political unrest mean for the Indonesian economy?
Yeah, so the stock market and rupiah obviously fell on Friday. The stock market even fell the most in the world, and as well as the rupiah. But Bank Indonesia has said that they were in the markets and they will stay in the market to guard the currency if it fell below fundamentals. As now things seem to come down a little bit, although there are still pockets of protests in various parts of the capital and other cities. Now, the uni student organization said that they have decided not to hold demonstrations for now until the situation becomes more conducive. So really, the question remains, will these measures and steps be enough? Obviously, there is doubt that the situation can be sustained and unrest could actually flare again until the underlying cost is addressed. So there remains risk to the economy and the markets going forward.
Bloomberg editor Soraya Parmatasari there with the latest from Indonesia. And we're watching Korean defense stocks. We're hearing from local media that South Korea has agreed with the United States to gradually raise defense costs to 3.5%, according to Donghua News. And this is important because President Trump has been urging allies to increase their defense spending, including those in Asia, to sort of follow the lead of NATO countries. Remember, he's been asking for defense spending there to be equivalent to 5% of GDP. South Korea's defense spending for the end of last year was around 2.6%. Still pretty high considering other Asian allies, but we are now hearing media reports that this might get raised further. And remember, we also had overnight defense shares in Europe rising, so we might see a little bit of a lead there too. More ahead on the Asia trade, this is Bloomberg. We're seeing broad gains across Asia being led by tech stocks, industrials as well. Remember, we saw a little bit of a rebound in the overnight session and from that tech sell-off, although cash trading was closed in U.S. stocks and treasuries. We saw futures gain a little bit overnight. And you can see Nikkei stocks at the moment up 0.4%, although the Japanese yen is holding steady against the U.S. dollar. And we're watching that 10-year JGB auction in Japan. We're also watching defense stocks in South Korea at a time when we have seen consumer prices also decelerate and contract on a month-on-month basis, giving a little bit more room perhaps for the Bank of Korea as well. But let's head back to the Bank of America Japan conference. We're joined by Peter Guenthart, head of APAC Global Corporate and Investment Banking at Bank of America Securities. Peter, really good to have you with us. We have seen a lot of optimism over the Japan market because of all of these corporate reforms that have come, that are supposed to come in the future as well. There's more focus from active investors as well. Is there still more room for change in the Japanese market?
Well, thank you. Good morning, Cheryl. Thanks for having me. Yeah, absolutely. Look, we think that, while the corporate governance reforms obviously have been going on for a couple of years, we're still, at a very early stage of that. I think, when you speak to, the head of the Tokyo Stock Exchange, he probably will tell you we're in the third or fourth inning. So there's a long, long way to go. It's something that investors are very excited. Private equity is very excited about that. It's a really fundamental shift that we have seen going on for the last 5 years, but we think we have another decade of exciting times ahead in Japan.
Could that also be the case for South Korea? I mean, after the presidential election, we have seen also that rally on the Kospi.
Yeah, look, because I think Korea obviously, is likely to follow, some of the things that Japan has done. It's earlier stage, so I think from an investor perspective, I think there's a little bit of a wait and see. Whereas I think, you can look at the Japan market, you can see, at the amount of interest there is, their investors have fully bought into. I think, in Korea, I think it's a great step in the right direction. But I think investors will want to see that there's a real follow through and the real buy-in by the corporates is something that we have seen here in Japan, which is very exciting.
Yeah, Korea taking a page out of Japan's playbook. What is your sense of overall when we look at the tariff outcome, particularly for Japan? To what extent, if any, will there be impact on these corporate reforms?
Look, I think the corporate governance reforms in Japan, they have started, years ago. I think that's, a multi-decade trend. So, it's obviously, tariffs is on everyone's mind. Is a lot of investors here are asking the corporates. I don't think it's going to really have an impact on the corporate governance reforms. Because obviously, each company will have to think through how it impacts their business. But the corporate governance reform, as I said, it's something that has been going on, will continue to go on, and I think the tariffs itself doesn't really change that.
What about the weaker yen and what you're seeing in terms of the environment? How much easier has that made things potentially?
Sorry, Susie, can you repeat that?
What about what we're seeing in FX, for example, with the relatively weaker Japanese currency? How has that made things perhaps a bit easier for deal making, corporate activity overall? Absolutely.
Look, obviously, it's a good environment if you potentially look at investing in Japan. I think we've seen the yen weakening. That means from a US dollar perspective, some of these stocks, and some of the companies have become more attractive. On the other hand, we see a lot of outbound interest from Japan corporates also to invest in the United States, which obviously something we're very excited at from a Bank of America perspective. So FX is an important aspect, but I think Japanese corporates are very well known to take a very long view. So while FX is an aspect of it, we see both FDI coming into Japan at record levels, but we also see Japanese corporates looking at international opportunities at record levels.
And is that interest in order to come into Japan because of a cheaper yen from foreign institutions also leading to perhaps more change within Japan's CEOs domestically to reform, given that if not, they'll actually could be subject to hostile takeovers? Could we see more consolidation as well?
I definitely think we can see more consolidation. We expect that, because we see consolidation within Japan. I think every Japanese corporate is actively looking at their portfolio. Clearly, if they have underperforming areas, they potentially are looking to exit that. That's a real opportunity for private equity. On the other hand, they want to invest in where they believe, the growth is going to be in the future. So, yes, I think, the corporate governance reforms, have really, led to a mindset shift where every Japanese CEO and board goes and says okay, how do we ensure that the best takeover defense is always if your company trades at full value, and how do we get there? So there's definitely a big shift. I think we've seen a lot of consolidation M&A activity within Japan, as well as discussions with foreign investors and foreign companies looking at Japan being an attractive market.
You talk about some of these longer-term shifts, perhaps the realignments in the economy. What are some of the future drivers aside from corporate reforms, you think?
Look, we definitely see also in Japan, because we there's a lot of younger, exciting companies coming up in the AI space. I think Japan historically obviously has a very, very long track record in the tech space. It was probably more on the hardware side than on the software side. But there are some super exciting private companies. And I think you can really see that there's a shift in the mindset. Where you go how do we make Japan future-proof? Which we believe is a huge opportunity, because clearly there's a lot of tech know-how in Japan, so that's an area where we're very, very excited about.
Peter, thanks for sharing some of that excitement with us. Really good to chat with you. Peter Grunhardt is head of APAC, Global Corporate and Investment Banking at BofA Securities. We'll have more ahead on the Asia Trade. This is Bloomberg.
Take a look at how European futures are trading after gains in the previous session. Defense shares were up after reports that Europe is working on detailed plans for potential post-conflict deployment in Ukraine. We're already hearing from some of Wall Street's top strategists that European stocks are likely to gain in the coming months, including from Goldman Sachs that expects the stocks Europe 600 to rise around 560 points. Do watch out for European bonds as well, because of course we do have that confidence vote coming up in France. This is Bloomberg.
Here are some stories from the corporate front. Nestlé has dismissed CEO Laurent Frisch after only a year on the job due to an undisclosed office affair. The Swiss food giant named Philipp Navratil, who heads the Nespresso coffee brand, as his replacement. The change extends a period of turbulence at Nestlé after the firms abruptly fired Frisch's predecessor last year due to poor performance. Bloomberg has learned that OpenAI is planning to build a massive new data center in India. Sources say they're currently scouting local partners to set up a facility with at least a 1 gigawatt capacity. The exact location and timeline of the potential project remain unclear, but it's expected to mark a major step for OpenAI's Stargate-branded AI infrastructure push. ANZ is reportedly considering as many as 5,000 job cuts as part of wider restructuring. According to Capital Brief, 2,000 of the jobs would likely come out of the retail division, with the rest elsewhere. The lender says it's doing a strategic review and will provide an update next month. ANZ CEO apologized last week after the bank accidentally sent out automated emails about planned job cuts before telling staff. Meanwhile, Westpac is planning to hire hundreds of bankers and lean more on AI as it ramps up business lending. The bank says it already added 135 bankers in the first half of the year and plans to hire another 350 by the 2027 financial year. CEO Anthony Miller is betting on faster deal times through new digital tools such as BizEdge. Westpac is targeting regional Australia as a key area of growth, Sherry.
And April, we're looking ahead to a potentially pivotal court hearing on Tuesday for liquidators looking to hone in on Evergrande's founder, Hui Ka-yang's undisclosed assets. Meanwhile, Bloomberg has learned that Henry Chang is considering injecting capital into debt-laden New World development. Let's bring in Bloomberg China credit reporter Trista Shinyi-Lo. So, Trista, let's talk a little bit first about Hui and what we can expect from the hearing today.
Yeah, so far, Hui has refused to disclose his assets. So in today's hearing, we're expecting the liquidator will try hard to convince High Court to let Hui to review his holdings. As we all know, that Hui has been a central character of Evergrande, and he has controlled 60% of the company, and the company was worth more than $50 billion at its peak back in 2017. And he has pockets over $7 billion over the past decades due to the company's generous payout. So today's hearing is really the key to, watch how liquidator can manage to persuade High Court to let Hui to review his holdings.
Yeah, and the trial against Hui is seen as critical, right?
Yeah, for sure. So, as I mentioned earlier, Hui has refused to disclose his assets. And most of the trials has been focused on Hui's ex-wife and also Evergrande CEO Xia Haijun. And both of them have managed to, delay the whole process. So experts are telling us, Hui will probably deploy the same strategy, trying to ask for court adjournment, trying to refuse, and trying to just delay the whole process. But it's really the key to, let Hui to review his holding first, because it could help the liquidator to manage to locate the wealth that amounts to an eighth for the company's estimated debt load, which is about $45 billion.
And Trista, on New World, what do we know about the Chang family's capital injection so far?
Yeah, so we learned that Chen, New World's controlling shareholder, the Chen family, is actually considering to inject fresh capital to New World as early as by the end of this year. So it's actually the first time that we learn New World, the family is showing their willingness to inject fresh capital. And we know that Blackstone and CapitaLand, among several firms, are engaged in such a discussion. And when we see from yesterday's market, we can see that investors react pretty positive on this potential capital injections. But we really need to wait and see how this whole discussion will go. But overall, I think because of the previous, there's an ongoing loan not react pretty well. The company using Victoria Dockside Crown assets as a collateral and tried to raise $15.6 billion earlier. But as we know that by the end of last month, no banks has provided any commitment to this loan. So it's right now it's really the moment that the company need to think another way to raise new capital. So I think that's why this kind of discussion are ongoing.
Bloomberg China credit reporter Trista Xinyi Luo there with the latest on those companies. And of course, we continue to watch China futures ahead of the market opens there. We have seen that incredible rally already in Chinese stocks, adding $1.3 trillion in market value just last month. We had some more positive data yesterday from a private survey showing that China's manufacturing activity actually unexpectedly moved back into expansion territory. And it's been really about that growth in the AI infrastructure story. And we know that, of course, this week is also a pivotal week for geopolitics. The 80th anniversary of the end of World War II and the military parade in China will happen on Wednesday. And China has a history of propping up its stock market ahead of major political events. So we'll be watching that. But with Chinese equities outperforming, global investors are watching and asking if it's time to chase the rally. Bloomberg opinion columnist Shuli Ren says many are still wary, and Shuli joins us now. So Shuli, China's AI infrastructure, of course, has been a big story. We saw Alibaba jumping. We are now hearing that perhaps China will try to foster its own version of NVIDIA. Will investors buy this story?
I think it depends on how China is telling the story.
क्रूड ऑयल वहीं से रिटर्न कर चुका है ऑलरेडी. थोड़ा नीचे आने का एक्सपेक्टेड था, नहीं आया. वापस ऊपर जाएगा तो वापस सेल कर सकते हो इसको. ठीक है, क्रूड ऑयल अगर वापस ऊपर जाता है, ऊपर वापस सेल कर सकते हैं. लेट्स सी कितना और मूव करता है यहाँ से.
People say this kind of stuff a lot.
So what's your take?
I think boomers have ruined the world.
No doubt about it.
What do you think as an economist?
Well, ruin is a strong word. But to some degree, older people are always going to have more because they save for longer. On the other hand, there are some zero-sum elements of our economy that I think a lot of Gen Z and millennials are rightly resentful about. For instance, we only have a finite number of housings. We don't build enough housing. And older people have more wealth. They bought housing earlier, although they did pay higher mortgage rates than we ever did, like 11%. But they now own a lot of the housing, and a lot of younger people are having problems affording housing. So, I think that caused a lot of resentment. And I think potentially even a bigger deal is debt. To some extent, some of that boomer wealth was built up on the back of tax increases and government services that were provided by us taking on more debt, and younger people are going to eventually have to pay for that.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Nathan Hager. President Trump's National Guard deployment in Los Angeles violated federal law. That is the ruling this morning from U.S. District Judge Charles Breyer after a 3-day trial last month. That decision was put on hold pending further legal action. It comes weeks after President Trump activated the Guard in Washington, D.C. to crack down on what he called out-of-control crime. He's threatened to do the same in Chicago, Baltimore, and other Democratic-led cities. In Los Angeles' case, Judge Breyer said there were indeed protests in L.A. over President Trump's immigration crackdown, but he says there was no rebellion and civilian law enforcement was able to enforce the law. Nearly 600 economists have signed an open letter backing Federal Reserve Governor Lisa Cook as she continues to fight the president's bid to fire her for alleged mortgage fraud. The group says there's a high bar for removing Fed governors, and elected officials should avoid actions and rhetoric that erode central bank independence. Governor Cook's lawyers are expected to file a new legal brief today after a federal judge in Washington heard about 2 hours of arguments last Friday on whether the president does have cause to fire her. That hearing ended without a ruling. Congress comes back from its summer recess today with an especially full plate. Bloomberg's Kasia Klimashinska has more from Washington.
Government funding expires at the end of September, and lawmakers have to agree on some sort of legislation to extend the funding. That's always difficult. But look, Republicans managed to pass tax cuts earlier this year without any support from Democrats. So while difficult, I wouldn't say it's impossible.
Bloomberg's Kasia Klimashinska reports House Speaker Mike Johnson has also promised to push for a second major tax and spending cut bill this fall. It could face the same challenges the first bill went through, from fiscal conservatives looking for deep cuts to social programs and swing state Republicans who worry they may go too far. This afternoon, President Trump is scheduled to make an announcement related to the Defense Department. A Pentagon website says it's about the headquarters for U.S. Space Command. Multiple outlets say the president is moving it from Colorado to Huntsville, Alabama. You can hear that announcement. It's set for 2 p.m. Wall Street time on Bloomberg Radio, or watch on the Bloomberg podcast page on YouTube. Turning to markets now, stocks are paring back some of their declines to start the new trading month after the first set of economic data to start the week. The Institute for Supply Management's manufacturing index showed a 6th straight month of declines. Bloomberg's Michael McKee has more.
There was an anticipation that things would get a little bit better in August, and we saw that with the S&P Global Manufacturing PMI. It was up to 53 from 49 in July. The ISM number comes in at 48.7 after 48 the month before, so that's an increase, but it's still under the 50 division between expansion and contraction, and it doesn't match the 49 that was expected.
Bloomberg's Mike McKee reporting. We're also seeing new pressure on the tech sector. The U.S. has revoked Taiwan Semiconductor's so-called validated end-user status in China. That means TSMC can no longer easily ship essential gear to its main Chinese chip-making base. Bloomberg's Ed Ludlow reports it follows a similar move last week against South Korea's Samsung and SK Hynix.
TSMC has a very small footprint in mainland China, basically a single facility that's run since 2018. By comparison, Samsung and SK Hynix have a lot of chip manufacturing in mainland China.
Bloomberg's Ed Ludlow. Still, the news is weighing on TSMC shares traded in the U.S. Right now, they're down more than 1%, and NVIDIA is down even more, down 2.5%. Advanced Micro Devices is lower by nearly 1%, and the broader market is moving lower as well, with the S&P 500 down 0.9%. The Dow Jones Industrial Average is lower by about 0.2%, and the tech-heavy NASDAQ Composite is leading the declines, now down 1%. Kraft Heinz is down more than 5% on word the company's splitting in two, undoing a mega deal that turned the maker of Kraft Mac and Cheese into one of the biggest packaged food sellers in the world. Bloomberg's Shelley Banjo reports the space is facing tough times.
You also have the rise of GLP-1s that are, suppressing those needs for all those things. And, things like soda, sugar, boxed foods, condiments, those are starting to, not be completely get rid of, but, maybe a tiny step lower.
Bloomberg's Shelley Banjo reports the split-up company will have one side made up of Heinz ketchup and other condiments. The other will include slower-growing products like Lunchables and Oscar Mayer wieners. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
Are you looking for a new
So we've
podcast
seen
about
meetings over the weekend taking place between China and India. And then today, I think the big sort of headline meeting between India and Russia. What have we learned so far?
Yes, the key highlight today is certainly the meeting between Modi and Putin. But before that, I just want to show you what's top or the headline on China Daily, Chinese state media. You can see here, SEO charts a course for a shared future. This was yesterday's paper, and this one says sees SEO plays a key role in safeguarding peace. And this is really a platform for President Xi to show you that he really has global leadership here, especially over some of these countries of the global south, with more than 20 leaders around the world here in China and around 10 heads of international organizations here as well. But back to the bilateral meeting, we have Modi and Putin meeting today. It just concluded, and Modi saying in the opening remarks that Russia and India have a very special, privileged relationship that has withstood the test of difficult times. And he just said that the meeting was excellent. They talked about improving and deepening bilateral ties on all sectors, including trade, space, cultural, security, fertilizers, really quite a wide-ranging talk, it seems. And both leaders sat in the same car on the way to the bilateral venue. They hugged each other. It really shows you the close ties between the two sides, perhaps even more so because of President Trump imposing these additional 25% tariffs on India and really pushing India to look for other allies and partners in the region. Today as well, India's energy minister defending the country's actions in buying Russian oil, saying it is within international norms, it is within the price cap mechanism imposed by the G7 as well.
Yes, they say they've had mixed signals from the White House as to what the US wants them to do when it comes to oil. We've also seen then over the weekend, taking a step back, Min, we've seen this meeting between President Xi and the Indian Prime Minister Narendra Modi. Now, these two nations, there's been friction between them on a number of fronts of late, and they seem to be coming closer together, patching up their differences, but surely not agreeing on everything. What have we heard?
Yeah, certainly it seems like China is really on this charm offensive, trying to get India to tilt more towards China, united by this common mission to counter the impact of Trump's tariffs. So yesterday, when Modi met with Xi, he announced that both sides will be looking to resume direct flights that have been suspended since the COVID-19 pandemic. And certainly the rhetoric coming out of China is very markedly different from the time in 2020 when both sides were engaged in deadly border clashes along the Himalayan border. And this time, China is saying, or describing the relationship as one of the dragon and the elephant tangoing together. And it looks like, the two sides are really trying to come closer together, although Modi is also balancing a very difficult balancing act here because he's going to be absent from the military parade happening on Wednesday. He's not going to be standing alongside President Xi and Putin and Kim Jong-un. That's not a good look for him, given India prides itself as the world's largest democracy. So he doesn't want to be seen alongside these autocratic leaders. But still, again, it's President Trump sort of pushing these different countries to come together closer. And this has been billed as the largest SEO gathering in its history so far.
Yep, Min, thank you very much. Bloomberg's Min Lo at that event in Tianjin as China tries to project a bigger image on the global stage then. Let us turn to the tariff agenda of the Trump administration. America's trading partners have been left scratching their heads after President Trump's global tariffs were found to be illegal by a U.S. appeals court on Friday. Bloomberg's trade czar, Brendan Murray, is here to help us understand all of this. Brendan, thank you very much. So we've seen a number of legal challenges to what President Trump has been trying to do over tariffs in recent months. Has this one moved the dial? What have we learned?
Well, we've seen so many twists and turns over the past 7 months in this trade war that President Trump is directed at a number of trading partners. And I'm afraid that we're in for another several months of uncertainty as we try to figure out what the next steps from the Trump administration are going to be. Will they take it immediately to the Supreme Court? Will they defer to this lower court and see if the case could be narrowed? Or will they start rolling out more of these sectoral tariffs that are sort of in the pipeline? They've already got, have the tariffs on steel and aluminum and on cars. Those are not affected by this court ruling, nor will those on pharmaceuticals, chips, other sectors that they can target with tariffs. So it's always been understood inside the administration that this quick approach. The reciprocal tariffs, the Liberation Day press conference, untested in the courts, would be risky and could eventually be struck down in the courts. And that's sort of where we're headed. But in the meantime, on this other track, they have sectoral tariffs that they can target to accomplish much of what they want to in raising revenue and reshoring manufacturing production back in the U.S.
So perhaps that's why markets seem kind of calm in the face of all of this. The fact that, as you say, there might be other ways that the Trump administration can bring about the same effect and generate some tariff revenue, even if this current method is in question legally. Let me ask you about evidence of the damage that tariffs are doing to certain parts of the global economy. We seem to have seen some evidence out of Canada, for example, over the weekend, that their economy is shrinking as a result of what tariffs are doing to exports.
Yeah, exactly. The effects are slow, but as companies' profit margins shrink and they look for ways to raise prices where they can or ask suppliers to take some of the hit for them, that impact starts to sort of play out. It doesn't happen right away. We talk to small businesses fairly regularly, and they say these are killing us. We can't survive in the long term if we have to pay an extra 30% or an extra 50%. We had the end of the de minimis exemption on Friday. A lot of small businesses around the world use that to trade between countries, and so all of this is kind of happening at once, and none of it seems to be lifting the cloud of uncertainty that businesses need to plan ahead and to run their businesses efficiently, and it just leads to it just winds up as an economic headwind in the broader scheme of things.
Yes, because there's the impact directly on exports, Canadian exports falling by 27% on an annualized basis, but then there's the sort of chilling effect on investment and business investment contracting by some 10% in Canada. So, Brendan, thank you very much. Thanks for bringing us the latest data there. Bloomberg's Brendan Murray telling us all things trade. Now, of course, we'll keep an eye on the latest developments around the trade agenda, but other things in focus for us: the jobs report on Friday, key inflation data, that's from the Eurozone tomorrow, and the Fed's next rate decision, that's next week. All of these things are going to be hitting markets in the next 14 trading sessions, so it's going to be a busy start to September. It means over the next few weeks we should get a clear reading on whether the stock rally can continue. So with us to discuss, Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. Laura, really nice to have you with us. September is typically a challenging month for stocks. Is this year going to be any different?
I don't think this year is going to be any different. Yes, we have the seasonal headwinds that we typically see, but as well, to your point, there's a number of key, crucial economic data that we'll be watching for. Most notably is the payrolls print this week. That's likely to be a make or break, not so much for the September cut, but really markets extrapolating the Fed policy path further out of cuts. And then, to your point, we have the CPI next week as well. Will we see signs of more material tariff impact? Could that be kind of a game changer for market pricing? And then, of course, all of that leads up to that September 17th rate decision where, 25 basis points is certainly expected. But what could the Fed signal for the path forward? And that's going to be crucial for stock markets.
Yes, crucial for stock markets. And we have not seen very much volatility of late, Laura. So the VIX has rarely been above 20 over the last 3 months, which suggests everyone's had a very chilled, relaxed out summer. And we're not too concerned about the path ahead. Is there too much complacency out there, do you think?
I certainly think that is the case. I mean, looking at hedge funds kind of betting on shorting the VIX at the most that we've seen in 3 years really does suggest that they expect this calm to persist. I think we expect greater volatility if we do see some of this economic data materially surprise to the upside or the downside, just given that equities have really been predicated on the Fed easing coming through quite materially. We have about 5 rate cuts priced in by the July meeting. And this is occurring against a backdrop where the inflation uncertainty still remains kind of unknown. Because if we think about, yes, we're starting to see goods inflation that's expected to grind higher over the coming months. But last month, the supercore inflation measure is actually what surprised to the upside. If we start to see signs of services inflation reaccelerating or wages accelerating, I think that could put, some cold water on some of these expectations for Fed market easing bets.
Yes, and so let's think about where we might be by Friday, or what Friday's payrolls report might tell us, Laura, because yours. Do you think this is going to have a real bearing on September rate cut expectations? Or is it going to be more about the medium term? Because after we heard from Jerome Powell at Jackson Hole, we increased expectations of a Fed rate cut in September. And the market is probably quite attached to those expectations because of what we heard from the chairman. So is it that's going to be the focus for markets? Or is it going to be all those other rate cuts that the market has priced in?
I think it's going to be a combination of both. And I think to your point around will the payrolls really be the determining factor for the September 17th Fed cut? I think it depends on the magnitude of the miss or the beat that comes through. I think last month's payrolls told us that the labor market is on much more precarious footing given the significant downward revisions. So if we do see a meaningful upside surprise, perhaps then that will start to question whether the Fed will be in a position to cut beyond that September rate cut, which market's pricing in about 88%, because the Fed doesn't want to necessarily cut into, still hot economy. There's certainly implications on the back of that. But if we do see a material miss to the downside, perhaps then we're going to see not just a 25 basis point cut priced in for September, but perhaps that 50-25 debate will come back to the focus. Because if we look when they last surprised with 50 basis points, what preceded that was really 3 consecutive months of weak payrolls print. So as well as the payrolls print, I think it's a number of the key labor market indicators as well this week to watch for that could guide that September cut and further out, because there is this greater scrutiny, certainly on that payrolls data more recently.
Yes. And so are you expecting, given the way that payrolls reports have gone recently, are you expecting this one to be another one that disappoints? We've seen over the past couple of months, it was the revisions and the fact that we thought we had jobs that then turned out not to be there. That was the thing that sort of disappointed and spooked markets.
Well, our expectation is that we're fairly in line with consensus that we could see 100,000 job gains in August. But we'll be watching for the more stable metric around the unemployment rate. Right now, 4.2%. If it were to go to 4.4%, I think in this backdrop where there's supply constraints coming through from immigration restrictions, the Fed is really closely monitoring this key gauge. And I think that could really be what to watch for to guide markets. But as well, look to, the ADP print this week. That's probably going to have disproportionate importance given the scrutiny on the BLS data. And if we look at, given the revisions, the ADP print has actually been a more accurate gauge than historically it has been. So maybe market attention will turn there.
Okay, yes, that's interesting, because often some people say, the ADP is not a great indicator, but as you're suggesting, maybe the lacking data elsewhere means that we'll turn to it more. And what does all that mean for risk appetite then, Laura? Where does that take us?
I think overall the economic fundamentals still remain supportive enough to support the U.S. equity markets in particular. I think there were some key themes that we drew out of the earnings season, most notably the number of companies who reported positive guidance certainly surpassed historical averages and was about double what we saw last quarter. And unusually what we're seeing is that earnings are actually being revised higher, whereas historically at this time of the year they're being revised lower. So a lot of that low-hanging fruit perhaps has already kind of been embedded in market prices, but unless there's a material shock that derails some of the Fed pricing, I think we're still going to see equities grind higher. We still have our S&P 500 target around 6,600 so far this year. It's really just being about very selective across sectors, in particular in equities. And maybe now is still a great time for that regional diversification. Still in Europe and pockets elsewhere.
Okay, so we're at 64.60 on the S&P right now. Of course, no trade today, Labor Day. So you obviously see some upside there. Are the gains going to be good in the US versus the rest of the world? I mean, I was looking at China. The CSI 300 had a really good run in August. Are we looking more broadly, globally, for gains, given how far US tech in particular has run?
I think it's about a combination of factors. I mean, certainly the China tech upswing has been quite surprising in July and August. And there's a number of factors behind that. We can see the PBOC did inject fresh liquidity. We see valuations are still relatively cheap. And as well, the government is extending this campaign to try to kind of reduce pricing reductions in competition within the space. So all of those factors suggest that China tech can continue on this upward advance. But then U.S. tech, it's stumbled more recently. But if we look at earnings expectations, if we look at the free cash flows that are emerging from, let's say, 6 of the 7 magnificent 7 are quite strong. We think that's going to be supportive backdrop to continue to have tech in the U.S. as that key market leadership. And then in Europe, we are seeing some signs of improvement on the growth front. We're still quite constructive. But really, Europe is more of a bifurcated market, lots of dispersion. So we think it's really a stock selector's time.
Okay, Laura, thank you very much. Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. We started this hour talking about what's been going on in Tianjin at the that Shanghai Dialogue, Shanghai Cooperation Organization, being run by the Chinese, of course. And President Xi is speaking at a grouping at that meeting. It's called the SCO Plus meeting. He's saying that global governance has come to new crossroads. He's also proposing a new global governance initiative. So he continues to monitor the outreach from China to other regional powers at these meetings. Coming up on the programme, we'll turn to French politics. François Bayrou strikes a combative tone as he battles to survive as French Prime Minister. We'll have details next. This is Bloomberg. Welcome back. This is The Pulse. Let's get more on the political turmoil in France. Prime Minister François Bayrou has told reporters he isn't sure that a compromise is possible in talks with opposition parties this week. Those remarks came a week before legislators hold a confidence vote in his government. Let's bring in Alan Katz, Bloomberg's Paris bureau chief. So we've had more days over the weekend, Alan, of the Prime Minister saying there is a path forward, I can do this, I can win this confidence vote, and all the opposition saying, well, we're not going to vote for you. So where does this look as if it's heading?
So, Bayrou definitely seems more optimistic than most. Pretty much everybody else gives him very little chance of surviving this. As you said, even he last night said, compromise is a beautiful term, but I'm not sure that it's reachable in this instance. Those comments came after both the head of the Socialist Party earlier on Sunday and the president of the National Rally, the far-right National Rally on Saturday, had said they absolutely weren't going to support his confidence motion. We're definitely going to vote against him. And if he doesn't get at least one of those two to flip, or at least be willing to abstain, then he seems almost certain to be forced to resign a week from today. So it's hard to see how he makes it through this, and it's hard to see too whether his optimism is deeply felt or if he feels he just needs to sort of put on a front between now and next week. It seems really overly optimistic, to put it that way.
Right. Yes, so maybe that's his own, overly optimistic reading, Alan, of his own prospects. So if he does not last, if he's not Prime Minister just over a week from now, then we just look ahead to a new Prime Minister, do we? And will we be still faced with exactly the same political maths within the Assembly and the same problems for a new Prime Minister?
So largely, yes, we will be faced with exactly the same problems. Now, if he's forced to resign, Macron, then it's then up to French President Emmanuel Macron to decide what to do. And he has a few choices, one of which is to name a new prime minister. And that person could even be François Bayrou again, though that doesn't appear to be likely. But he could name a new prime minister. That new prime minister, as you say, would have exactly the same issues with a completely divided parliament. It would be very difficult to think of anyone who might be able to assemble a coalition large enough to really get anything through, including a budget, and that's the one sort of must-pass bill that you have in France. But that is what most observers think is the most likely outcome. The other thing that Macron could do, or one other thing he could do, is dissolve parliament and call parliamentary elections again. He did that last June. That didn't turn out very well for his party. They lost a lot of ground, really to both to the Socialists and to the far-right National Rally, which the National Rally became the biggest single party in the National Assembly. So that seems to be something that Macron is not inclined to do. But again, as you point out, how does he find someone who, in just naming a new prime minister, who could actually sort of muddle through for the next year and a half? Because don't forget, Macron's term runs until early 2027. So we have quite some time until there'd be sort of a big presidential election to really change the political dynamic in France.
Alan, thank you very much. Bloomberg's Alan Katz with the latest on French politics. From France to Germany, the German Chancellor Friedrich Merz has warned that he sees the war in Ukraine dragging on with no clear end in sight. Speaking on German TV, Merz said he hasn't given up hope that a ceasefire can be secured, but he says he's, quote, not under any illusions either. Greg Sullivan, our Russia economy and government editor, is here with his assessment of where this takes us. A pretty negative assessment then from the German Chancellor, Greg. I mean, is this a surprise? This would be the assumption, I suppose, amongst many European leaders.
Yes, negative, but potentially clear-eyed. We've seen that both sides have held successive rounds of talks, but those haven't produced a ceasefire. Instead, they've largely just resulted in prisoner exchanges between the two sides. Putin has stuck to maximalist demands that Ukraine is unlikely to accept to reach an end to the conflict, and the Kremlin has really shown no sign of wanting to end the fighting, short of a Ukrainian surrender. And Ukraine is, at this point, not likely to do that because they see this as an existential conflict, and they've been very clear that they do not want to cede sovereignty to the aggressor. So at this point, it does not look like a ceasefire is on the horizon, despite the push towards one. Things could always change, but for now, it seems like a rather clear-eyed assessment from Merz.
Yeah, so we don't see much progress then on the Ukraine agenda. Meanwhile, Merz and President Macron of France have renewed their calls then for secondary sanctions against Russia. How likely are they at this stage?
Well, it's interesting because historically they've resisted this idea of secondary sanctions, but in some regards this could be read as an admission that the current direct sanctions on Russia just don't have the same sort of leverage that they feel they need to force President Putin to the table to negotiate a ceasefire. So here they are calling for secondary sanctions to both make those more effective and ramp up the pressure on Putin. It's also a move to try to prod the U.S. to step up to the table. Trump has warned that there would be an economic war and bad consequences for Russia if the fighting continued. But so far, he's been reluctant to impose sanctions on Russia or impose new penalties. And so maybe this is a prod from the Europeans in that regard to try to ramp up the pressure on Russia amid these negotiations.
Greg, thank you very much. Greg Sullivan, our Russia economy and government editor. Thank you for bringing us the latest on Ukraine. A quick look at what we have on European equity markets right now then. It is the 1st of September. No trading in the United States. We are up by 0.4% on the Stoxx 600 right now. We see some positivity coming through on the healthcare space, for example. Coming up on the programme, we'll get back to some of that geopolitics. Hellos and handshakes as Chinese President Xi meets India's Narendra Modi and Russia's Vladimir Putin at a summit in China. We'll discuss what it means for global trade and security next. This is Bloomberg. Welcome back. Good morning. Welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. The leaders of China, India and Russia meet in China as they seek to strengthen ties amid trade tensions with the United States. Tariff uncertainty. Washington considers its next move after an appeals court declares President Trump's global tariffs illegal. Plus, OpenAI aims to build a massive new data center in India that could mark a major step forward for its AI infrastructure push. Welcome back to the programme. Let's return to our top story this morning, and that is the events taking place at the Shanghai Cooperation Organization meeting in Tianjin. Chinese President Xi has welcomed world leaders, including India's Narendra Modi and Russia's Vladimir Putin, as they discuss trade and security. With us to discuss the impact of this meeting, this grouping, Francesca Giretti, who's the Europe-China Initiative Director at RAND. Very nice to have you with us, Francesca. Thanks for being with us. So what do you think China is trying to get out of this meeting? What are the aims of this?
There are a couple of things that I think China and Russia together are trying to get out of this, which is, and they've explicitly said so, is a new world view, is a new world system organization view. Now, I would, however, be very cautious about the fact this is not the first time China tries to put out there a new world system, right? They had the Global Security Initiative, the Global Development Initiative, they had the Belt and Road Initiative before that. So this is definitely not the first time that this happens. However, the fact that the United States has taken the position it's taken, the fact that it's somewhat alienating the allies, does feel like it is creating a situation where China and Russia potentially
they can propose something more assertively to partners, because there's a need for multilateralism, which is not being filled by other countries.
Yes, and you make this point in your notes ahead of our conversation that it is important in itself that these countries, some of them run by very authoritarian leaders, they still want to operate in a multilateral environment. I mean, is that the case, Francesca, or is it just that's the image that they want to create?
I think it's a bit of both, right? It is indeed the case that a lot of countries, not necessarily Russia and China, want to operate in a multilateral environment, but it's also the case that these two want to have a multilateral backing. They do want to be part of a system that can support their aims and their goals, and they want to have backing in the image that they're actually much more supported than the so-called West.
So if we dive into some of the relationships that are on display here, and we've got China and India coming closer together as a result of these events and in the run-up to them, in fact. What do you make of the warmth of the relationship there? Is warmth too strong a word? Is this something more tactical?
I think warmth is too strong of a word. The two of them keep having some very deep security issue. Their trust is not necessarily there. Modi has complained about the trade deficit that India has with China, and considering how China's economy is doing and the structural issue that it has, especially the export-driven, the need to export more. I'm not sure the trade deficit issue will be solved. However, India does want to have a successful economy, and at the moment, because of the potential 50% tariffs from the United States, China looks like a potential positive partner economically. However, I would definitely not see this as the beginning of an alliance or a partnership, but nothing like that.
Yes, I mean, India is a democracy. What do you think the thinking is in New Delhi about how close to get to this kind of grouping?
Well, they did apply for membership, so they're interested in a grouping that brings together Eurasia countries, right? So India is part of Asia, so rightfully so, rather than leaving everything to China and Russia for the decision around the SCO, they applied for membership. So they're interested in steering the direction of the group in a certain way, and that in itself, I think, is important.
Yeah, and you mentioned the tariffs that the Trump administration has imposed on India. To what extent do we see the influence of America in this room, in this grouping, even though America is clearly not there? But the fact that they all have something in common. They have Trump and his tariff agenda to contend with.
I mean, let's put it very bluntly. If it weren't for the view towards the United States, probably China and Russia wouldn't even be partnered to begin with, right? Is this idea that they have to fight against the so-called West that creates the relationship between the two of them. On top of that, if you layer the fact that now the Trump administration is imposing tariffs on partners, allies, and so on and so forth, as I said before, this creates a window of opportunity for a country like China and Russia to propose themselves, especially China, as responsible global actors to a lot of middle-income, lower-income countries that just want to have a good and solid economy.
Yes. And what about the oil relationship, the energy relationship, rather, between India and Russia? So India buys a lot of its energy from Russia, and the current US administration, Peter Navarro in particular, with the trade brief, has been very critical of this, almost laying the blame for the war in Ukraine at India's door, because they're saying that India is bankrolling Russia in its war in Ukraine. But India pushes back and says we've had mixed signals from the Trump regime, and actually we're buying in accordance with the G7 minimum price and all of the complex rules that were put in place there. I mean, does India have a point? What's the future of this conversation, do you think?
So we talked about India-China, right? And I told you that I don't think that the relationship is particularly warm and that there are a lot of issues there. India-Russia, however, we've seen their relationship being relatively close. Not really a partnership, but definitely there's an ongoing relationship between the two of them in terms of oil, but there's also an history of weapons from Russia being sold to India. So I suppose that there's a bit of narrative coming out from New Delhi in terms of to be able to maintain this relationship and a bit of truth. The reality is, however, at the SCO, if I were to, identify one bilateral relationship that seemed particularly warm, that is definitely the one between India and Russia.
That's interesting, because I was reading that Narendra Modi did speak to Volodymyr Zelensky before attending this event, and that makes you wonder if any progress can be made, any pressure applied to Russia when it comes to its actions in Ukraine. I suppose that would be a lot to hope for from this event.
Absolutely. I'm not sure New Delhi has the means to apply pressure on Moscow to begin with. But otherwise, I don't think that India is necessarily siding with, India is not siding with Moscow, right? It's just is a position where his interests need to be served. And they're served at the same time by buying oil from Russia, while at the same time also saying we need an end to this war, talking to Zelensky and backing the Ukrainian positions.
And another thread that you flag as interesting in going into this meeting is what we could learn about Russia and Iran and the Iran nuclear program, something else that we'll be watching for headlines on. Why do we have that expectation that will be addressed?
I think because the Iran and Russia are going or have met at the SEO, right? And they were going to talk about the nuclear programs, especially now that European nations have decided, flagged the possibility to impose sanctions again against Iran. And that would bring these countries, who are authoritarian countries, even closer together.
OK, Francesca, thank you very much for your analysis. Francesca Giretti, Europe-China Initiative Director at RAND. Now, in other news from the Asian trading day, Indonesian stocks tumbled by the most in nearly 5 months, hit by growing concerns over political instability in Southeast Asia's biggest market. President Prabowo Subianto cancelled a trip to China following the deadly unrest as demonstrators targeted the homes of Indonesia's finance minister and several lawmakers. On Sunday, Prabowo announced Parliament will remove hefty lawmaker perks that had been a source of ire for many protesters. Alibaba shares have surged today after the Chinese e-commerce giant reported a jump in revenue from China's AI boom. The company posted a triple-digit percentage gain in first quarter AI-related product revenue, helping offset a surprise drop in profit. And the Wall Street Journal has also reported that Alibaba has created a chip capable of operating AI services as Nvidia faces hurdles in selling its products into China. Shares in the Chinese EV leader BYD have slumped after it reported a 30% plunge in quarterly profit on Friday. Despite robust overseas sales, BYD's net income for the period fell short of analyst estimates for a modest increase. Heavy discounting saw BYD's gross margin contract as a fierce battle among Chinese car makers hits its bottom line. Coming up on the programme, Parliament returns from recess in the United Kingdom. We'll discuss the challenges facing the government here and look ahead to the upcoming budget. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Welcome back to The Pulse. Here in the UK, MPs are returning from their summer break this week with immigration top of the agenda as criticism grows over the Labour government's handling of asylum issues. That's in focus. Plenty more. A reset of communication strategy from Number 10 perhaps as well. Let's talk to Ruth David, Bloomberg's London bureau chief, and John Stepek, author of Bloomberg's Money Distilled newsletter. So there's a lot in the mix this morning. And the bigger picture, I suppose, is it big picture to think 2 months ahead, medium-term view? We're looking ahead to a budget, of course, and that's going to keep everybody guessing for weeks and weeks, no doubt. 2 months of that ahead. So Ruth, just in the short term, though, we've seen quite a lot of news lines just dropping in the last few minutes surrounding a new chief economic advisor in the shape of Manoush Shafiq at Number 10. new comms team in place at number 10. So do we get a sort of back to school, new year starting reset feeling coming through?
Yes, and one can make the case that Nigel Farage has had a better summer than Keir Starmer, arguably speaking. Yes, so Minoo Shafiq, Nin Pandit stepping down. It does seem like the Prime Minister is looking at getting a more economic-focused team in place with the view that the budget is coming up soon. There is this general sense of discontent in the UK public around so many issues, right? We're talking about immigration. We're talking about taxes. In the last few weeks before the summer, before we went back to school, there were all these rumors about, are they going to tax banks more? Is there going to be more property taxes? Is there going to be landlords paying national insurance taxes, right? And this general sense of discontent over the summer, even though yesterday Downing Street officials were apparently swearing to us that there would not be a big cabinet reshuffle, but they've just gone and confirmed Minoo Shafiq now. But I guess they're thinking that's not
a cabinet,
yes,
maybe.
That's
it's
not
just,
a ministerial
Yes, the advising teams, but a sense of reset then coming through from number 10. And well, they might want to reset, I suppose, after they haven't necessarily been in charge of the narrative over the summer. And John, that narrative, that cost of living conversation still keeps popping up in other media, even though some of I was talking to Callum Pickering at Peel Hunt earlier on today, and he was telling a slightly more positive story about the UK economy, which doesn't necessarily seem to be cutting through in the wider media story. GDP numbers and PMI, okay, they're not going great, but they're perhaps at the upper end of the G7. They were better than expected in some cases, and yet that's not being turned into any kind of positive story and momentum for the government.
I mean, yeah, and Callum's absolutely right. I mean, this has been a persistent issue for the UK for a good few years now. The fundamentals have actually generally been better than expected, even though they're not great. I mean, actually, that probably is part of the problem. It's like they're better than people think, but they're still not amazing.
Yeah.
The other issue is, I guess, well, there's a couple of things. The employment market looks a bit wobbly in various areas, and that partly is down to policy. So whenever the government decided to impose employee national insurance, so they basically hiked the cost of employing people, particularly young people, like by about 20% when you combine it with the minimum wage. So new graduates are having a tough time finding jobs. And then you've also got the fact that with inflation coming in a bit higher than expected, probably going to hit 4% for September, you're going to start seeing headlines about real wages are no longer going to be rising. You've also got the housing market is kind of wobbly.
Yes.
And a lot of people in the UK, their mental balance sheet is based on their UK house price.
It's interesting. I was reminded by Dan Hansen just last week from Bloomberg Economics how the real wage story is positive in the UK. If you look back to 2019, over a longer time period, you can find a positive story to tell about real wages, which, as you say, is something that maybe doesn't always cut through.
Well, I guess it's also the thing that's been propping up consumer spending,
despite
all of the painful bits of governance that we've had. And the question is whether that can continue.
Yeah, and I suppose we're moving towards the budget then, Ruth, and it might be nice that some of the numbers come in better than expected, but we're still talking about a Chancellor with a fiscal black hole to fill, and still the speculation will be about further tax rises then. And we've got 8 weeks perhaps of speculation about tax rises. So where do we start?
Absolutely, anywhere between 40 and 50 billion, depending on who you speak to. But some of the UK media have had these polls that they've had YouGov do for them specifically, saying that both Rachel Reeves and Keir Starmer, right now their popularity is so low. And Reform, of course, has been ahead of Labour in the polls, in the opinion polls, since April. This week, I think the focus is going to be, there's a Reform conference in Birmingham where we've been reporting and others have been reporting that there's a record high in terms of business lobbyists attending. So they definitely are garnering not just public attention, but also business attention. Now, Labour is trying to say, okay, we've got a lot of these childcare initiatives coming through, 30 more hours for nurseries. Anecdotally, and so many others are saying this, they're saying there's more free childcare. Our nursery and many others across the country have just gone and increased fees. So, this sense of discontent and the sense of what is this government doing continues, and it's going to be hard to see how they can change that and what Rachel Reeves can do in the budget to really give herself that fiscal buffer.
Yes.
And carry through with it.
We'll see if the narrative can be turned around, if they can get ahead of the communications challenges with the new communications team then coming into place. You mentioned reform, and it seems that this was such a big conversation over the summer that it'd be, we should not neglect it. We've got a story out over the weekend that says that Labour is going to review changes to the European Convention on Human Rights. And this feeds into a big debate that now exists, it seems, in the UK as to whether it's that legislation that stops the UK doing what it wants to do to stop small boat crossings across the English Channel or not. And the answer to that seems to be elusive.
Home Secretary Yvette Cooper is speaking in the House of Commons today, and she's going to be talking about all of these things. You know, the BBC was reporting this morning that maybe there'll be tighter rules for family members of asylum seekers. It seems like there is a debate within the government about how to proceed with disconnecting from the ECHR and whether really having that disconnect is going to be as effective in stopping immigrants. The other thing to keep in mind, and we've seen some protests around it, is these hotels for asylum seekers, right, which the councils are really going up in arms again. I mean, the government won some legal reprieve last week, but the council might take it to the Supreme Court, and then we see what precedent that sets.
OK, Ruth, thank you very much. Ruth David, Bloomberg's London Bureau Chief, and John Stepek, author of Bloomberg's Money Distilled newsletter. Thank you to both of you for joining us. Now, sticking with the UK, Norway has picked the UK to supply frigates for its navy in a £10 billion deal, the Nordic nation's biggest ever investment in its defence. Among the NATO members that border Russia, Norway had also considered France, Germany and the United States for the contract. Delivery of the British Type 26 frigates, specifically designed to detect, track down and combat submarines, will start in 2030. Now, the European Commission President Ursula von der Leyen says the bloc's plan to accelerate investment in its defence industry will benefit Poland most. The Commission will prepare a roadmap for investing additional defence funds in coming weeks and will discuss that with national governments in October. Joining us now is Suzanne Lynch, Bloomberg's Brussels Bureau Chief. So a number of interesting developments and threads that we're following when it comes to defence around Europe, Suzanne. How significant are these plans on defence and foreign policy?
Yes, I mean, this is the European Commission's flagship defence spending programme. It's €150 billion pot of loans at favourable rates that countries can apply for and use that to increase their own defence capabilities. Now, as you were saying there, Ursula von der Leyen was in Poland yesterday. That's part of a whistle-stop tour across 7 European countries that are closest to the war in Ukraine. She's in Lithuania today and later in Romania. And I think this is about, the messaging here is important. It's about saying to these kind of frontline countries, Europe, the EU is behind you, and also giving that message to Ukraine that Europe's support is still there. Obviously, we've seen a lot of toing and froing over the summer about what's next for Ukraine. We're still waiting to see if there will be a meeting between Vladimir Putin and Volodymyr Zelensky. But in the meantime, the Europeans are looking at ways at how they're going to make sure they continue to build up that defence industry domestically that has been so lacking in recent years.
And of course, I'm sure the defence industry and Europe's intentions towards defence, that's going to be one of the issues that you'll keep front and centre with your new Brussels newsletter. So tell us a bit more about what to expect there.
Yes, we're relaunching today our Brussels edition newsletter, and that comes into people's inboxes, European readers, in the afternoon. And basically, this is a snapshot of what's happening in Europe every day. You know, as we've been discussing there, Brussels is more and more at the centre of geopolitics, trade, economics, that whole transatlantic relationship and Europe's place in the world. So it's increasingly significant. And our Brussels edition newsletter will be tapping into that. The idea is just to give readers an idea, a snapshot of what's happening in Brussels each day, and also highlighting some of those scoops analysis that our team here in our Brussels Bureau and across Europe are generating each day. So make sure you sign up for that.
I will. Suzanne, thank you very much. Suzanne Lynch, our Brussels Bureau Chief. And you can sign up to the new Look Brussels edition newsletter at bloomberg.com/newsletters. Now, from a scrappy startup to global media giant, YouTube has constantly evolved over its 20-year history. Bloomberg Originals has taken a deep dive into the platform's legacy and the challenges posed by AI and its biggest competitor, TikTok.
Okay, hi. So, my name is Boxy, and it's been a while since I made a new video. I
first heard about YouTube when I was in high school. Hey, it's Fred! I went to a party with Daniel and he kissed me. Just kind of wondering, what is that?
I have this really vague memory.
They have really long trunks.
I believe it might have been the first YouTube video ever.
It was, and featured trunk enthusiast and YouTube co-founder Javed Karim. And it ignited 20 years of liking, commenting and subscribing. 20 million videos are uploaded to YouTube every day, and the site's estimated to account for about a fifth of all internet traffic. In the US, people spend more time watching YouTube on TV than Netflix, Amazon, or all of Disney's TV networks and streaming services combined. But the world's central repository of video content is now taking a risky gamble, while also facing its first real competition in years.
The biggest threat for YouTube is that someone could come along and do what they did 20 years ago.
And so, with novel threats knocking at its door, can a wealthy, grown-up YouTube still keep its kids engaged?
You're still here.
And you can watch the full documentary, the full story, at Bloomberg.com or on the Bloomberg terminal. Let's stick with the technology theme for this Monday morning. OpenAI is seeking to build a massive new data center in India that could mark a major step forward in Asia for its Stargate-branded AI infrastructure push. Let's bring in Bloomberg's Tom McKenzie with details on this story. Tom, good morning. So take us through the details of this data center.
Yeah, Anna, I think what this story reminds us is the ambitions, of course, of OpenAI and Sam Altman in terms of that Stargate project, but also the growth in terms of what OpenAI has seen in the Indian market. So they are planning, according to our reporting, to team up with a local player to build out 1 gigawatt in terms of data centers, which would be one of the largest, if not the largest, in India, if that's what it comes to. Google, Microsoft have already been building similar facilities to support their AI ambitions and growth in the Indian market. Now it's OpenAI's chance, and they, again, are looking at this size and scope. 1 gigawatt potentially in terms of the size of this data center. They're looking for those local partners. They've seen significant growth in the Indian market. And of course, this builds out, as I mentioned, that broader Stargate push for OpenAI. They're committing about $500 billion alongside SoftBank and Oracle in the US market to build out potentially up to 4.5 gigawatts. They've got agreements that are underway in the UAE and parts of the Middle East to build out data centers there. Now India is in focus, and it could be announced, according to reporting, as soon as this month, when Sam Altman, the CEO, of course, is expected to be on the ground in India.
Yes, and this comes at a hugely sensitive time, doesn't it, for US-India relations? We're just seeing this weekend and into today the Indian Prime Minister in China trying to further links and ties there because of the difficulty between the US-India relationship. So I wonder how this OpenAI story could fit into that.
Well, I think we have to watch for any comment, of course, from the White House, from President Trump himself, whether or not this will be welcomed as an example of trying to align the world to US standards when it comes to AI, or if there'll be some pushback on that, given what you've said, given the 50% tariffs, of course, that the US administration has now imposed on most of those Indian goods as punishment for India's purchases of Russian oil. So I think the Trump administration's response to this will be fascinating. They have been supporters of OpenAI's push to build out that so-called sovereign AI beyond US borders, and we had that really articulated in the UAE when, of course, President Trump was himself there on the ground. And we've heard from administration officials they do want the US to be setting these standards globally. And so arguably the India push would be part of that piece, but at a time, as you say, of those tensions between New Delhi and Washington.
Tom, thank you very much. Tom McKenzie on the Tech Beat with the latest on OpenAI and its intentions towards the Indian market. Up next, Bloomberg Markets. That's with Guy Johnson. He'll be taking you through all of the strength that we're seeing actually on European equity markets right now. The Stoxx 600 up by 0.4%. Broad gains, most sectors in positive territory, industrial goods and services on the rise this morning. Guy is back with the markets next. This is Bloomberg. bank's independence. Japan's 10-year...
And he referenced that stake in terms of Intel as an indicator of kind of 1930s style government. Now, there are a lot of people who would push back on that and say there are national security reasons, this is a key sector, a key industry. But to your point about the debt load, this line stood out to me. We are facing a debt-induced heart attack in the US in 3 years, give or take 1 or 2 years. So potentially within 3 years. Now, he's been warning about this for a long time. But you have to fold that into what you think about in terms of the long end of the Treasury curve and all the anxiety. And that brings us back to Fed independence. It brings us back to the fiscal spend in the US and to what extent you're going to get a further sell-off in the 30s.
Yeah, exactly. And continuing to think about the bond markets. We've been nervous about the long end of the bond market for a long time. And so I flagged two things which sort of move in opposite directions. One, September is difficult for bonds, has been, according to our data, the last 10 years or so. So that's on the sort of negative side. But on the more positive side, we've seen the Japanese auction, haven't we? Which has been pretty positive, and so that's moving us in the other direction. Strong bid to cover 3.92, the best since 2023.
We've got. Is there a debt crisis coming? Is that what the long end is signalling? Yes. There has been a bid back into the Japanese bond market, which is interesting, but yields have been kind of moving in a direction which kind of maybe starts to make them interesting. It's going to be interesting to see whether or not Japanese money comes out of French bonds and goes into Japanese bonds. And I just flagged that one in terms of drawing a line back to Europe as well.
Yes, absolutely. And one of the distinctions that Ludovic Subran, who's going to be on the programme in an hour or so, is making in his notes is between, we're seeing steepening, but we're seeing bear steepening and we're seeing bull steepening in different geographies. And so making that distinction and exploring what that means and what that tells us might be quite useful. We'll do that around.
And Guy, you flagged the back-to-school theme and the focus on the US, but also in the UK as well, with a reinvigorated, at least that's what the Prime Minister will help, team around him. So he's changed some key members amongst his team in terms of advisors on everything from communications to economics. One of the key criticisms from some is that that's fine, but you have to have a Prime Minister who actually knows what he wants to achieve. And until you get that direction from the top, it's not going to help if you move the pieces on the chessboard. But there are some significant changes and people who bring deep experience to this team.
Manish Shafiq is in at number 10. That is one of the key names that obviously has been talked about. The UK government's got to figure out whether or not spending more equals better outcomes, and at the moment that doesn't seem to be the case. So I think this is going to pile further pressure onto Rachel Reeves in terms of her budget. She looks like she is struggling massively, and if number 10 assumes more responsibility on the economics, that's going to put even more pressure onto the treasuries.
And does it change the fiscal facts on the ground, as you've been saying, and does it do anything about the political challenges that the government is now going to be facing from the right, from reform, or is it sort of tangential to that? But you've been thinking about the back-to-school theme with regards to the United States as well.
Congress is back.
Congress is back, and a lot of things on President Trump's in his in-tray, many of them hangovers from the previous term,
it just takes us back
previous
to
semester.
It just takes remember that they went early. They went on holiday early because of the Epstein concern. That's going to still be there, so that's going to be an issue. But actually, from kind of our point of view, from a sort of economics macro point of view, you've got a potential government shutdown coming up. The debt crisis that Dalio is talking about, this is going to be front and centre very, very quickly. Can they avoid a debt crisis? Can they work with the Democrats? How do they get round them? There's all kinds of issues there. You've got various appointments coming through as well. What's going to be happening in the Senate there? That is going to be something that maybe the Republicans try and circumvent, get round the Democrats. So there is a lot going on, but it's going to refocus, I think, the story back onto the economy. And the Fed story is going to be intermingled with all of that as well. So, back to school feeling. It's interesting. I think the French are coming back early. I don't think the Germans are back yet. The Brits are back. So the back to school kind of is going to be a little more. We could have done this yesterday,
but without the United States, it felt a little premature, didn't it?
It did.
Now we feel we have the full complement of global markets.
We're a bit like schools. We're all kind of coming back at slightly staggered times. But we're getting the idea.
I think the one thing that we all need is a new compass. Sense of direction, I think.
Yeah, I like that. We're going to get them issued with Bloomberg branding, hopefully.
Yes. Which way does it point?
Opening trade branded compass. There you are, Guy. On your wish list.
We're going to have one of those. We'll get one of those. What have we got coming up on the show? Ella Hoche is going to be joining us from Newton Investment Management, fixed income head there. We'll get her take on what is happening. We've already indicated Ludovic Subran, Allianz's CIO, is going to be joining as well. Celine Michon is going to be joining us, Goldman Sachs head of investment banking for France, Belgium and Luxembourg. Looking forward to that conversation as well.
On your day book, other things to mark then as we work up to the trade, of course, this Tuesday morning, 8 a.m, of course. After that, 10 a.m. UK time, we're going to get that inflation print out of the euro area then, at a time when we're hearing from Schnabel of the ECB, of course, traditionally on the hawkish end. pushing through from views in terms of how the inflation story is adjusting for the Eurozone. So that data comes out at 10 a.m. UK time. 1:45 p.m. We're going to get the ECB's Muller will be speaking in Slovenia. So anything he has to say about the direction of travel for the ECB is anything that pulls the ECB back off the sidelines by the end of this year in terms of further action. 3 p.m. UK time. ISM manufacturing data drops out of the US. We had a guest on yesterday from Deutsche Bank talking about prices paid being important if you think about inflation risks out of the US. And at 3 p.m. UK construction spending at a time when we're seeing a little softness in the housing market here in the UK.
Okay, yeah.
The inflation story is going to be part of the narrative then, as you just talked about, Tom. I looked yesterday, the forecast was 2%, the target is 2%, nothing to see here. It's gone to 2.1, so there seems to be some movement in that forecast, but we're essentially expecting it to be broadly in line with target. But is there risk to the upside? I mean, Isabel Schnabel is out this morning
is there risk to the downside? That's the other concern as well, that you've actually got downside deflationary risk in the Eurozone.
Yeah, at the same time as maybe the US has inflation because Chinese goods are diverted. A lot of that seems to have been intra-Asia, though, so far, hasn't it?
Stronger currency, another factor in terms of the mix. We're at, 117? That's going to be a factor as well.
So Euro strength and the inflow of goods from China. But that deflation story that someone had flagged has yet to come through. Nope. And to your point, Isabel Schnabel saying inflation risks are currently tilted to the upside.
Yeah, we'll get an update from our team in Frankfurt. This is what they're expecting. Yes, so maybe that's not news.
End of the spectrum.
What else do you need to know this Tuesday morning? Bloomberg has learned that Revolut has kicked off a process for employees to sell their shares in the company at a $75 billion valuation. That's for the entire company. We understand the London-based firm and its staff will be able to sell as much as 20% of their stakes. The deal cements Revolut's status as one of the world's most valuable fintechs. It comes as expectations grow that the company is looking at buying a US bank in order to acquire a national banking license in America. It's interesting. The regulatory environment may be a little bit more positive for that right now. Nestlé has sacked its CEO, Laurent Fricks, after only a year in the job. This is due to an undisclosed workplace affair. The world's biggest foods company has named Philippe Navratil, who heads Nespresso, the brand at the company, as his replacement. The change extends a period of turbulence as the Swiss firm, remember, abruptly fired Fricks' predecessor last year due to poor performance. Food companies are meant to be kind of staple and boring, but no. And Russia's gas giant Gazprom has reportedly signed a legal binding agreement to build the Power of Siberia 2 gas pipeline to China via Mongolia. Russia's current pipeline to China has a design capacity of 38 billion cubic meters a year. According to the Interfax news agency, the new pipeline is set to increase annual Russian flow to China by another 10 billion cubic meters by 2027. Are these the same molecules that were going to Europe? Because we had this Yamal pipeline that came out through Russia into Europe. Are these the same molecules that are then going to be going over towards China? And if they are, is that a one-for-one? I don't think it quite is. But this obviously solves one of Russia's biggest problems, which is what do you do with the gas that was going to Europe?
Yeah. So this 50 billion cubic meters is what could come through from Siberia 2, this new pipeline they've agreed to, which is, on the analysis I've been reading this morning, about half of the amount that would have been going to Europe. So it makes up about half of that. So that's significant. This has been more than a decade in the making. Russia's been trying to get the Chinese to agree to this. There have been concerns on the Chinese side about construction costs and about the cost of the gas itself. And then you've had to have buy-in, of course, from Mongolia as well. So China has dragged its feet, but has now apparently signed on to this. So normally a significant win for Russia. You would imagine, though, very much on China's terms as we look for the details on this. When it was originally planned, these pipelines in the east and west of Siberia, it was originally set up to create competition between Europe and China for Russian gas. And, of course, that competition has adjusted, given that very little is now going to Europe. Some is still, but less. So that was the original framing of these pipelines, was to create that competition for those molecules.
Meanwhile, the Danish leadership of the European Union right now trying to make sure that we move even further away, or the European Union moves even further away from using any Russian gas. 7:14 here in London. Then coming up on the programme, Deutsche Bank joins the Stocks 50 and Stellantis is out. We'll check on those stocks at the open. Sometimes those index reshuffles can have an impact. Plus, Premier League summer spending hits a record high with US investors helping push the move. We'll discuss that later in the programme. Up next, investors pile money into gold while long maturity bonds enter into what is traditionally their worst month. There's a lot to talk about in markets. If you have questions, if you want to have your say on any of these conversations, please do. IB plus BBTV Go is the function on the Bloomberg terminal to get in touch with the team. This is Bloomberg. Welcome back. This is the opening trade. Now let's focus in on gold. It's hit a new record as traders ramp up bets that the Fed will cut rates this month. Let's get more from Bloomberg's Valerie Teitel, who's back with us this morning. And set us up for the month then, Val. We've got a lot to think about when it comes to markets.
Yes, we do. And I think the one thing that gold is telling us is maybe those deficit concerns come front, back, and center. Gold breaching new record highs up to 3,500. Year to date, it's up some 35%. Now you can blame perhaps the dovish shift from the Federal Reserve causing this precious metals boom. Remember, we saw it in silver yesterday. Or maybe you can say that the bond market jitters are causing a flight to safety when it comes to the yellow metal. But I do want to talk more about the bond market because September is such a key month for issuance, not just corporates, but also sovereign issuers. September is a massive month, especially for European syndications as well. And this comes at quite a sensitive time here, Anna. We have the French government calling a vote of no confidence for next Monday. We also had the UK's parliament here reshuffling some cabinet members. The gilt market didn't very much like that yesterday. We had those 30-year yields breach new cycle highs. So again, this test of all this issuance comes as well as these yields beginning to break out to new cycle highs across Europe. We have perhaps the issuance is getting kicked off today. Italy announced its mandate of a 7-year and 30-year syndication likely to price sometime today. So this test of government supply, bond supply, might face its first test with Italy 30-year today.
Okay. Perfect setup. Valerie Teitel joining us on all of the market action that we are watching as we get back to school. Ella Hosier's here, fixed income head of Newton Investment Management. Lots to talk about. Firstly, gold. What signal is gold sending you right now?
Well, precious metals in general have been sending this signal for some time this year. I mean, obviously, very strong performance across the board, and silver now outperforming gold actually on that ratio that a lot of metals players watch. So pretty much a signal of concerns around debasement of currencies or inflation containment and the activity of central banks going forward, particularly major central banks. There's, of course, other supply and demand factors such as sort of reserve managers acquiring more precious metals. All of these are in play, but really, if you're a Martian and came to Earth today and saw what's been happening to precious metals, what's happening to the long end of the bond curve, it's really telling you that there's concerns.
A first trade a Martian might make if he arrived here on Earth would be to go, I'm gold's looking good, sell long bonds, sell duration. Is that the trade the Martian would make?
If this Martian was a momentum player, yes, and I should be sort of screaming here.
Really getting into the weeds here.
Exactly. But as a contrarian player, I should be thinking about taking the other side. But actually, there are points where you're at such an important macro cross juncture.
Yep.
And we are exactly at one of those, and I think you can kind of see the writing on the wall. It's difficult to sort of time exactly when it plays out in tandem. But I think, personally, it has begun, and this is really the time where we're starting to take quite a bit of that right tail, if you like, on inflation risk, So, you're pricing, obviously, perfection in markets. We know why, right? So conditions economically are okay.
Yep.
Fed's about to cut more. Things are good, right? We have some more fiscal juice, the big, beautiful bill in the U.S. So what's the problem, right? More to come out of Germany. So that's why stocks love it. But on the other hand, if you look at the bond market, it's not sort of like super concerning yet because we're not out of these ranges, certainly not in U.S. 10s. But if you look at JGBs, you look at UK 30s, actually they've been leading. Those are the leaders. Germany has caught up.
Okay.
And actually what's happening with France long end is also concerning.
So these are the concerns that are clearly affecting the long end of the bond market or in some geographies. And then to Guy's point earlier, can gold and stocks continue to rise together, or are we at an inflection point in that relationship as well? Is gold telling us something about where stocks will head?
Yeah, I mean, I think bonds probably are the trigger to watch. I see the trend, certainly I see the trend in gold and precious as more structural in nature, and this reserve accumulation matters. And I do think we are in a, if the long end game is a financial repression game, which probably seems the more likely outcome with regards to the debt load we have and the interest rates we're paying, then certainly the gold trend can continue over the long run. So let's park that aside. Now, the relationship of bonds and stocks, obviously we know that correlations there have been positive since 2021, right? Since the break, when we shifted to this new regime, we would argue, the higher, slightly higher inflation regime. Then, what happens to bonds matters. So if the sell-off is orderly, as we've been seeing, and it's actually driven by sort of better growth expectations or broad, no big concerns, if you like, then it's okay. But I think if we shift in this pendulum where the sell-off becomes more nasty, which is the bit that I worry about, if you like, when I go to bed, that's a different dynamic for stocks. So I would say probably not just yet, but, how we digest this supply, how sentiment shifts now, and what happens to those inflation numbers in the next 2 to 3 months, I think will be important.
So if you're worried about bonds, if is there a trigger that you have in mind? Is it one of the many auctions that Valerie was talking about, or is that too minute a trigger?
We've seen some of those, and sort of they've caused sell-offs, even in Japan we mentioned, right? In the US we've had quite a few examples where auctions haven't been well received. So the demand just isn't there in a solid way, right? So we see the tentative signs. Triggers can be many. I try to not predict the triggers, right? I try to look at, what is the signal rather than the noise. And the signal is quite clear that there is still, at these levels, no appetite for the long end. And the risks are actually, even in Europe, there's going to be less appetite going forward. So what stops that trigger, unless you actually find an ultimate buyer at the right price, it's hard to stop that.
What does that mean? How clear and clean is the Steepner trade then, given that?
It's been for a couple of years, right? Probably one of the best Sharpe ratio trades in fixed income. So I think it's quite populated, certainly in places like the US, so I don't want to lean too much into it. But I think suffice to say is what shifts a difference in that. And I think probably growth concerns, which don't seem to be at play, or they don't seem like the high probability game. I think actually the higher risk here is this sort of fiscal supply, central bank credibility. That's what's going to save it. And I think that we're probably just at the beginning of that. So I struggle to see that play at this time.
You've noted as well that the dollar has delinked from rates. Is that the new normal?
For the dollar, yes, I think we entered that regime. We talked about this in December, sort of in our yearly piece. And, we were looking for this theme as a structural play as well. So I would argue similar to gold. It's the same story, really.
Yesterday we had a guest who said that link would re-establish itself. You don't see that happening. Instead, you see it's going to be current account deficits. They're going away. I think so. I think for the dollar, particularly, the current account deficit story is the driver, because it's been, let's think about tariffs, the closure of the current account deficit of the U.S. with the rest of the world. That's a structural story. So President Trump's right to try and tackle that.
I would never question President Trump.
If you want dollar stability, I suppose, if that's your aim, then he's right to.
I guess, if the policy goal is to close the current account deficit, I think the other side of that equation is going to be a weaker dollar, right? So if you want a weaker dollar, you're probably doing a lot of the things to achieve it. So that would be the conclusion.
I wonder what currency Martians spend in.
Martian economics. I feel like there's a book coming from Guy Johnson.
This is a whole sideshow. I feel like there's a podcast, surely.
Intergalactic economics by Guy Johnson.
How long could we extend this Martian reference? I think we could make it 2 hours.
Oh, I'm well up for that.
Should we save the viewer from that fate?
Guy Johnson coming back to us after the break with more Martian economics. Ella Hosha, thank you very much indeed, with views, of course, on how to position, what to think about in terms of the fixed income markets more broadly, the US dollar as well. Newton Investment Management with that analysis and market insights. Thank you. Coming up, we are going to bring you the latest on Xi Jinping's meeting with Vladimir Putin in Beijing, and specifically that gas pipeline deal. That is next. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, Even when we stumble. Iconic. When we get people moving. When we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Welcome back. This is the opening trade. Right, the action is not in stocks. This is what we can establish from the futures board here for Europe. So futures are pretty flat, not really telling us very much. US futures, I can tell you, also flat to negative. Nasdaq futures down 0.1%. And that's really why we've been talking about gold a lot this morning, haven't we? But asking whether we get clues about stocks from what's going on with gold, no, is the answer from Ella Hoja. But we do get clues from the bond market, she said, as to the precarious position.
The show's named the opening trade. We can maybe focus on the equity market, but actually the opening trade for the bond market is kind of right now. I know that the UK comes a little bit later, but European bonds are open and yields are higher. It's interesting that France is up by 2.6, but by no means sort of out of the pack in terms of where it stands right now. Expectations growing maybe of a French parliamentary election. That certainly seems to be the story coming out of France this morning. But yeah, European bonds are higher at the 10-year tenor, as you can see, but not by much.
OK, let's switch focus to geopolitics then, with Chinese President Xi Jinping holding bilateral talks with Russian President Vladimir Putin in Beijing. Xi welcoming Putin by calling him an old friend, highlighting the nation's close ties and a significant deal as well in terms of Russia and China signing off on a legally binding agreement to build the Power of Siberia 2 gas pipeline, significant in terms of the commodity trade between Russia and China. Let's bring in China's correspondent Min Lo, who joins us now for the latest on this. Min, talk us about the significance of this deal and what it tells us about the relationship between Russia and China. They have been pushing the Russians for this pipeline for about a decade.
Yes, it's a really, really big breakthrough. As you said, talks had been going on for years, and actually China had in the past been quite reluctant to sign on to this deal because it didn't see it as an urgent need to step up its gas purchases from Russia. It didn't want to over-rely on a single country as well. But now Gazprom, the Russian state-owned oil and gas company, has inked this deal to build the Power of Siberia 2 pipeline, which will allow it to divert a lot of the gas pipeline sales that it used to sell to Europe to China. It would allow it to recoup at least a third of those sales in the past. And it's really an economic lifeline in some ways for Gazprom, which has seen its profits plunge after the Ukraine war. And really interesting that this is coming just as Trump has been exerting this pressure on China not to buy more Russian oil. And interesting to watch what sort of repercussions this would have going forward in terms of any US-China discussion of a potential trade deal going forward.
OK, so this coming out of this relationship, these meetings between the Chinese and the Russians at this event. Now, North Korea also in attendance. And North Korea's Kim Jong-un will be at the military parade that is taking place at this conference. But India's Modi won't be there. I mean, do we read into that he wants to stay as a democratic leader? He wants to stay one step removed?
Yeah, definitely. And I mean, think about the optics of Kim Jong-un, Xi and Modi and Putin standing together. That really doesn't look good for Modi to be standing alongside some of these autocratic leaders, given that India prides itself as the world's largest democracy. Although over the weekend and on Monday, he did have these meetings with President Xi and Modi and President Putin as well. And he does seem to be leaning very closely to Putin, right, signing all these deepening ties on many different sectors. But he seems to be hedging his relations a little bit. On the one hand, he wants to, still negotiate for lower trade tariffs from the U.S. And on the other hand, while he's leaning towards some of these other countries, he's still maintaining a little bit of a distance, that strategic autonomy at play here. But for Kim Jong-un, a very different story. This is a very, very rare display of him coming onto the world stage alongside Xi and Putin. And it's really a show of unity, challenging this Western-led international order. interesting as well that Kim visited a missile factory in North Korea just ahead of this trip. He also visited a chemical materials research institution under the country's missile program, unveiled a new development plan for intercontinental ballistic missiles. It's really in defiance of both South Korea and US, which has been pressuring the country to end its nuclear program, and in some ways a snub to President Trump.
So, Moon, we've also had hand-holding, we've had ride-sharing, or actually in this case probably limo sharing. Vladimir Putin seems to have learnt a lesson from Donald Trump, you could argue. That Alaska trip, we saw Trump and Putin sharing a limo, and Putin now seems to be extending that story to Modi. Is that indicative? Is that something that we should read into this, or is this just now statecraft that everybody holds hands and gets into the same car?
Definitely a bit of statecraft at play, but strategic as well, because it allows him to have private time with Modi without a lot of aides around, right? Because he brought his presidential vehicle all the way from Russia to China and brought Modi out for a spin. It was a 15-minute ride to get from the SCO summit venue to the venue of their bilateral meeting. But the two men, according to sources, continued to sit in the car for another 45 minutes, turning it into an informal 1-hour meeting, which Modi said was excellent. They discussed everything from deepening of ties in trade, in fertilizers, in space, security, culture, and he invited Putin over to visit India as well. So yes, a lot of opportunity for the two sides to discuss things in depth, and it is also again a slap in the face for President Trump, as India's oil minister also defended its actions, saying that its buying of Russian oil is not breaking any rules as well. And interesting as well, because Russia was showcasing its own luxury limousine at a time when China typically would ferry around state leaders and political guests to the country in their own homegrown, domestically made Hongqi cars. Hongqi meaning red flag in China. But Putin, as usual, typically when he goes on overseas visit, he always brings his own presidential vehicle with him.
Okay, Min Min, thank you very much. Min Min Lo in Tianjin, talking us through all of the developments there from that Shanghai Cooperation Organization, all of the leaders in attendance and the relationships between them. Now, whilst Russia, President Putin was in attendance over at that Shanghai Cooperation Organization event, a plane carrying the European Commission President Ursula von der Leyen was disrupted by what authorities suspect was Russian signals interference. The GPS jamming incident affected the plane's navigation system as it landed in Bulgaria, but it landed safely by using alternative navigation aids. I think that means paper maps. Bloomberg's Oliver Crook is in Berlin for us. Is this action from the Kremlin? They've been asked in the past, and we've had mixed responses as to what they admit to doing in this field, Ben Oliver.
Yeah, I mean, this is sort of classically from the Russian playbook. Again, we do not know with 100% certainty that this was the Russians or that Ursula von der Leyen's plane was particularly targeted. That being said, according to the Bulgarian authorities, who have quite a bit of experience on this, they say that they, by all indications, that it was a deliberate effort by the Russians. And as you say there, Anna, they had to use, according to the Financial Times, paper maps to land this plane. I'm glad, somebody could still read paper maps. But, 85% of planes, they say, over Bulgaria are experiencing some kind of GPS jamming or some kind of interference. That being said, also according to the Financial Times, all the other sort of planes that were in the same vicinity did not experience the same experience. So again, when we think about the context of what this trip was going on, you see the pictures there, powerful images of Ursula von der Leyen walking in Poland with Donald Tusk. This was a sort of defense tour of Eastern Europe. She was visiting, ammunition factories in Bulgaria. This was all part of this idea of trying to build out defense in the context of this moment where Donald Trump is attempting to push Vladimir Putin to the table. Not clear whether or not that's actually working at this stage, but also their military build out on the eastern flank of NATO, and also, of course, the potential for security guarantees, which have been discussions about possibly, if ever there is a ceasefire and a peace in Ukraine, potentially Western troops stationed there. We should say again one more time, the broader context of all this going on is precisely what Min Min was just talking about, where you have these big sort of events where Modi is going into China for the first time in 7 years. Modi is holding hands with Putin. He's, Putin and Xi have a meeting today in which there's a readout saying that basically the basis for the future of the Russian and Chinese relationship should be these large infrastructure projects that they're working on, and we get sort of a green light on that. This is all sort of working to the detriment of the Europeans, who would have hoped to potentially exploit some of the light that exists between India and China, and certainly between Russia and China, and that is definitely not going their way. So again, once more, spectators on the sidelines of geopolitics, all of which Donald Trump makes a lot more difficult for these Europeans, their traditional ally basically not there to sort of speak with one voice with them.
And Ollie, on the energy front, we've had that news, of course, out of China that they've signed this deal around a second pipeline from Siberia shipping Russian gas into China. Meanwhile, Europe looking to close the loopholes in terms of Russian gas that continues to flow into Europe. What are they looking at doing? How realistic is that?
Yeah, so what the Europeans are already planning to do is to fully phase out Russian gas by 2027. Within 2 years, we should say that they're going to be, an incremental step next year to get that done. There are a couple carves out for Hungary and Slovakia, sort of as landlocked nations, but as we know, they're also not entirely on board with the isolation of Russia. So there's some carve-outs there. What they're looking to do, and this is under the Danish presidency, they hold the EU presidency until the end of the year, is to basically change the language around which some of this gas gets shipped in to Europe to make sure it's not coming from Russia. There is this massive pipeline, Turkstream, that goes through Turkey. And basically what the Danes are trying to propose and for the Europeans to adopt is to basically presume that any gas that goes through the Turkstream pipeline comes from Russia unless it can be explicitly proven otherwise that it does not come from there, in order to, again, try to constrict the amount of Russian gas that is coming in to the European Union. All of that being said, there are still plenty of buyers, right, for this Russian gas, as we were just talking about for the last few minutes. The Chinese now, green lighting, and they're beginning to build this pipeline from Russia into China. Plenty of buyers for Russian gas. And of course, the Europeans trying to get more and more of that gas, potentially from the United States in the form of LNG. But again, the gas diplomacy is a sort of, a major element of the discussions around Russia. We saw also the gas price in Europe falling over the last couple of weeks in the hope that there could be some kind of ceasefire. That is now turning around with some of that optimism drying up.
We'll leave it there. Ollie, great stuff. Thank you very much indeed. Welcome back. Good to see you. Ollie Crook on what is happening in Europe. Let's segment that a little bit and talk about what is happening in Spain right now. The Spanish Prime Minister, Pedro Sanchez, has committed to complete his term, even if his government's allies in Parliament reject his latest budget proposal. For more now, let's talk to Bloomberg's Rodrigo Orihuela. Why are we having problems passing the budget in Spain, and can Sanchez really survive such a failure?
So this is the most fragmented parliament Spain has seen in its modern history till at least the 30s. And learning how to navigate that has been extremely difficult. Sanchez's party has to negotiate with roughly 8 parties in parliament to pass budgets. And the problem there is that most of those are left-wing, some of them really far to the left of the socialist government. But there are also 2 pro-business ones, specifically the Catalan separatist group Junts, which has kind of found its mojo by humiliating and pushing Sanchez in every negotiation to get something for themselves. And this has made passing any kind of law very difficult. Specifically with the budget, that is even harder, because obviously some of the parties want very pro-social policies and spending plans, while the pro-government, the pro-business one doesn't. And so you have this kind of back and forth. And what Sanchez has found is that in 2024 and 2025, he was able to continue governing with the budget from 23. Now, the big issue here are 2. One is the big issues here are 2. One is that in 2017, before he became prime minister, Sanchez was very clear in criticizing his predecessor that a government has to have a budget, because a budget is the pillar of your government. And without that, you shouldn't govern and you should step down. So he said that before he was prime minister, and he has kind of changed his stance now. The second main issue is that over the last year, a lot of pressure has been building up, as some of his closest collaborators and even his wife have found themselves targeted in criminal investigations involving influence peddling, corruption, and different issues.
Now, some viewers might be thinking we're talking about France here, thinking about European governments that can't pass budgets. But the read across is limited, of course, because the backstory, the economic growth story out of Spain, is much stronger, Rodrigo. But talk to us about the possibility of a snap election in Spain. We're talking about that as a vague possibility in France, but is that a possibility in Spain?
So you're right that the economic growth gives him a certain power because there's different issues that allow him to keep on spending without having to cut spending, mainly that he has higher tax revenues now as the economy grows. Now, on the specific question you're asking, the Spanish system is slightly different from other European countries in the sense that to remove a prime minister through a confidence vote, you have to already have somebody who can replace him. So you would never have a situation where he gets kicked out and then Parliament has to come up with an heir. And that is what gives prime ministers in Spain an advantage, and why there's only been one successful case in which a prime minister was removed by a confidence vote, and that was specifically Sanchez who led that one. That's how Sanchez came to power, through a confidence vote. So that is what makes it very different. Could he call a snap election? He could. He could say, okay, look, I'm tired of this. I want to go home, or I want you guys to give me confidence. But right now, there doesn't seem to be any incentives. Going back to what I was saying about the pressure around the criminal cases, he would not have a clear path to win an election. So he would rather stay until his term ends in 27.
OK, Rodrigo, thank you very much for the update. Bloomberg's Rodrigo Orejuela joining us there with the story out of Spain. Coming up on the programme, we'll pivot toward some of the stocks that could be in focus this morning, including we're watching luxury stocks today after HSBC shifted its call on the sector. We've got that and your other stocks to watch. That's next. This is Bloomberg. Welcome back to the opening trade. Let's talk about the markets in 3 minutes. Bloomberg's Moena Coniam is here to do just that for us. Good morning to you, Moena. Let's start with FX then. In fact, we might get a little further than FX this morning because there's quite a lot going on, isn't there? Let's start with the euro. We've heard from Isabel Schnabel at the ECB talking about inflation risks. We get inflation data a little bit later out this morning. But what are you seeing in the euro that's of interest?
Well, I think what's interesting is the fact that it's really seen through a lot of these potential threats to its strength. It's still trading near 2021 levels. You've got this extreme political uncertainty in France, you know, with a possible government collapse next week. You've got the far right sort of pushing for elections. And you've also got things like the Spanish budget that you were just talking about coming into play as well. You know, there's a lot of concern there. And yet, really, we've seen it holding at these very high levels throughout. Whilst you've also, but at the same time, you've seen the longer-dated bond yields, you know, elevated. So that risk is priced in, but not in the euro. And I think that in itself is quite interesting, particularly look at compared to last year when we had the French political crisis. You know, we saw the euro sinking quite dramatically against the dollar, also against the pound, in fact. And actually it's holding up there too this time. And I think really a lot of that just comes down to the dollar weakness. And it's holding up against the pound as well, still above 86 pence. And that also signifies that it's not about the euro, it's not about sterling. It's all about the dollar weakness, which we've seen, you know, really persistent for the last 5 days. It's up a bit today as the US comes back from holiday. But again, it's been falling for the last 5 days and considerably throughout the year.
So does that continue? Like the US is kind of back to school today. Feels like there's a lot going on. You've got a lot of politics happening. You've got an awful lot of economics happening. You've got payrolls coming up later on this week. Are we in the position where dollar weakness is going to persist? If you look at euro-dollar, it doesn't feel like a euro story at all, as you say.
Yeah, and I think there are some key catalysts coming up for the dollar. I think as things stand, that expectation that the Fed is going to cut interest rates, which has been under quite a lot of pressure to do so, it's priced in. It's very highly expected. Yep. Of course, this key payrolls data this week, we've also got inflation coming up. You know, if they show a hotter inflation environment or a stronger labour market than's been expected, that could shift the picture slightly. That could make the euro and other currencies a bit more vulnerable and shift the picture for the dollar. But essentially, with that sort of macro uncertainty, lower rate environment, very likely it does seem to support the dollar weakening going forward.
Yep. What is dollar erosion doing to the gold story?
Well, we just saw gold exceed its April records. Again, April being a really interesting time because that's when all of the sort of tariff turmoil kicked off, and we saw gold ascend at the same time as well. We were seeing that dollar weakness then. It's continuing to move upwards as people move to precious metals. There is a real sort of sell the US story emerging there. But again, that could be potentially disrupted if we do see sort of weaker US economic data coming through at all, in the next couple of weeks. So I think that's really going to be the key thing to watch for the, precious metals market as well.
OK, it brings us back to the data. Of course, non-farm payrolls on Friday, inflation next Thursday, Bloomberg's Morwenna Coniam. Thank you. Let's get your stocks to watch this Tuesday then and bring in Chloe Melly. Chloe, what do you have your eye on?
Good morning, Tom. So let's definitely keep an eye on Nestle today after the CEO was dismissed for having an undisclosed workplace affair. And that's a CEO that was in place for just a year. Obviously, any big change at the top like this creates a lot of uncertainty around the direction of the company. And this could add further pressure on shares that have already been having quite a tough 2025 so far. Obviously, the reaction this morning will really depend on how the market feels about the new CEO, which was the head of Nespresso. Bloomberg Intelligence Duncan Fox said that the new CEO was potentially a positive influence on future growth, and the fact that he is young and will probably have a long tenure means also that he could provide that sort of much needed stability for Nestle. Moving on to the luxury sector, where we've got a trio of new ratings from HSBC. We have got LVMH and Kering, which owns Gucci, being upgraded to a buy, while Hermes is being cut to a hold. This is quite interesting given Hermes having acquired that status as the luxury company that is expected to be best placed to weather the storm that is facing the luxury sector. But as we can see here, Hermes has been outperforming for a while, but that performance has narrowed. Moving on to SMA Solar. SMA Solar is a company over in Germany in that solar energy space, and it has cut its guidance, issued a massive profit warning last night. So this could dent the performance, which has actually been quite resilient. The shares are up, but that guidance could dent that performance. The margins will probably remain under pressure. There's also pricing pressure that is being highlighted by analysts. So definitely one to keep an eye on today as well.
OK, Chloe, thank you very much. Chloe Melly with the latest on some of the stocks in focus. Yesterday, we saw strong performance for industrial goods and services, and that was supported by the defence space. And we were asking